Like big, condo.
What's up, guys? Good morning. Give everybody a few minutes to get here. Hope everybody's doing well. It's good to see everybody. Hope everybody had a good weekend. Let's give it just a few minutes here. Sorry for the music. Hopefully I don't get a copyright strike, but the desktop audio should have been down. So I'm not sure why you would have gotten that in the first place. At least it came up on my phone to make sure the stream was working. So what's up? How's everybody doing? Welcome to the Ivy League live stream, alright? Hit that like button. Please subscribe. We do this for free. I don't know if we had a few unsubscribe, if it was anything that I did or not. Again, listen, I got a little frustrated towards the end of the week, and I want to apologize to you guys because, this wasn't something that it was out of my control. And I'm not talking about a stock price. Bitcoin's really pulling back here, and it's pulling back past 64, which is okay. Even if we get that pullback to this 50-day, even in between the 60 to 62, if you can try to catch a bounce, we'll get into this. What I'm talking about is this 50-day coming up as the stock is pulling back and or consolidating, or goes higher and then pulls back. But anyway, so hit the like button for me. Please subscribe if you haven't done so already. It's important, okay? It really shows, it really gets me really on here to help you guys, for anybody that would like some help. All right, we had a wonderful start to the week last week. We were 6-1 Tuesday. I mean, 6 nice green trades. Again, just getting our entries. It gives you the follow through. You take your money. If you don't take your money, that's on you. We got short JP Morgan. There was a lot. But what happened towards the end of the week, I put a little risk on for SMCI. That I already considered. If I didn't get, I had to put the risk on because of the news, right? If the DOJ is coming out, and we've had these reports on SMCI. For those that don't know, the DOJ is investigating them. Oh, Visa. DOJ investigating Visa. We were short. Everybody's talking about Kathy Woods. Okay, cool. Yeah, she sold it a couple days before the announcement. But we also don't know if the Wall Street Journal reported on it, or if it was in an article that, hey, they are getting together. If the DOJ made a release statement saying they might, and then it came out a couple days later that they are. I don't know. Or she knew that they were getting together, she got the information and sold. It is what it is. I don't care. I don't think that they should not be able to trade this, that, and the third. Is it not fair? Well, life's not fair. I just don't care. It just doesn't do me any good to think that I can or cannot make money according to what politicians and or investment bankers do in the markets. To me, it doesn't make a difference. Find opportunity, take it, you get paid, take your money. All right? Sell spreads, right? Sell spreads. But anyway, back to the point. We had a really good week, and what happened was I had some trouble with my platform. Let's use Amazon for example. I was long in the morning and then switched short. But my long 21-cent entry, and I think we got 31 cents, right? We got that extension off the low here on Amazon. And then what I do is, the spreads were tight, so I threw out a limit order, and I go back to, my order gets placed, I'm filled, and I try to get into my limit order, which usually will show up as saved orders, and it'll be in underneath in the top left, and it wasn't there, so I had to log out. But it happened to me twice. So I was like, it was kind of like out of hand things that had happened that kind of, it didn't really mess me up, because I did put on, we did say, hey, Amazon's sitting here for X amount of time here, and we're not making any progress, and we end up taking this short here. So on this first dip down here, we got long. And this pullback to the 9 EMA and even 15-minute trade line to that pre-market low, right up into this, you can see that line that was there. That was our first target. I couldn't even take my first profit, and that was a 50%. I could have taken half of that off, and I was fine. I could have waited this out a little bit. Now either I have insurance for the downside, which by this time, let's see, even down here, 5, 10, 15, 20, 25, 30, 35, 40. You tell me if you sit and watch something for about an hour and you are still underneath a VWAP and you try to get up above it, you put in a, it's just like everything here, including time, there was just everything about it. So we went short, right? But I had some platform issues, and then GameStop and SMCI were really the ones that were, just I put the trade on. If it worked, it worked. It didn't, then it was a small risk to reward. Understanding the volatility on that was at least 50 to 75%. That's why it's a small position. And if it works, and it gives you the extension, you can add to it, or you can just take your money and move on to the next. So a really, really, really good start to the week. I got frustrated by the end of the week. Was doing dumb stuff. But again, SMCI and GameStop, those two trades were trades that I just wanted to put some risk on. And I was okay with losing the money. And I just kept getting frustrated because there were trades that were losers that shouldn't have been, right? I shouldn't have had to log out, log back in to be able to take a first piece of profit because the platform is not, is distorted after getting filled on an order. So what we talked about yesterday was if it happens again, because I feel like I assume that it might. I don't know if they were making any changes. It may not. But if it happens again, I'm just going to go right to the top where it says orders, and I can go to the order that I put in. See, that's the thing is, I was trying to put out a limit order already for a profit, so I didn't even have to really worry about it. And I think the order, I think we did talk about it yesterday, where I can go into the actual order box, or under where it says orders, and I can mess with it through there. So anyway, let's have a great week. All right, let's all have a wonderful week. I'll probably just be trading the morning session. Let's go see what type of news we have. Again, guys, please, I need you guys to subscribe. I need your help. Let's get this channel to 1,000 subscribers. I know we can do it. All I ask is for you guys to hit the like button, subscribe, and let's make some money. This market's opening up right now. The markets are opening up. All right, so there's plenty of opportunity out here. All right, you have some rumors here with this strike coming up. Okay, you have some rumors with this strike coming up. Let's see here. Boom. So here we go. Where are we? Right here. And let me know down below, how was your weekend? Let's all give a send our condolences and send a prayer out to everyone in Tampa, because my grandmother's there. I still haven't heard back from her yet. So everyone that's been devastated with this hurricane, it's pretty bad. I don't know if anyone has seen the pictures or really know what's going on, but it's something you should check out. And if you can send them help, find a local, find somewhere that you can donate and try to help these people, because it's really something. So I know I seen on here earlier something about it, but anyway, all right, so I just want to get into some of the news and some of the things that we have going on this morning. Let's go ahead and jump into the overall markets. I don't know why that keeps popping up. So we have this. All right, let's go into the S&Ps. So we are pulling back, and I will say this, this could be a consolidation zone that we're putting in here. But if this area gives up, guys, it's kind of, to me, It's just showing like the market is not in a hurry to move off of that Fed day. And anytime that we've had this, it's shown us it was just a matter of time before we took back the Fed day and even pulled back even further. Again, listen, I'm not saying we're going to, but I'm just going to be watching this level here. This is a major level at 570. All right, watch 570. Make sure you have 570 on your list. And, you know, so far 570 is support. All right, so far 570 is our support. You can see here, this is your AKA, whether you want to call it a double top, triple top. To me, this would be 1, 2, right? 3, try to roll over. It tried to extend, it broke out, this which is your Fed day. And you came in with a gap up. You gapped up, pulled it back, you held it. Okay, cool. Right? Okay, cool. So 570, if we give up 570, I am kind of I am wondering if we are going to start to retrace 565 and get back down into this zone, but I think it goes as follows. Watch your trade line. If you start to notice that, you know, we're not extending off of it, or we cannot extend off of this 570 level, I would look to start. We made our first lower close towards the end of the week. If we bring up this weekly candle, those tails are really, it's another tail being put in. But this here, as you can see, we closed here, right? We rally, pulled it back, you know, bounced, and then pulled it back. Like, this was, to me, this was a key, you know, if we would have closed up above 572, but the fact that we broke below 572 and we closed below Thursday's low, to me, it's a bit concerning. So there's a lot to digest right now. All right, there's a lot to digest, but still, you know, I just think volatility is going to start to ramp up. So make sure you're aware. All right, and be careful. And listen, let's talk about what's really going on. And I want to get into it because there's so much, but this is the more important thing in my opinion. Make sure you're keeping an eye out for where money is being taken out of, because it will more than likely be taken into Chinese names. We talked about it last week that Baba, JD, Baidu, Kweb, you need to put the position on and not be scared and let it ride. All right, China is having a COVID-like moment. All right, another gap up. Here's another gap up. Another gap up. All right, so I'm shooting my shot. I don't think it's too late. I think institutions are going to run this higher, and I'm going to shoot my shot, guys. So if you guys want to be on it with me, that's completely up to you. But you have to understand what's going on. All right, China is trying to. They're providing more stimulus, and they're going big. All right, so you can look at names like Kweb. Here, let me pull this up. All right, for those that don't know. All right, for those that don't know, the first thing I need to tell you guys is that they do have a holiday the 1st of October. I'm not even going to go into that. China's doing stimulus. I'm just going to keep it at that. All right. If you guys need to fish for yourself and look up how much, what exactly they're doing, they're easing capital requirements. Okay. They are doing about, I think it was 800 and some billion in US dollars. All right. So it was just, it's just shy of $1 trillion. All right. So here's what I'm going to do. All right, I'm going to give you guys the levels so quickly, like Trump, so quickly. Just the greatest, isn't he? Just the greatest. Not him, but, stuff that he says. All right, so the S&Ps, 570. All right, it's a major level. That's why I have it on a double there. So 570, we get this. If we can bounce off of it, you have to see if we can or cannot get above 572. So 570. 572. Sure. We can use Friday and Thursday's pivot low. Thursday's Thursday's low, and Friday's double bottom low. All right, that was also a support area pre-market as well. So we are below that. So let's see, does 571 become resistance? All right. Chances are this has been holding. This is still a higher low. If 570 breaks and we get extension further to the downside, 569 to 568 is the level I'm watching, which is taking us right back to where? The Fed high. Fed day high where we cut rates. So I'm going to put this right here for today. All right. Now, if you get a bounce up to pre-market lows that you cannot get through, which prior resistance, you tried to hold it, couldn't do it. We broke it. Look for a 571 entry. That's just under 0.5%. Okay, that's just under 0.5%. Right now, why is this happening? I think valuations are stretched, honestly. And you just had China talk about the stimulus that I just told you about that they're doing. So I think you're going to start seeing money leave these highs and go into BABA. Let's pull it up. Let's do it. Let's get right into it. And we're going to have we're going to have some of the market movers here in just a minute. So look at this daily chart. We traded this short. We went long. Notice we were not getting any extensions that were putting in, a small pullback and putting in a higher low. We could not get above VWAP. Just everything about this trade. Once we got long, you could have got in our entry down at that area down here at, what is it, 189. You guys know the level because I already went through it. But these lows right here, all right, right here. That first pullback, we got long. We were aiming back for this 191 level. You could not get above VWAP. If you were with us, it sat there for an hour and could not get off of that level, and it could not get above VWAP. Once it started dragging that longer term time frame trade line down through VWAP and started making that longer term VWAP resistance, right? So we just got short. We said the hell with it. It is what it is, But that was a 20-cent trade to 30 cents. That's 50% on your first take. Even if you just take it on the extension and you get 35 to 45%, you can at least take the other half off and say, hey, I've made some money. And that's not counting all the trades we had at the beginning of the week. So Amazon, this was a setup. We talked about this was a failed high. All right, this is a failed high here. We could not make 190 support. We are looking for that pullback into 190. You held it Thursday. You broke it Friday. Now I'm curious, do we bounce back into 190, which we already, for the most part, made this area resistance Friday, right? We already kind of retested it, but you haven't tested it on like a 15-minute time frame. You haven't really tested it in a longer time, and you're already below this prior resistance zone here. You've broken this morning. What is this? Here's my point. Outside of all the bullshit that I'm talking right now, excuse my language, I'm sorry, but this is money being taken out and profits being taken, and where is it going? Where is it going? Okay, that's the question. Right here. This money has to come from somewhere. All right? This money has to come from somewhere. NVIDIA, this was a really, really nice long that could have taken place. But nope, guess what? You have every reason outside of China's stimulus package, trade shutting down, possible wars. They're like, we don't even need to be here. The thing is NVIDIA is going to hold up pretty well because of all these moving averages. Again, we got to get into moving averages or levels and stuff, so I do apologize. I just wanted to drill into whoever's listening the idea that you need to watch where the money is coming out of and where it's going. Where is the money moving? What's going on? Okay? What's up, Ty? I'm sorry, but I just seen your comment. Good morning to you, bro. Hope you had a good weekend. All right, so understand really what's going on. I swear to God, you guys don't even know. I'm buying some leaps. I'm going to be taking advantage of this. All right, I'm going to be taking advantage of it. And it's clear to me that institutions are going to be doing the same. I want you guys to understand two things. They go on the holiday 1st of October. Okay, China goes on the holiday the 1st of October. Second, any laws can be changed and anything can be said or done by the Chinese Communist Party in the middle of the night, and there's nothing you and I or anyone else can do about it that could send these stocks down 30, 40, 50% in just a day or two. All right, a CEO could come up missing. It's happened before. Why do you think this space is uninvestable? I talk about it all the time. So they're trying to bring back, in my opinion, they're trying to bring back some sort of stability. They're trying to bring back some money into their markets. Listen, be careful. I'm telling you guys right now, be careful. Be careful. It's the last time I'm going to say it. Be careful. All right? They may not mean well. They could take this right back quicker than they put it on. Which would mean what? You weren't able to take your money. Look at this volume coming in on K-Web. This thing is like 60% short too, by the way. All right, 60% of this, at least from last week. Huge short interest. So just be on your P's and Q's. Like, just understand what's going on. They have stimulus. You have to, institutions are putting money to work. You put money to work. I don't think they're going to mess this up. It's not their intention to make it worse on themselves. All right, but if something happens, I'm just letting you know an idea of some of the things that could happen and why this area of the market is still at its lows. All right, because you cannot trust what they do and don't do, and change laws in the middle of the night, or go ahead and use this to raise money to fund it to take over Taiwan. I don't know. I'm just saying they could. There's a risk here, but I'm putting it on. All right, and I'm going to be okay in knowing that I'm not going to over position and just shoot for the stars and just put all of my entire net worth in the one sector, especially the Chinese Communist Party sector. All right, but I will have capital in this. I will be taking advantage of it. All right. All right, so let's go through everything, guys. So I'm sorry for the rant. Please subscribe, guys. Please, I need your guys' help. Let's go. Can we get to 500? I know we can. I apologize. Things got a little frustrating towards the end of the week. All right, because I'm seriously on my last. Tell a friend. Just share the stream. Do whatever you can do to help. I know I need to get better at doing this. So I gave you guys the levels for the SPY. We're watching 570. All right, we're watching 570s. What I'm going to do here is put this. I'm going to be watching this. So I'm going to put a square here for the pre-market low. All right, today. Let me get rid of this. What time is it? It's 8:21. I need to hurry up. I need to watch. This is going to be my this is going to be, let's see here. We're just sitting here, which is odd. It's so odd. Yeah, I'm going to do that. Alright, guys. So this pre-market low right there, 571 to 570.68. I'm going to put that there. And I'm going to use that for my short and possible short entry. All right. If I go to this chart, can you guys see this okay? Can you guys let me know in chat? Can you guys see this okay? Just let me know if you guys can see this chart. If not, I'm going to go to the other one. Alright, so it looks like SPY's trying to hold 570 here. You're putting in an invert, literally an inverse head and shoulders. Alright, so the Qs, it's kind of the same thing. And if you look at the Qs, you're putting in a higher low. Not necessarily a higher low. To me, this is a W pattern that we had during COVID. At least that's the last one that I can remember. And, you know, as long the Qs are lagging the overall markets, okay? You have to keep an eye on this 485, right? You want to be able to consolidate here and attempt to trade higher. And look, it looks like we're trying to break 485 right now. All right, looks like we're trying to break it right now. Damn it. Oh, my shot a minute. That sucks because honestly, you guys, I was really hoping we would see this hold, which is still intact, okay? Which is this previous high here at 485. We can look for that to hold. Let's make sure. And we have no major moving averages either. So it's going to be like today, if it's going to be a little bit hard for the markets to really extend if NVIDIA and so a lot of these semiconductor names are down, Amazon down. All right, it's going to be a little hard to just think we're going to extend higher. So for the QQQ, watching this area right here. All right, we have it labeled green. It was our buy zone last Thursday and Friday. Or not necessarily Friday, but last Thursday. You put in a nice double bottom there. You're regaining it today. Moves to the upside, you know, I would keep an eye on 486. And if you get back above 486, you know, then from there it's, you know, pre-market highs. And if you start making progress, then you look for 489, 490. Okay, but I, for one, am going to just like, we're not above 486 yet on this on the QQQ. So if you're bullish, you really want to see the Qs get above 486. Like NVIDIA, I thought NVIDIA was really really sitting ripe for a long, a little pullback, but it's just like, it feels like money's going to be taken out either way. And these things are about to be really in the gutter as far as the indicators. All right. So we'll keep our eye on 485 on the Qs. Let's look for a move that, you know, let's see if we can extend through pre-market highs. All right, let's go to the Dow. All right, sorry about that. So the Dow is holding previous highs. All right, we talked about this last week. Now you've pulled back and you're trying to hold 422. That's a nice setup right there. All right, just to me, it's not a good look. Here we go. The IWM 220. Look at that. Look at that 220, guys. Now that is a beautiful, if we can get back up here and reject this zone, this would be a nice setup, in my opinion. right? If you reject that zone right there again, or if you reclaim it, whichever. You know, again, like I said, we were to an extent oversold, but you know, this idea of the Chinese markets opening up, it's like, where are you going to get capital from? Well, a lot of your portfolio is at all-time highs. You're going to have to take from it. All right? You're going to have to take from it. It's going to have to come from somewhere. So, all right. Sorry to bore you guys to death. It's a nice another W pattern there. All right, let's go see some of the movers this morning. Let me know how you're doing in chat. How's everybody doing today? How's everybody doing this morning? Let's see here. All right. All right. So I did see Neo. This is funny. This is here because I did see Neo. So if you don't go to Google Trends, you should use it. That was a top trender today, which we're going to look at. So U.S. listed shares surged more than 13%. After Neo announced it will receive a cash injection of 13.3 billion won for its Neo China strategic investors, will provide 3.3 billion of that injection, with the rest coming from Neo Incorporated. The transactions, which are expected to be completed by the end of this year, will reduce Neo's stake in Neo China, to 88.3%, down from 92.1%. All right. All right, Stellantis, they've trimmed their full-year outlook, guys. Here's another one. So it looks like the auto industry right now, electrical vehicle industries, shares plunged more than 13% after the automaker trimmed its full-year outlook, citing the deterioration of global industry backdrop. Ford and GM were also lower in sympathy. They've also lowered full-year guidance, as everyone should. Not everyone, but in that area. All right, because here's the thing. Remember, all right? Remember, I was asked this question: would I buy Ford? Would I buy GM? All right, I said I would not, because compared to 2020, 2022, car prices, okay, were extended. What is it? LU? I can, yes. Just hit the like button. That's all we ask, gang. That's it. I said that you were facing some headwinds because in the auto industry, everyone had cash, free cash from the government, right? They also, cars were able to be sold more than they were worth, okay, because of quote unquote, there was a chip shortage, which was a bunch of bullshit. Don't get me wrong, there was, but it wasn't like there wasn't cars to be sold. They used that, and even used cars it was just we're having a little trouble. We have it on the lot, but we're going to use future possible orders that may not be here as an excuse to charge you more, is what I'm getting at. It's pretty much what they did. All right. If you went and bought a new vehicle or attempted to, depending on when you did it, you got your vehicle at the end of the day. But so like I said, like the Lightnings, they were stopped not just because of chip shortage, because they weren't sure if they were going to be able to be sold or not. So anyway, so those headwinds aren't looking good for growth, right? You can't say in 2022, just 2 years ago, man, our outlook's great, right? We're able to charge more. Everybody's got money. Credit's good. You know, interest rates are low. Just everything is working for this industry right now. We have some nice growth. You don't have that no more. People don't have money. There's an abundance of cars. Cars prices are down. You can't charge a premium like you were back then. So things are not what they were back then. So the earnings are going to be a lot less than was expected, or a lot less than what they were then. So let alone growth, right? So there is no growth in this field. You said LU. What is it? LU. Sure it's not LI. LU. Oh, nice. Lufax Holdings. Okay. I'm going to write this down. Yeah, we'll take a look at it. LU. I don't know anything about them, obviously. But yeah, I'm going to be digging into these this industry here, Ty, for sure. I got to get my shit going here. Oh my gosh, it froze up. I mean, what do you know what this company does? Yeah, I would like to know what they do. I have this. I actually have LU written down because it's like a lot of traders are talking about this. Like this is already all over message boards and it's trending. I can't even zoom in. It's froze up on me. Okay, let's go here. It's a nice, beautiful extension there. That's a nice breakout with the moving averages. I don't know what the float is on this, if it's short or not. There's a small gap fill here at 388 to 402, and we are at 375 right now. And look, you just rejected at 387 pre-market this morning, and 388 is your gap fill. So I would watch this little gap here, and it's like an area that you could consider support. But I would call that the support level, which was prior resistance. 310. Oh my God. I would use $3. Oh my gosh. Come on, man. I do not want to spend time with this thing. Or just, not that I don't want to spend time with the stock. It's just doing this. Yeah, so like 310 to $3. All right, so that, and I'm looking for an extension move back to $6. That's what I'm looking for. That's what I want to see. I want to see us pull back. Have a day where we can possibly pull back, which we may not get. You gotta get through. She just said everyone's tired of petty, destructive politics. So why are you being destructive? Like, I just, ever since 9/11, politics haven't been the same. And I'm sorry, I know every morning it gets to me. I gotta turn the TV off or something. 544, 545. All right, there's like this little area in here. All right, again, I would refer you back to the gap fill. I would use this gap fill here as a possible pullback zone because you saw it this morning pull back right at the gap. All right, you've seen it pull back right at the gap there. Come on, Gina Raimondo's. Oh my God, don't even get me started on her. Watch, you're gonna see what's her name go off on her, I'm sure. Right there. There's your gap. There's your gap. All right. crazy when your mom asks you, please don't do it. That's so nasty. Don't do it. Politics is disgusting. No, Mom. I want to be disgusting. I want to be dirty. I want to be ignorant. It's crazy. But if we could have a normal American in that damn office, I think we'd be okay. That's what I want. I just want somebody who's a normal American, who isn't complicated, doesn't try to overstep their place, and knows their role. Okay. So that's what I would do. I'd watch for that gap fill. You get any pullbacks? I doubt you'll get 315, but if you get 315, look for a bounce. Let's talk about GameStop really quickly. GameStop's still holding the 50-day. I gotta hurry up and get my damn watch list. All right. So GameStop, come on. All right. So again, sorry for all that. Look, this thing is or was stuck. See, she's not worried about whether or not the people get paid, but making sure that the strike is as short as possible. Please, just make the strike as short as possible. I don't care what happens. Just do not let inflation and job losses pick up, please. That's all I do. I don't give a fuck about your pay. I just care about how people look at me and my administration. It's crazy. All right. Damn. And put also, Ty, put 495 up there. 495 also. I didn't see it before, but 495 is a little area that I would be watching as well. That'd probably be your at least a major profit target area. 495, especially if you start getting into the gap and holding it, then you know where you're going, right? Your destination will be $5 and potentially $6 if you break through that 5 mark, which I can see it happening. I'll probably buy this with you if I could get it a little lower. The thing is, I doubt we're going to get it lower. You can wish and hope, but I'm telling you right now, just like 2020, if you missed 2020, don't let this one come and go and say you missed it too. All right? This is your get out of jail free card to do something good for yourself, but it's the Chinese Communist Party. Don't forget that. So if they change up a law or do something stupid to say, like, what I'm getting at is they could do all this, right? They could do this stimulus, have everybody go into capital markets, and then what? Boom. Oh, we're going to take back our laws. We're going to take this, but we're going to do something. And the point of them doing it was to steal money from everyone. They've done it before. Well, not necessarily the Chinese Communist Party itself, but Chinese companies have known to. Because, again, the Chinese Communist Party won't let U.S. regulators come in and audit the companies that trade and are enlisted here at the NASDAQ. All right, which is a shame. There's no reason why they shouldn't say, hey, let us make sure that what you report is what you report. That's it. We don't even give a shit to know what y'all are doing, because y'all actually ain't doing shit. Everyone talks about this innovation that they quote unquote have, but I think they seem to be mistaken what's really going on and who the fuck we really are. Hit the like button. Subscribe. Alright? Because I'm going to tell you right now, I'm not worried about them. Am I worried about, them taking Taiwan and then some kids and some young adults, and adults have to, go fight for another country? It is what it is. It's China knows they do something. There's an article for it, unprovoked. It is what it is. The only thing that I feel indifferent on is that Ukraine war. I feel as though that is Joe and Biden's partial doing. Alright, so, and I will always feel that way because, there's proof of it. Okay, Amazon. Alright, Amazon. So I told you guys last week we got short. I got long, then I got short. Unfortunately, had to take a small loss on that long because I was not able to take the near 50% gain that it gave me off the low there, because of my broker. AMZN. Oh my god. She's such a lie. They act like you can't do this with Trump, which is bullshit. He is...
Kamala Harris, right? You will be able to talk to her and her team, reason with her, lay out your issues, and you will have somebody who is not erratic.
I cannot wait till this shit is over. And I hope the American people do what's right. Why? Every morning do I get stuck here with politics? I fucking hate CNBC. I hate the TV. Here's the thing. Like, and everybody keeps talking this tariff shit, guys. You guys gotta understand. Alright? If you didn't hear what he said, and you're out talking about just tariffing everything, that's not what the man said. So let's start from there. This isn't just we're going to tariff everything and everyone. No, it's if you aren't working with us and you aren't helping us help you and just making life easier, then guess what? It's us against you. Fact. Or prime example, Chinese. China wants to throw some balloons and they want to just continue to barge ships and do what they do. Well, guess what, China? Sorry, we're going to put some tariffs on you. And it's going to hurt them a hell of a lot more than it's going to hurt us. And Biden and them have already done it, been doing it, and actually just raised some more tariffs. Alright. So. Alright. So, Amazon. So, I was watching Amazon here. I had to turn it down. Alright. I do apologize. Alright, so let's see here if we get some support at 185 on Amazon. Amazon failed to break down. That was kind of my target zone. This, in my opinion, really this is your major support zone down here at 170. So I'm going to put down 170. Alright, I'll make that a 2. This is, you have 2 minor levels here on Amazon. Okay, but I don't want this unless it's back up to 190, 190.50. Okay, and I also think that, you know, this is tough, man, but here's the lie. All right, manufacturing's been negative, and it's been negative for a long time. She's already lying. Sky high. Hold on, see, this is where it gets so funny.
The pandemic, it was 3 points.
But we've discussed this. You can't discount the Trump administration. You can't say the economy was great during the Trump administration
until the pandemic.
If you somehow exclude the pandemic.
Okay.
Well, let's call it for what it is. You actually can. And this is where he's wrong. Because he didn't have control of the states that shut themselves down. Some states shut down, some states did not. So yes. And guess what? They rebounded.
And all the spending is what really exacerbated that situation. Just we've seen both presidents.
None of those things were related to the pandemic. It's just.
I just don't think you can say it's going to immediately be a recession when that didn't happen the first time.
Secretary, Madam Secretary.
I would just say 4 years ago, we were saying, could there be a soft landing? It's been a featherbed landing. Inflation's on its way down. Manufacturing is up. By the way, you know, deficits exploded under Trump.
Manufacturing's been flat for 2 years.
And now,
It's
there is more new manufacturing construction in this country now than at any time since World War II. It's a fact. Manufacturing jobs are on the rise, wages are on the rise, prices are coming down, deficits are high but headed in the right direction, and tariffs will hurt this economy, hurt working people, raise prices, and I worry tip us into a recession.
That's an assumption. Oh, and guess what? We might need
Gina
a
Raimondo, I want to
recession.
thank you.
That might be the pullback for prices we actually need that we didn't get. Because Powell won't do it. Like that's a bad thing, Regina. You don't think that a small little 6 month, a year pullback wouldn't help somebody in a 10-year, 15-year run? Something that the big government won't do? We just can't let that happen. We just got to keep pushing forward. Keep pushing forward. Keep pushing generation after generation out and start paying. We're going to soon get to a point where you're paying $1 million for a piece of shit home that's 150 years old on a half an acre lot. And you'll be there in the next 15 to 20 years. That's pretty crazy. And guess what helps that? Guess what helps us not get there? Small pullbacks. Quote unquote recessions. Okay? Know about it. You're in the markets. Right? Some people out there aren't in the markets. They don't care to know. They're just happy with collecting a check and going on with their lives, not understanding things could go downhill. That check could not be there. Right? They can cut them off at any minute. What do? You just know when you're prepared. All right? You know when you're prepared. And where there's a down market, there's an up market. All right? Wow, so we might actually get a pullback in inflation, according to her. Holy shit. All right, I gotta hurry up. Again, guys, I apologize. This is why I can't. I might just have to start turning the TV off because listen. To me, you know what it comes down to. I don't care about a recession. I don't care about not having a recession. I don't care about a tariff. I don't care about inflation. I don't give a shit about the economy. You know what I care about? I care about trust. And there's only one person that I have more trust in than I do the others. And what is that trust? The trust to not overstep their boundaries. And that is Donald Trump. That's all we have. We don't have RFK. We have Trump. Sure, do I think a lot of their stuff they're going to do, they'll overstep? He's already talking about 10%, wanting to bring it back down to 10% for credit cards. I don't like that idea. Could you do 18? Could you do 17 and a half? Okay. I've talked about it on here, but I do not trust Joe Biden as far as I could throw him. I do not trust Regina. I do not trust Kamala. All right. I do not trust them at all whatsoever, and they have shown us nothing but laziness, and they've showed us a lot over the course of the 4 years. We still don't know. We still haven't seen, who's going to get in trouble for that bag of cocaine on the Senate floor, or not the Senate floor, but in the White House. Let's talk about the two gay senators or whoever they were, filming gay butt sex at on state grounds, on federal grounds. All right. The thing is, it's nothing but a party for them in there. All they have BlackRock on their back. They have Larry Fink. All right. I think you're going to see the 4 years. They've already talked about doing a lot of things, but took it back. Why was he so late on the border? I'll be honest with you. I don't care about the border. I do, but it's not a top priority. My top priority is a government that is not going to overthrow their position on the American people, that do not have intentions or personal things going on for their job. All right, with money, all this, I'm good. I've been here my whole life. I don't know about you, but I've been here my whole life. And what we went through for those 4 years from 2016 to 2020 is something I didn't ever think we would ever be able to get to. We didn't have the government just every day talking about, we're assault rifle ban, or we can have AR-15s and we can have F-16s, but you can't. Like this idea that the public has no responsibility. This idea that the Democratic Party has to cradle you from birth to death. this idea that we demonize capitalism and think that because a company that creates money just deserves to be taxed to death. They get accused of price gouging if there was price gouging, wouldn't you think that they would be bringing that a printout of that balance sheet? See, guys, it's right here. I have it in my hand. Oh, you know damn well they'd be doing it. Raising taxes. Kamala was the tying vote on taxing you for $600, and it wasn't about the tax for them. You know what that's about? How can we inch our way closer into your lives and know who you are, what you do? This is the government versus the people. And this is where 9/11 and Obama really started to get us there with Big Brother. And it's not okay. It's not okay. And what do? They use gay rights and abortion to hang it over your head to just say, don't look at that, but look at this. This is what we're doing. These two things right here. Yeah, we got you. Right? We're going to hang these over your head. We're going to give you this. But I'm taking your freedom. I'm taking your privacy. All right? The government doesn't trust you, the citizen. They don't. Or they wouldn't be filing, your local officials wouldn't be filing every week that you can't have more than 8 rounds in your rifle. Like, what are we doing? I'm telling you, look what's going on around you. This president will not pick up the phone to try to come to a deal between Russia and Ukraine. He is okay with letting young men and women and all these other people die in gruesome ways, all because Russia decided to do it. So because Russia decided to do this, I don't care if it was Russia or Ukraine. You get up and you attempt to come to a deal, but he can't even walk, guys. And yet they lied to your face for 4 years. Like, this is what I get at every day, and I'm sorry. But I have to do this to CNBC. For 4 years, Joe Biden's fine. No, he hasn't been fined since 2018, guys. He hasn't been fined for a long time. All right, Alzheimer's has slowly been kicking in, and now it's here, and it's here whipping his ass. All right, if you haven't seen him in person, if you haven't been around him, you either haven't been around him or you just fail to recognize it. All right, but the point is you saw them lie to your face. What other things have they lied to your face about? That's what Obama did for 8 years. When it came to important things. It was okay for Hillary to do this and that with her phone. It was okay for them to lie to your face. Why did these 6 Marines get killed on the top of the building? Oh, it was a picture of Muhammad. Wait, what? Over a painting of Muhammad? That was, I don't even know why I don't know what they were thinking. Okay? Like, that's the point. That's all. That's the point. If you want to ask me why I do not trust them, you got it right there. You got it right there. And the point too is they don't have their priorities where they should be. They don't work. It's a party and a game for them. Let's go after the corporations, bring in revenue. Go after the corporations, bring in revenue. Go after the corporations and the people's rights, bring in revenue. It's fucking ridiculous. And yet they come up here and say, he's just this person who you can't talk to, you can't do this, that, then that ain't nothing but the furthest thing from the truth. So what are they doing? Lying again. It's sad. Biggest fentanyl, heroin crisis, the number one cause of death for young people has been under Obama and Biden. The biggest drug addiction, biggest waves of drug addiction that you've seen in the United States have been under Those two administrations. And why is that? Ask yourself why. It's not because it's people just want to have fun. No, people give the fuck up. That's why. People give up. People give up. And you're seeing it. You've seen it with Obama. You've seen the wave start with Obama. And what's it doing? It's creeping right back into the inner cities right as we speak. And it's right back to being the number one topic. I'm seeing it just on YouTube. There's a reason for that. There's a reason for that. You think they would care? No, he's just worried about getting Zelensky more army ammunition. He ain't worrying about picking up the phone. He doesn't even know what the fuck a phone is. What about Kamala? Kamala talks all that shit. Well, Kamala, buck the fuck up and pick up the phone and figure out, at least show the American people you're going to go to Russia. You're going to go to Ukraine and at least make an attempt. Make an attempt to help solve that war or do something about it for both of them. But you won't, because you get to take our money and split it up with you and your friends for more war. You don't care. They simply don't give a shit. And their excuse is, nope, now we got to raise tax. You actually don't even have to raise taxes. You could lower taxes. If you could solve those couple of wars, I'm telling you right now. I don't know, man. Savings rates down. You didn't have a savings rate for quite some time. And you had an expansion in the savings rate, new home buying, younger people being able to afford life and actually start a family and be able to buy a home. You didn't see that under Biden. You didn't see that under Obama. You didn't see that under George Bush. You saw that under Bill Clinton and Donald J. Trump. And the thing is, he doesn't overstep his throne. Should the government be able to tell you whether you can or cannot do something? No. Should they be able to provide contraceptives? Yes, they should. All right, as a nation, they should. But again, I've been in the law system. I've been in the criminal system. I'm not a criminal, but I know how the criminal system works, and they're right. It is not their job to tell you or me or anyone else here that they can or cannot have an abortion. It's just not even in their jurisdiction to be able to speak on it. That's what people don't understand. And I fully agree with it. They're right. No, the rulings were right. It should be up to the states. It shouldn't even be up to the states, even to be honest with you. But again, if you're talking law, it's a tough subject. It's a tough subject. And it's not it's not tough in the matter of, is it your choice or not? Because it is your choice. It is you and that spouse or whomever it is his choice to keep or not keep, or to have contraceptives or not. All right. Sorry for the rant. I really feel serious about this, and I just think it's so bad that just for anybody to just not see what's so in front of them. It's just, I don't know, man. I just hope people do the right thing, and I hope people show up and that they aren't stupid enough to just fall for it. He showed you what he did the first time. Joe Biden has had 3 rounds. We saw those 3 rounds. And what were they filled with? Middle Eastern, Syria, Afghan, Iraq wars. Okay? High drug addiction, high flow fentanyl, heroin. That's what we get with Biden. That's what we've gotten for the 12 years he's been in office. All right? People give up. They give up. They don't do it for fun. But I'm scared, Regina, I'm scared we're going to be in a recession, but yet inflation's down. It's not down. Why is inflation not down? Because you won't give the states the pullback that they need. That's them admitting it. No, we just want to keep going and going and going. No, sometimes you need to slow down a little bit. All right? Because this is where you start getting generation after generation not being able to keep up. Small businesses not being able to keep up. They don't make enough revenue to pay the people. So, I don't know. All right, Microsoft looks like it's hanging on okay this morning. Let's go here. So we have Lee Auto. Let's bring up Lee Auto. I know I just went back and forth there. I'm gonna tomorrow and this week I'm turning the TV off because I'm so tired of seeing politics on my television. It just makes me sick. It makes me so sick to think that anything that they have done or stand for is, but she is big government, so she thinks it's okay. She puts herself, she thinks, just like Kamala said, oh, we're going to step in and see what we can do when it comes to Brazil. Wait, Kamala, that ain't your fucking job. Until Brazil's got something major going, that ain't our job. This is the big government I'm talking about. Oh, we're going to go see the elections. We're going to see what happened. What do you mean we? Motherfucker, who are you? You ain't doing shit. That ain't your job. All right, so here we go. So Microsoft, here's a daily chart, flat top resistance. You tried to hold here. This could be a nice little trade here. We have to watch the overall markets. So right now, like this bounce back on the SPY, we're looking for that bounce back to 571. The Qs. Yeah, that the Qs would be up there at 2. What is that? 2020? Yeah, 2020. On the NASDAQ futures. Alright, yeah, so we'll watch and see if we get that rejection. What I think's going to happen, you guys, is I think we just go run back and test. We may end up running back to test 488. We might. You know, just... So we're holding there. Let me pull this up for the daily chart. Because NVIDIA, which was one of my top watches today, coming into today, it broke its earnings gap, right? It gapped up, or, you know, it pulled back on earnings and it came in with a gap up. And then that gap down broke this morning when we came in. So, all right, so here we go. Here's our 100-day moving average. So if we keep an eye on Microsoft, we have a mild level right here at like, what is this? This is, I mean, what is that, 425? Yeah, and the 20-day moving average is right there. All right, yeah, guys. So I'm going to be watching Microsoft up here at this 100-day moving average. This is a pretty nice setup here. All right, 430, 429 area. You can look for this. You tried to extend last week 1, 2, 3, 4 times. You could not get off that level. All right, 4 times you could not get off that level last week. So I'm going to use that as an area of resistance. I'm going to see if we can't get short this. Man, we're looking so bullish, though. Things are looking so bullish. I just think we're going to see money come out of these areas of the market and go into China names. Got to keep an eye on that 420. Something with Brazil. There was literally something with Brazil, and it's ironic that I brought it up. Yeah, I'm going to use 525, you guys. 525 is the level. We'll look for some rejections. Microsoft really isn't on the list. I like NVIDIA. NVIDIA had a nice setup, but that already broke down. Unfortunately, it already broke down. You guys can see today. This level here, this level has to hold. 118 has to hold. 118 has to hold, which is right here. Alright, this has to hold. See that dotted line? Support, support, resistance, resistance. You get above it, you're trying to hold it, breaks down, resistance, and then you get the little extension off of that area. What's it do? We broke through that area on an increase in what? On an increase in volume. So what does that mean? Chances are that means the probability that it holds is greater. Here we go. So what are we looking for? We're looking for a run back to 120, you guys, in my opinion. We're looking for a run back to 120 on NVIDIA. All right, off of that 118 level. That's what I'm looking for. All right, 120, and you'll see here, this is going to be, I'm going to pull this back to a regular area.
Announcing $740,000 in orders for tactical communications equipment.
So you guys can see here on a 5-minute top right, look at all this resistance up here at 120. We broke it. We're down here at 118. So let's look to see if that pop, okay, if we bounce off of this level here, if we cannot get back above 120, then we could look for the short, and that short would take us back down to the 50-day moving average. And that would take us back down to, like, you know, see if we can break 118, but you could look for like a 120 short to like 118. Or if you get above it, you have to watch for 122. I think this is one of the cleanest setups, you guys, honestly. And what else do we have here? Look at your earnings day. Right? Here's the earnings day. I don't know why that's like that, but look. You closed at 126. You came in with a gap down the next day off of the earnings. But if I take you back here, top right, look at that. Right there. All right, here's the gap you closed. And what did it do? It opened up pre-market the next morning, right? It fell off of the earnings call and everything. It fell. But then it came in the day with the gap up, and it tried to make 120 support. The following day, 120 broke. My point is that was the level. You can see here support, 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 support. The morning after their earnings, right? And then it became resistance once we broke it, right? Support the next day after earnings. It breaks, resistance, resistance again. All right, and then what happened? Resistance again. 50-day, everything's moving up, but here we are. We broke it. We broke above it with some really nice buy-side volume. We broke it again. That was a failed break above 120 in that previous earnings call, guys. So NVIDIA is going to be one of the top watches for me today. Let's go over to NEO. All right, and again, we're going to be looking for bounce backs. We're looking for bounce backs off of 118. And do we reject Friday's low? Do we reject 120? Can we get back above there? Because we broke through it right here. Boom! Off of the 50-day. Through that previous high up there at 119.50. Right? And then we pulled back. We actually turned it into support. On some really, really nice volume here. Right? That was 12 million shares. Alright, that's 12 million shares on a 5-minute candle. That's one 5-minute candle with 12 million shares traded to the buy side. So what I want to look for is a bounce back retest of 120 on NVIDIA which would be Friday's support area, which is also, what is this? What do we have here? Why is there not a line right there? That's so weird. So we have Friday, Thursday, Wednesday, Tuesday, Monday, boom, boom. So 2 weeks ago, Thursday and Friday. So this is the level we're watching right here. You can see this 120 area. That's the level we're watching right now. We're holding 118. If we break down, the thing is we have this, like this here. I don't like this so much. I don't like that 117 level so much. To me, it's irrelevant. So I kind of want to get rid of that. But for some reason, it feels like it just started last week trying to hold it. Last Friday. Not last Friday, but last 2 weeks ago and now. So I'll keep it there. But that 50 day is going to be coming up. And that 20 day. And that 100 day. Sorry. We have a wedge forming here on the daily chart. I mean, this is just really nice. Look at this area. It's an area we broke out on some nice volume. We pulled back into this level. I can get rid of this. That's our gap fill. Actually, I'm going to undo, remove, and I'll pull it back a little bit. Here we go. Yeah, right there. Just to show that gap fill did not hold. See how we got above it? Right? You tried to pull, you pulled literally to a T. Thursday's low was literally holding the gap fill, right? And then it could not extend off of it. It failed. Right here. There's the gap. Look at that. Right, dude, that thing wicked right on it. 121.47. So, this is your previous high up here, 120. You pulled back. Let's see. Can we extend? Can we extend higher? Well, we got to get through 120 first. And even if you get through 120, you got some problems at 122. All right. That's NVIDIA. So, for me, you know, I'm not rolling anything out. I'm not rolling anything out. I think that, what is that? That's 117 something. Come on. Let's go to Neo. So I'm looking at this 15-minute chart here. You guys will notice. Look at this. Look at this level. Oh my God. You guys see that? Support, resistance, support, 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 breaks down.
Accelerate Diagnostics, ticker AXDX, announces FDA clearance of its Accelerate ARC system.
And that's down here at the 118 level. It's down here. Wait, no. This is a major level down here. Yeah, it's 118. High 117s. Wait, no, is that 117? 117, 22.
Carnival Cruise, ticker CCL, reporting earnings of $1.27.
I don't know, guys. I'm sorry.
$16.
All right, so that's NVIDIA. Keep an eye on SMCI as well. Keep an eye on SMCI.
Its full year 2024 adjusted EBITDA guidance to approximately $6 billion. Sees Q4 adjusted earnings per share of 5 cents versus an estimate of 7 cents. Says strong demand enabled U.S. to increase our full year in guidance for the third time this year. Carnival says well positioned.
All right, let me get everything ready.
Base of our business for 2025, record start to 2026, and firmly on path towards our sea change targets. Carnival says, looking forward, enhanced commercial execution drives demand well in excess of capacity growth.
All right, so that's pretty good there. Let me make sure that everything is Gucci.
Carnival sales
God bless
7.9
everyone
million,
here in the chat right now.
7.83
Let's all
billion
have a
estimate.
great week. I'm going to be just watching the morning session, okay? And I have a couple things to do today. I'm going to go to the store for my phone. I've been due for an upgrade for a few years now. What else? I have a couple other things to do today. So I'll probably just trade the morning session, go about my business. I'll leave the charts up too if you guys want. And yeah, so let's all listen. Let the trades come to you. That's what we started to do last week. We were just like, you know what? Let's see what happens. Let the market unravel. Let it show us what it wants to do. And we will go from there. And we had some awesome trades last week, man. Last week was really a good week. Minus, you know, the few mistakes that I had with my brokerage. You know, it's nothing you can do. It happens. Shit. I don't know what to do here with this. Like, so we have this. Boom, 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 boom. We broke. We're watching 120 to act as resistance. All right, let's go. Switch it up, NVIDIA. Start being a buyer here. Let's go. Let's hold it. Let's hold it. Let me make sure it's zoomed in. It is. All right. All right. If this starts to hold, I would like to look for a move back to 120. GameStop 50-day moving average. Listen, this thing's got to get above 23. I feel like this thing might try to blast off from here for a few different reasons, but so what I don't know, how do I say this? Like this wedge here, like I don't know if I should have started it from here, this after hours area right there, and did something like this, or if it should have been something like this, or something like that there, and that was a failed breakdown, to something like that. Bang, you're above the 50-day, start holding and go. I don't know, this thing's just been a waste of time. It really has. It's been given moves, but you got to get above and start making 2250 support. That's all I'm going to say. All right, start making that area support, and things can start looking good for GameStop. You got to get above 2250, hold it support, look for a run. You got to get through $23. Neo. Now I see why I'm lost some subscribers. Let's see here. And LU. What's Lee Auto doing real quick? Dude, like everything's going. keep your eyes out on CCL, guys, too. Just so everyone's aware. They just raised guidance and stuff. Their earnings call will be coming up. They haven't given it just yet. We have LU up here. I don't know what they do. I haven't been told yet. I asked Ty what they did. I'm not sure what they do. What does that Neo? Did Tesla move off of that Neo news or not? I'm still looking for that 245 pullback. 250 pullback on Tesla. It's a major resistance zone. Neo. Come on. That's right. That's why I don't do that. Because I don't have no moving averages or VWAP or anything there. Alright, Neo. Alright, guys. So, I think our first target has to be this double top $10.
SLB and ADNOC drilling partner for unconventional oil and gas development, Sandy Lima Bravo.
What about it? I don't know, man.
CRKN, Crown provides fourth quarter and full year 2024 revenue guidance, narrowing gap to profitability. That's Charlie Romeo Kilo November.
This chart's just not a good look. Where are we? 6-1, so 760. 760, we're above all major moving averages. Alright, $8. We're gonna watch $8.
Crown Electrokinetics.
And maybe 10.
Full year 2024 fiscal revenue guidance.
You have gap fills here.
22 million.
At 9. 10:30.
Fourth quarter revenue guidance of $9 million. That's Charlie Romeo Kilo November.
This sucks. I hate these type of charts. I really do. I'm just going to keep it at that. Just going to keep it at that, guys. I'm going to put this...
SPRC secures FDA green light to U.S. launch of its pivotal phase 2B clinical trial for breakthrough Tourette syndrome treatment. That's Sandy Pop Romeo Charlie. SPRC.
Oh, there's, oh, nice. That's cool. For sure, $7, but you're already above that. That could be a pullback area for Neo. I'll probably just end up focusing on like LU, Baba, Baidu, K-Web, stuff like that, honestly. So yeah, look, here we go. So watch $8 for resistance. Okay, you may end up breaking through it. If we break through it, cool. All right. Let's see here. Good luck today, everyone. Guys, please hit the like button, subscribe if you haven't already done so. We appreciate you guys being here. You guys can help the channel. Just simply hit that like button. It takes 1 second. Subscribe. More importantly, subscribe. Let's get this channel to 1,000 subscribers. I know you guys can do it. I know we can do it. What do you want from me? Tell me what you want from me and I got it. All right, good luck today. All right, listen, again, remember, be patient, focus, strike when the iron's hot. Let me pull up the scanners. If you guys have any questions, you guys can donate too. All right, listen, donation, contribution, that link's in the description. All right, give back to the stream, help continue to make this free. You're not going to get lessons. You're not going to get anything like this from anyone else. Everyone else wants you guys to pay them and give up your personal information for them to follow you around wherever you go for the rest of your life. A lot of people don't know that. A lot of these guys are data brokers. That's really what they are. They're from the penny stock data broker business. A lot of people fail to know that. All right, so let's see here. We have some
30 seconds to the U.S. market open.
Let's see here. Again, I'll be just trading the morning session if we have something. If we have things that pop up. Let's pull up K-Web. 20 seconds now. Unless my time is off. Do not want GameStop. Let's pull up Neo. Man, that Visa trade last week we had a lot of really nice trades last week. I was really happy with last week's performance. It really was. Here you go. You're seeing another. I was about to say Visa has another pullback. More than likely going to take you right back down to 270, you guys. That's a possibility there. I don't even know what's going on. Anybody take that long off of 118? Good job. Great job. Now the NASDAQ. What's it doing? Look at the NASDAQ right now. Looking like it wants to reject 186. It is rejecting 186. NVIDIA is bouncing back to 120. Baba's pulling back. Watch 110 on Alibaba. Again, remember, they have their holiday coming up. So you could see some profit taking in front of that holiday before they go to holiday break. I do want to watch 110 on Alibaba. All right, here we go. So we're running back up to 120 on NVIDIA. All right, we're running right back to 120. That's a beautiful move, you guys. What a beautiful move on NVIDIA. I'm not sure why that did not save. Come on. Here we go. So none of this saved. You guys see that? We just took the time to go through all of it and none of it saved. You serious? Come on now. So watch this 120 level for NVIDIA short. I can't believe that. It's absolutely ridiculous. Absolutely ridiculous. You guys are seeing why I do not like Thinkorswim. There's your trade line. There's your daily trade line. All in front of 120. Anmo, what's up, bro? Yes, I can actually. Thank you for letting me know. Sorry. Is that better? How's that? Awesome. All right, so right now we're watching this support level here for NVIDIA that was broken. Let's take it over. All right, we're going to keep our eyes on 120. We're going to keep our eyes on that 120 area, which was Friday's support level. Sure, if we get above it, you have a little bit of room. Here's what I would say. You know, any pullbacks...
Coming up, the Chicago PMI at 9:45.
Any pullbacks would have to be, you know, a pullback for a higher low. We have some data coming out here in a little bit. Let me refresh this. So you have ISM wait, that's tomorrow. We have Powell later on at 155. By the way, I was going to do a watch list yesterday, but it got kind of late and. So we have Powell, we have Jerome Powell later. I doubt he talks about much. Dallas Fed manufacturing. Remember how Regina just lied to everyone and said how manufacturing was up so much? Look, negative 9 for the Dallas Fed manufacturing. Manufacturing is so negative, it's not even funny. Now you're trying to increase a little bit, but you're still negative. It'll probably come in positive. I'm sure they're trying everything that they can to get these numbers where they want them. But, you know, I would, just you guys see why I am so against them. So Bitcoin, nice tail here. Bitcoin's holding up here on the daily chart. All right, this is a really nice hold here. I still think we should be able to pull it back a bit lower. And look for that 50-day to start rising. We start pulling back into that 50-day. MSTR is really the one stock you want to look to follow Bitcoin. You know, Coinbase not so much. Will Coinbase go up when crypto goes up? Sure. All right, so here we go, guys. We're up at 120. What do we need to do? We need to look at the volume. We need to see what type of volume do we have that shows us. Are we bullish or are we bearish? All right. In order for us to be bullish, that hey, we're going to get above and we're going to break 122 type shit, we need some volume. So far, it's not too bad. It's not too bad. I got to be honest. It isn't the greatest, but it's not bad. I'd have to turn off pre-market. All right, let's look for a pullback hold at 120. We should be able to look for a move back to 122. That's what I'm looking for. All right, 122. That's really your resistance zone is up there at 122. That's a beautiful hold, man. Nice job. Again, this was an important area here because it was also, you know, so this whole trade is based around this earnings and the overall markets, and if we start to see money getting taken out of NVIDIA and getting put into Chinese names. All right, so we're going to find out soon what they really want to do with this. All right. I will not be fighting this trade. I'm letting you guys know right now. I'm going to get my pullback, attempt a long, and it is what it is. I'm going to take my profits in front of 122. If we cannot continue higher, then shit, I will pull it back. Remember, we have this Fed manufacturing number coming up. It's good to see everybody this morning. It really is. Again, remember that some people right now are waking up to damaged homes, damaged, you know, their place of residence is damaged. Watch Baba right here too, guys. Alibaba pulling right back into this area that could be support at 110. All right, homes being flooded, just, you know, something you don't ever want to see. All right, so yeah, I'm not it's not that I have any doubts about anything. I just, you know, if you start breaking through, it just, you know, it is what it is, right? We have some nice volume. If we can start extending up through there, you can see now that the closer we get up to Friday's close, you can see, look what's going on. All right, look what's going on there. That, you've retraced that whole, taking back that whole gap down. Let me look. Give me 1 second. Yeah, the Qs are well above that level, so their Qs are holding on. Oh my goodness. This is the zone we're watching from Friday and Thursday on the Qs. I need a 5 minute. I need a little more time. I need some more time here. I need more than just Thursday and Friday. So what happens is that it adds in so much more time over Sunday night and Monday that, like, it really messes up the time frame here. $490. Well, 488 to 490. That's your little iffy zone right here. All right, 488. Let's see. Does it start? This is where you sold off yesterday. This is really, really stepped in. But if you reclaim it, you know, I'm not saying they're going to continue it, but keep an eye on that. This whole area, if you get above it. If you get above and start holding 488, you know, 490, you break through 490, that's it. You know, this thing's, just call it a home run. You're running right back to Thursday's highs. Friday and Thursday's highs. You're running right back to all-time highs. What's also important is to Baba still holding that area. So look, guys, the Dow broke down. The Dow broke 422. Look at JP Morgan. Holy shit. What happened with banks? What's going on here? Guys, talk to me. Talk to me. 208. Listen. Remember, what are we in? I took it off, but last Wednesday, we got into 200 puts, and you're damn near in the money now. Holy shit. Oh my god. Oh my god. Guys, we did. I told you guys. I fucking told you guys. Motherfuckers don't want to listen to me. Holy shit. Bro. 63 cents. Holy shit. Guys. Holy shit. What's going on here? What's the news? Can somebody inform me on what's going on? I'm trying to look. I'm trying to hurry up and look. Morgan Stanley downgrade? Who is Morgan Stanley to downgrade anyone? First off, who is Morgan Stanley to downgrade anyone? Okay, so for anybody that's new here, make sure you're subscribed. Make sure you hit the like button. So what we have here is a group that went out a few weeks, and we got short JP Morgan last Wednesday. We got short JP Morgan last Wednesday. Why? Because there's a few reasons why. What do you need, Ann? So let's look here. You have prior support. So 208 area. Watch if you reclaim that. You know, the move is kind of happened right now. So take your money. This was a swing trade we were in. Didn't know when it was coming, but we know this pattern, and I told you guys I was not missing it again. So we put it on. We were able to take some profits the very next day. We took it off. Now I'm gonna wait. If we can bounce back to 210, like in front of that 210 area, guys, I do want to start looking at this for the downside move.
At the intraday high now, 63.44. Charlie Victor Sandy.
All right, so here's our 50-day. Come on. Come on, bro. All right, guys, so I'm looking for bounce backs to this level right here at 210. And everything above it, remove. Oh my gosh. This is what I hate so much. When you have... Congratulations.
6.6 on the Chicago.
Congrats, guys. Nobody took that with me, did they? Nobody. I got into Lockheed Martin 3 or 4 weeks ago. If I see still in it is at 580 currently, what should I do? Take your money. That's what I would do. Take your money. If you got paid, take your money. Or keep it in there. I don't know. That's up to you. I can't tell you what you should and should not do, Ann. Here's the thing. In the United States, we have this thing called Joe Biden hiring, and I'm not making it a joking, like I'm not saying it. I wish I could help you. That's what I wish. All right, but in the United States, we have this thing called big government where they put themselves above the citizens, and they hire other people that, you know, just think that. I wish I could help you. I would say if you got paid, I would help. I would take some of your money. Take some of it. If it's for a long-term position, you're going to. I think if you got paid, you got to take your money. All right. I think there's better opportunity in my opinion. This could go a lot higher, but I think Lockheed Martin may be topped out. I would take my money up there. Oh hell yeah, that's what I would do. I'm not telling you what to do. You know, this pullback, you could hold this pullback double top here at 578.75. Take half of it. Take half of it, okay? Take half your money back. Something. But I'm looking at this sector, which is the Chinese sector. All right, there's Baba trying to bounce off of that level. God damn it. Why are my charts doing this now? Why are they doing this? China is going to go into a holiday break. So again, my point was, I don't need Gary Gensler coming after me. That's what they want to do. All right, they send. Gary Gensler will be knocking at my door. Did you tell Anmol he should take his money? I mean, yeah, he should. If he likes his money, what is he supposed to just like risk losing it for some piece of news? Like, all I would say is look at the overall markets and see where money's going and not going. All right? You have to ask, see, you may run money different than me. Me, I'm saying to myself that I should start to see money leave the U.S. markets, right? Which we're coming back up to these resistance zones. If I see money start to leave, I know where it's going. It's going to go into like K-Web. It's going to go into BABA. And in order for that money to go there, what do they have to do? They're going to have to start to sell some stock to fund that position. Taking profits from somewhere else, putting it in another place. Why don't you take some profits from that trade and put it in like a K-Web or put it in like a stock that's down, right? Buy low, sell high. It's high right now. It's at its highs. You know what I mean? That's all. I just don't want, you know, which is good. Just put a stop loss, you know? So, the thing is, too, is you have to watch. So, here's the thing. We talked about the dollar. There's two things. Dollar manipulation, which Janet Yellen brought up last week. All right, she said we may have to do a dollar intervention. We haven't done it in a while, which we may have to do it. All right, which means they intervene and they do whatever they need to do to raise or lower the dollar. I think the dollar's like wanting to go higher. I think this is a really bullish signal over the course of the next couple weeks to a month or two. All right, over the course of, over the next, like, couple weeks to a couple months. I don't know the timing, but I feel as though the dollar could start to bounce and we could have another run back to, like, 104, 103 on the dollar. Or, if you start seeing Lockheed Martin, they could not. Here's the thing. There's wars going on. They don't want people profiting off of war. They can do it. They don't want the average person doing it. Just be careful if some of this money gets taken out, if they take this off and they start throwing it in other places. I just don't know, like, if you have, this is some nice volume here. I don't know what their earnings look like. I don't know if they've raised guidance. I haven't looked. I would look at that. I would just keep it back to fundamentals and look at their growth rate. Look at their growth rate. Are they saying they're looking at, like, compare it to, like, 2020 or the whole 26, like, Trump administration to this administration? Like, you know, you'll have to think about that. That's how I would think about it. Obviously, there's a lot going on. The government is trying to spend a lot of money. Just see what Lockheed Martin has to say. All right? And I think that's a good position. Good for you, man. I'm happy for you. That's a good one there. I want to start buying myself. I think I'm going to start taking, start making an attempts for some of these names here. All right, let's do it. Let's get on the. Let's get this thing going, guys. NVIDIA. Let's see. So we just pulled back and held that. All right, let me bring this up. Oh my goodness. This is why everything gets messed up, because see, I got to go back through all these names and fix everything. I have way too many levels on here. Oh my god, I guess I'm just going to go back to Baba. You gotta be kidding me, bro. You gotta be kidding me. You gotta be kidding me. You gotta be kidding me. Alright. Looks like Baidu has some room up to 110, 112. 110, 113. Today. This is so crazy. China just may have started. Like, look at this, guys. Look at this. this thing gets going, you guys, watch out. Watch out. Even though it already has gotten going. This is going to be insane. This is your COVID. If you weren't able to take advantage of 2020, you've been handed a gift. A get out of jail free card. It's here. It's time. So do your research. Make the best decision possible. And the only thing that you can do is manage how much you lose. You can't manage how much you make. You can manage how much you lose, though. So... where's NVIDIA? So there's Babo. I feel like Baba's the favorite. Alright, so Alibaba has a gap here that you wanted to take. I should have already been in this. It's like you have a gap here. You're coming up into these gaps. There it is. Damn, what's the SPY doing? Where's the SPY? Dude, why is my daily... what do you mean by China sector? There's nothing else than Alibaba. Let's seek some low cap opportunity if you really will. Wait, are you not aware, Animal? What do I mean by China sector? Oh my gosh. I think you didn't get the news, did you? Oh man. I would just go ahead and look it up. And it's not just Alibaba. It's everything. Look at Baidu. It's already at a new high right now. Li Auto. Oh my god. Which already have it up. Not at a high yet. LU. LU. K-Web. JD. JD's starting to pull back now. But look, what's not pulling back while the other ones are pulling back? K-Web. I would just do some research. Come on. They're doing stimulus. They're doing stimulus, and in accordance to the United States, they've lowered capital requirements for their banks. They're providing nearly $1 trillion in U.S. dollars, in U.S. like compared to the U.S. whatever it is in yuan. Okay. It's important to know what's going on and do your research. This is
50.
COVID repeat for China. Things are not okay in China. So they're providing stimulus. A second, like they're hitting it big. They're pulling out all the guns. That's all I'm gonna say. Just look it up, and there's a reason why gap up after 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 gap up. And if you do not see NVIDIA, Amazon, Lockheed Martin, U.S. names not making highs, why? If the China sector is making new highs, and the U.S. is at highs, and they're not making new highs, and it starts pulling back, which we're in that stage right now. Are we going to start seeing a pullback because you have to view the market as what are the institutions doing? What is money doing? Amazon did not hold last week. It's trying to break down. So if we continue to see these breakdowns in stocks that have made new highs, it's showing me that they're taking that profit and putting it into BABA, KWeb, Lee, Neo, Baidu, JD.com, Chinese futures, Chinese bonds. They have unloaded, they have unleashed all the guns. That's all I'm going to say. Just, just to go to a Google search, it's important to know this, and I'm going to play this.
They go 50, they may go more. We think, mortgage rates in this country. We think business loans in this country. We think interest on the net. You immediately thought China and currency differences around the world. So that was more important to you.
Because the undervaluation is, listen, you can look at your chart and look at a chart of Bob on your screen right there, whatever stock you like in China.
He is big money. What he does or what other guys are doing and what they do is what the markets do. And you need to know about it.
Even with the recent moves, they're like on a flat line low compared to where they have been in the past. And you're sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here. That's kind of versus what, you're 20 plus on the S&P.
What did he say?
Okay, and then you have, so the question.
He just said, we're extended. We don't have an opportunity for a growth rate like this, like we do with these Chinese names. It hasn't been investable because there's a lack of trust. And the fact that it's hard to manage risk if the Chinese Communist Party can turn around on the drop of a dime and the CEOs come up missing or they change laws or they do something that they started to do the past few years. So he's saying to you, and he's laying out the picture that low PE, stimulus, like they're allowing risk on. Listen, like when I hear him, I don't know if others hear him the same way I hear what he's saying. So I try to help you guys in what he's saying. All right, we're not necessarily topping out, but our PEs and our earnings growth ratios, even for the next 3 years. 5 years, they are not the same. Now add on the fact that they just lowered margin requirements, huge stimulus.
What
capital
was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, and I apologize because I can't even speak English well. He came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said, we'll do more and more if needed. Now, the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I listened very carefully what government.
We're not losing hope. Nobody's losing hope. It's just become a little toppy. We've become a little extended. We ain't losing no hope, baby. No hope is lost. Neither for you. You and I, we're from a different country, but we have one thing in common. We don't lose hope. We lace up our boots and we...
Officials say. So I took it that they did a lot. They exceeded expectations, and they promised to do more and more and more. Okay? And that's very strange language, especially for, any central banker, but especially over there. So that was the first thing that happened. And last night... we heard that they were going to have some kind of meeting, but they kind of blew away expectations.
Really quickly, I'm sorry to interrupt. This was Wednesday. For anybody that doesn't know, this meeting was Wednesday when David Tepper came on.
On the physical stimulus, that they were going to do. Now, physical stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast, what can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do.
The biggest central bank in the world, the United States of America, is easing. The second largest economy in the world. I don't know. They could be second, third. I don't know what they are right now because they're struggling. Easing. Put them both together. What do you get?
Do right now, but no, it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates, and now the Chinese are lowering rates. Okay, and they're aggressive in how they're going to do it, and they're also, believe this or not, swap facilities to buy stocks, encouraging buyback. of stocks, encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks, not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses if you want to do it. You know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff. So,
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors investing in China too. What's the risk? How do you?
I mean, that would be a risk, and that's why you have limits on how much you would invest. However,
you just said you don't have
the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Or Europe or Japan.
Europe or Japan.
You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the buybacks.
Buybacks, and for you to take risks to buy stock. Right. Take a loan out, buy stock, you can't lose money on your loan. Great deal for me. I would, if you want to be Chinese. Is Sorkin a Chinese name? No. Okay, sorry. Anyway, sorry. So you have, so United States. So you have this world, and so I'm trying to figure the United States. So it's not really your first plot to go to invest right now, because you would say China first, Asia second, right? Mm-hmm. Asia at large second.
Okay.
Japan, then Japan, Korea, those markets. Also, actually, Asia and Europe before Japan, and I will tell you why. The problem with, you have to be careful a little bit about Japan, although I think it's still you want to be in the equity markets. If you look what happens, if China runs and they get the economy going and you get the animal spirits going, what happens? Chinese throw a lot of money in their economy. Who's one of the biggest beneficiaries in their own economy? Is Japan. And Japan, if they start running faster. I don't care what this election is, and they're worried about this candidate and that candidate. Some candidates might want to go to Abenomics, and I don't care. They don't even understand it yet.
Chart.
This just happened last night. The market doesn't understand it yet. What's going to happen? Japan's going to run too fast if they really stimulate there. And when Japan runs too fast, they're going to have to.
Look at this. If you need one chart to tell you where should I be? Where should I be? What should I be doing? What the hell should I be doing in the damn markets? Trading, investing, all of it. Look at that volume, people. Look at this. The institutions are showing you where to go. Risk on. 81 million on average last week, every single day. Risk on. If they're not afraid, I'm not afraid. Let's get it. Once again, this is in my opinion. This is my opinion. This is your get out of jail free card. All right. If you missed 2020 and COVID,
raise rates, and when they raise rates, the yen's going to appreciate. And if the yen appreciates, then you have to be careful about the stock market, not the stock, depending how it goes. Now, the stock market in yen terms, you should still make money, but how much does it move or not, because of how it historically does, right? So you go around the world. The U.S. Listen, the problem with the U.S., and then I could go European. The European index at 14 times multiple versus a 22. Historically, incredibly wide.
22 here.
21, 22, whatever you want to say for next year.
So Europe looks good.
Yeah, it looks interesting.
We're like last in Europe.
Well, Japan has the same sort of multiple right now, and you can say we have much better stocks and much bigger tech stocks and that. So the question here, where you don't have necessarily a cheap market, right? It's not a cheap market. It probably is, and I didn't listen to him. I listened a little bit, but what Cooperman said yesterday. But if you looked at it historically, it's a little overvalued. Okay, I would say that. However, I get concerned about one thing, because fortunately or unfortunately, I was around in the 90s. I was around in the 80s too, but I was around in the 90s. And in that market where the Fed cut rates into Y2K, in a good economy, right. A relatively not a bad economy, but a relatively okay economy. You had those rich in before long-term credit, rich in 97, relatively rich, richer after long-term credit, and bubble mania in 99, early 2000. So I don't love. I'm a value guy. I don't love the U.S. markets on a value standpoint, but I sure as heck won't be short.
Well,
because I would be nervous as heck about the setup with easy money everywhere, a relatively good economy, and China just massive stimulus coming in. So it would make me nervous not to be somewhat long the U.S. Now, so that's how the setup is.
So that's going to be our range.
You have to be. You can't be short the U.S. Right. You can't be short anything in Asia. Right. Anything in Asia. Nothing.
Okay. And you mentioned earlier, just a few seconds ago, that the market doesn't seem to believe.
And that brings us to the short squeeze. 60%
you
of
sold some NVIDIA?
Well, we sold a lot of our NVIDIA.
Stuff before, yeah.
But, listen, the stock we thought was, too high at the time and would come down. Unfortunately, we didn't buy it when it came back down.
I mentioned last week.
But,
I mentioned last week, for anybody that was with us, you heard me verbatim say, listen, the second we get a pullback in Baba, Baidu, JD, KY, any of the Chinese names, you get a low put in, get long, and hang on. And that was here Wednesday or Tuesday, right there, for the name Baba. So I'm doing as I speak. I'm getting long this sector. I'm buying leaps. I'm letting you guys know now. I want you guys to do your research. I want you guys to be able to manage this. I need you guys to understand, if you do go long, understand that they can turn around and come out with some type of news in the middle of the night while you're asleep. And if you're in options or in the stock, you may or may not be able to get out, and you could be down a lot. I don't expect them to do that. I don't think they're going to hurt themselves, but they could. Anything is possible. I'm just letting you know the risk. For me, it's risk on. I'm being told by the market, quote unquote, part of the market, this guy, him and others like him who are the market, it's risk on. It's risk on in the Chinese markets.
So it's, it's okay. It's really, those stocks like NVIDIA is a question. Do you have enough power, okay, for the growth? Do you have the next generation models that can take their chip? So it looks great in 24. It looks great in 25. I have no idea in 26 and 27. I am no idea. Okay, I mean, if I was good, I don't believe my analysts. I don't believe any analysts. I don't trust myself. You know what I'm saying? I just don't know how there's too much. And you have these multiples out there and how it can go, and the variation of where that earnings can be on the out years is too much. So it's not my preferred vehicle versus other things that I have more confidence in how I can, how we can do in my shop, analysis on the earnings.
But you thought it was important to mention that you'll be playing the energy component of trying to supply all this new technology.
We're trying to understand it better.
But trying to understand it better.
Here's the thing.
Would you avoid green? Would you embrace green? Would you avoid fossil fuels? Would you embrace fossil fuels, natural gas?
I never think I'm that smart, so I just like to use common sense.
I made you out to be really smart.
Okay, you can try, but I'm not going to accept it. But I do have a heck of a lot of common sense, and this is what I know. I talked to some governors, around the country, both sides of the aisle. I'm friendly with everybody, as you know.
Yeah.
They're not going to let their nuclear power come offline. It's not going to happen. It's a joke. Some of these projections on these things are crazy. It has to be, if you're going to meet these power needs of what they need for AI, you're going to have to use natural gas. You're going to have to use natural gas. It's just...
And that comes from drilling.
Yeah, I mean, we have a lot of it. And, so you have to use... you're going to have to use it. You cannot take if you take a current nuclear plant and you think you're going to get these things, it will never get by these individual, PUCs. It won't. It can't. It's going to hurt the consumer too much. You can't hurt the consumer that much. It's nuts. So I hear these guys talk about, well, if we did this, if I was 7'2", I would have been in the NBA one day. I'm not 7'2". Okay, if you want to say something that can't possibly happen,
you still wouldn't be in the NDA.
I would still. I don't have the skills. It's a true story, but
you could be 8-2.
So that's an interest when I say. So I'm trying to understand what really makes sense, what doesn't make sense,
right.
And we're trying to figure that out right now. So it's fascinating to me. It's fascinating when you look at these tech stocks. It's fascinating in a video. Or you look at some of these things. Can you do for different reasons? There's different things as you go out years. Different things that have to happen to make the growth projections happen. I'm not saying it won't happen. I'm just not smart enough to know if they will. I know the problem.
So watch this trade line on NVIDIA. We're above it, or we're stuck between rock and a hard place here. We have potential resistance. All right, this could be a resistance level. I assume the trade line's going to give up. All right. So right now, you didn't quite get to 122, which is okay. It's an area, like we said. You tested Friday's close, as you guys can see here, like we said. There's Friday's close. You went right up, right about to it. So there it goes. It's breaking down now on lower volume. Keep an eye on that daily chart with your trade line and see if you're able to hold. Like if you start giving it up, then you got to look for low a day down at 118. And then it moved back down to like 117, 116, which is down here at the 150-day moving average. Okay. All right. So that's that. That's just a little check-in there. It may not, give you the continuation you're looking for. So make sure you're careful in how you do this. This is pre-market highs. Okay. So that's another way to look at it. Just try and make sure you see everything. In my opinion, I think NVIDIA is a bit overdone. I think it's well oversold, but that doesn't mean anything. Something can be bought and oversold, overbought and oversold. All right, yeah, that's low volume. So maybe by tomorrow we get like a move back down to 117. We do have Powell, so we'll see what that does. You can see we're rejecting Friday's low. We're having trouble getting above it and holding it. All right. So that's that. I'm going to put Tepper back on. I'll let you guys know. I'm just looking right now.
Abilities that they will or not, but I can't. No, I mean, it's what it is. Okay, so I recognize those things, and people are making assumptions that are going to happen 100%. Well, the United States is a great country, and we innovate like heck, and, things do happen this way, and usually you have flies in
we do have a fly. We have a fly.
One particular one, and if I get him, I'm telling you, I'm not even going to kill him. I'm not going to kill him right away. I'm not going to kill him right away.
Dare I ask you how the election plays into all of this?
If you have not seen the movie 300, write it down, go watch it. Simply called 300, 300. Please watch it. Never give up.
So with the election, I am a big proponent of split government. And right now, as you're more than aware of, it looks like the Senate is Republican and the House is Democratic, and I'm loving life. And I don't care. I'm talking purely from this show. Okay, I don't care.
And what would you do if it was a sweep?
If it's a sweep on either side?
Democrat sweep.
So I'll just, and I don't want to talk about it that much politics, but I'll just say in general, you have a populist on one side and a progressive populist on the other. And if I listen to what happy day I hear more giveaways and more of that. So do I want all Democrats? No. Do I want all Republicans? No. I don't want more. Again, from a pure economics, there's other considerations, which is just not the show to talk about. But from this market perspective, an economic perspective, what's good for the economy, I want a split government. And I don't want all Democrats, and I don't want all Republicans.
And you think at the moment...
If I'm thinking about the markets.
No, and you think at the moment it's not impacting the markets either way, because you think that the expectation is that it's going to be split.
Well, not only the expectation's there. People bet on it. The betting markets are that way, that it's split. Right. And as long as it's split, and this may be a problem because the market thinks it's going to be split right now. So if it gets surprised, that could be a problem for the markets. But as long as it's a split, the market's going to be fine. They will not care. Because they're not going to let them do the things they talk about.
So, David, are you afraid to play AI directly? You're doing the sort of downstream ways of doing it. I mean, is it too hard to figure out? There's NVIDIA, but
no. Listen, you have
what besides NVIDIA and energy could?
Well, we have the regular stocks like a Meta has been a big beneficiary of AI.
Right. Llama.
All these. I mean, and they just in how they do models, how they monetize their business, and other.
Is that a
like
big
Amazon.
trend for you, or is there something else?
It's a question how much is in the stocks and how much the next generation is, how much more, because they've gotten pretty good returns, I think, that more than people appreciate in one of these numbers, and so they could have near-term all these stocks could have near-term surprises. Yeah. So the question is, what is it as it goes further out? Stocks, versus
down, meaning everything economic.
I mean, if I
just trying to get as much as I can. Nope, I'm just saying. You watch Lilly. Lilly has been a growth stock.
No, I don't.
When we hear the Fed, okay, they go.
All right, guys. Sorry. Oh shit! I didn't know I was eating in front of you guys. What is this guy trying to say? Don't short anything in China. I thought I related. I don't know. I think. Hold on one second. God damn it! You gotta be kidding me. Can you guys hear me? I think you should just look it up. That's why I figured if I played it, some of you guys really wouldn't be able to put a picture on it. I mean, I've said it. He said it. I said it. I tried to help explain saying what he's saying. Just look at the chart. Look at the chart. Look at the volume. You get your pullback. Give yourself time. And I'm not telling you guys what to do, but me, I will be participating with no trust, okay, in the China market. It will, like, what do I mean by that? I will trust that it's going to go higher, but I will understand that I'm taking the risk that the Chinese Communist Party at any minute, at any night, could, not saying they could come out and do something to change the rules or do something like they've done in the past. I do not expect them to do that. But this is a big stimulus. Margin requirements are lowered. Anything and everything they have done. They want their economy back and booming. Get long. This is the definition of risk on. Again, if you did not participate in the rally from 2020, I don't care what country you were from, if your central bank or whatever it is eased rates, provided stimulus, okay, and you did not participate in asset prices going higher, the opportunity may or may not align right here for you once again. Your second opportunity to take advantage of it here in the Chinese markets, Asian markets. I don't know how to get any more clearer. That's all. I don't know how I can be clear. Just do a Google search. Look it up. Again, I can't. I'm not telling you guys what to do and what not to do. I can't. I wish I could. I wish I could tell you guys that's just what it is, guys. They're providing physical stimulus. They're providing monetary and physical stimulus. Like, they're easing rates. They are providing people with money. They're lowering the margin requirements. Everything that you could think of to make it easier for money to flow, asset prices to rise, things to get going, speed up the velocity of the dollar or the yuan, whatever you want to call it. I would just refer you back to 2020, to Europe, United States. And on top of it, you have the United States and other central banks easing. So the Chinese Communist Party is saying risk on. Risk on. All right. Just look at the chart. Look at the volume. Okay. If we just go to K-Web, you had 60% of this float short. Okay. It's time. At least for me, I am participating in this. I'm allocating. You don't over allocate because things could happen. But I'm allocating to this sector. I don't know how. Sorry, the chat went down because I didn't lose internet. I don't know what happened, but look at that. Just look at the chart. Look at that. That right there is telling you what institutions they're doing. So again, I feel like I'm repeating myself. If Amazon, AMZN, if that daily chart's breaking down, okay? If we go to Google, it's not breaking down, but it's nearly just hanging out right here now. If we go to Apple, all right, hanging on, a little bit of buying, MSFT, all right. Microsoft broke down. That dotted line was our target today in the 20-day moving average at 425. Congratulations if you hit that short, okay. NVIDIA. Let's go to NVIDIA. NVIDIA. Bouncing, like we're finding out now, are we going to get back and reclaim 120? But it looks like it's trying to pull back. Tesla. My point is, look at these names. That's a nice long tail there. And look at like JP Morgan. Okay, it had a big gap down. My point is look at some of these names, and if you start to see some of the large cap names that are at highs or making new highs, if you see them start to break down, and you're seeing volume increase on the sell-off, and then you're seeing the increased volume in the buy-side volume for Chinese names, they're taking profits from here and sending them over here. Costco, Walmart, WMT, big name, nice run. It's paid some nice money. That's a nice stage 2 breakout. Costco. Cost, I know it just had earnings, so this could be a little different. There's a tail there. All right. I can't think of anything else really. But you guys get the point, right? I think you guys get it, right? I'm risk on China market myself. With caution. Oh my God, I cannot stand eating crackers and yeah, so that's also why I said like Lockheed Martin. If you start seeing this like slowly kind of like just not being able to make highs, keep your eye on the volume. That's a nice volume bar right there. We're not, in my opinion, I don't think we're seeing it right now. But there will and could come a time, like, man, like, look at that. To me, that looks beautiful. That's a nice little double bottom. If you start seeing an increase in volume on the sell side towards, like whatever names like Apple, Microsoft, Amazon, like some of your large cap tech, like, they're not going to sell all of it. Or stocks that I'm trying to think of some names. Like, what else? Like gold. I don't know. Not necessarily gold, I guess, but I'm going to be watching for this. I'm getting long this as soon as I can get the opportunity. All right. I literally said on this live stream last Wednesday on this gap down on Alibaba, I said, guys, take advantage when we get this pullback to get long Baba. I said, get on it and hang on and take your money as you get paid. All right. I mentioned it last Tuesday on that gap down on Baba because I said, like, you may not get another chance, and you're seeing it gap and go, and also just about in parts of these markets, the largest volume you've ever seen. And what else makes this such a great trade is they have so much room to go. Number two, where else are you going to go? For the most part, the rest of the world is already somewhat overdone when it comes to like the 2-year, 5-year horizon. Where are you going to go? Now the Chinese Communist Party just gave you a reason and an area to go. The PEs are already low. The price to earnings are very low. They're coming out saying they're restoring the trust. You know, they're trying to get shit going. So they're providing the stimulus. They're providing lower capital requirements, right? So that means people can borrow, and they're giving people money, right? So you have every reason to not be short right now. You have every reason to be long. So I think this is going to get exciting, and I think this is literally an opportunity that if you were not able to take advantage of in 2020, the huge upside move that we got, you might have just been offered a second a gift. All right. I mean, the valuations here, what valuation do these things trade at outside of the short squeeze? So I'm ready. What is this, Baba? This is crazy. They've already baked so much premium into this, it's not even funny. It's not even funny. The one thing I do want to find out is if they plan on taking profit in front of the holiday week. I think the 1st of October they go on a break, so just be aware of that. But other than that, I am long and strong, and there is nothing, and the news anyone can tell me unless like China China kidnaps the CEO. I forget his name. If they kidnap a CEO again or something, or do something stupid, that's the only way I'm getting out. You know what I mean? And I'm going to take my money as I get paid. And then what I'm going to do is the money that I take, I'm going to triple back and hit it harder it's going to be a snowball effect here. So I'm excited. I'm excited to see what happens here. I'm going to let these things pull back. Let's go to, let me save this chart really quickly. Let's go to NVIDIA. NVIDIA has a really nice setup. That's why I keep watching it. All right. I brought that up this morning. 109 to 110 is what I'm watching on Alibaba. 109 to 110, which was Friday's high. It's like right here. I mean, I guess you could say 108, but 109 to 110. Let's see here. Let's see here. What time is it? It's 10:30. So again, I'm only going to be trading here for a little bit. I got to run to the store. I got to do a couple things. I'll probably end up I got to step in at probably Verizon. Let's see here. I'm telling you guys, we're going to have a good week. This is exciting. This is good stuff. All right. And again, don't just trade it. You know, it would be beneficial to be able to own some of this so that you're able to make sure that you're able to get out if something happens after hours. Can we get... Who thinks we break 122? Can we get like a 1 in the chat if you think NVIDIA is going to get up to or break 122? Or can we get a 2 if you think NVIDIA is not going to break and get up to 122? Which would be Friday's close. Or just let us know in the chat what you guys think. And if I'm chewing too close to the mic, just let me know. I'm going to pull it back again anyway. I know you guys do not want to hear that. I'm just having a few crackers here. A cracker eating a cracker. All right, 122. Palantir. This thing's been sideways, hasn't it? Come on. Like, look at that. That's ridiculous. I saved the charts. They should not be all the way stuck to the left of the screen. Some bullshit. Alright, 2 levels here. Really just 1 level. Keep an eye on that 1850. See if we reject that level right there. Alright, this is CCL. They just had earnings. That is a mean tail down to the 20-day. You've literally just about recovered that whole move to the downside. Alright? You've literally recovered just about that whole move to the downside. And now she's about to go green. So, let's see. Does CCL go green? Some people may not know this, but CCL in 2022, 2023 was one of the biggest winners in the market. Look at this. This thing was up like 100 and some odd % last year. So, let's go from like here, right? This was 20. Let's go to like 16. That's 107% just in the stock itself. Sure, you had NVIDIA. Look at that. That's over 150%. That's a nice trade. Sure, you know, NVIDIA did a lot, you know, did really well too, but did a lot more than that, but still. I think this was one of the stocks that flew under the radar that a lot of people didn't talk about enough was Carnival Cruise Line. Again, I'm just looking here. I'm trying to find something. Alright, so we got above that level on the SPY that we talked about. And now we're trying to hold it and extend. So now your target, in my opinion, for the SPY and for the market would be pre-market highs. So the SPY would have to hold 571. Okay? And the target, you have a stop underneath the 571. Your target's like 572. Maybe 573. But you got to get to 572 before you get to 573. So listen.
Home purchase policies.
News. China. Beijing. Home purchase policies. Hold up. This is what I'm talking about. Not that it's bad. This could help it. They said, fuck, why we no rally? Why we no rally? Give them news. Give them news. We need to go higher. Right at that double bottom. How ironic. Come on. Oh my god. I don't understand why it kicks me off. It's so weird. That's seriously so weird. It's probably when we lost the internet. I went to a different FDX. Holy shit. Did you guys see FedEx this morning? I wonder if institutions are stepping in to buy this because of the holiday. Holiday's coming up. Holy cow. All right, let's go, Neo. What are you going to do, bro? Let's go take a look. For anybody that doesn't know any Chinese names, if you guys are struggling, let me know. Let's go. I can help you guys with let's go. All right, so here we go. You also have ETFs that I don't want you guys to forget about. LIN, Lindo. So you have ETFs. So international. You have emerging, more Asia Pacific, EWT, EWY. All right, FXI. There we go. So you have the yin and the yang. Yin yang. So this is directional daily FTSE China Bull 3 times shares. Okay? YINN. YINN. If you want double leverage, or if the markets start to reverse. All right, you could use this as a hedge. Damn.
Beijing housing regulator eases home
Listen.
purchase restrictions.
And look at
for
that.
Local resident buyers.
So they just eased home purchasing too. So they're making it easier for people to own homes. Exact same thing everyone did in 2020. What do you think that means for cars and automotives? You know? I'm just waiting. We're putting in like a weird setup here. So FDX, UPS, all rallying higher. Holy shit. I did not know I had all these levels here on some of these names. Sorry that I had the apologize for having the mouse right in front of the microphone. Alright, so UPS is coming up here. Looks like, to me, UPS, for anybody watching, FedEx, UPS, and those names. Alright, 140, 139.65. Alright, that... Oh my god, bro. Fucking loud as shit. Shut the up. 140. And again, you know, that's by like tomorrow or something. So if you get a little pullback here, that's a nice increase in volume on the extension through the high. I would look for a pullback. I'll tell you guys where I would like to take this if I get the opportunity would be here at like 136. I need this back down here at like 136. Oh, 135.50. Alright. So I'm going to watch UPS for pullbacks down into 136 and see if we can get an extension here. There's already a lot of premium baked into this, and the target for that's going to be like 140. Alright, I don't know if this has to do with the strike or what going on. I don't know. But these names are rocking right now. These names are rocking right now.
SAVA, Cassava Sciences, more highs now, 31.
Oh my gosh, Sava's going now?
Alpha.
Dude, Sava's such junk. It's so bad. It's so bad they're lying. Like they're seriously making up, like they're assuming how future data is going to turn out. Remember this pattern I showed you guys? If this thing consolidates, you could see this thing break out. You guys remember the watch list we did a couple weeks ago? You know what this looks like? Novavax, NVAX. Right? Look at the daily chart here. Bottom right. Oh my gosh. Hold on. I'm not going to be able to take it out as far. Look at DJT, guys, right here. Look at this. Right? You see the pop? Beginning of 2023, the bottom right of my chart. It curves over. See how it curves over? Comes in with the gap up. But what's it do? It just consolidates right here. Boom. But I want you guys to focus on this rollover right after the gap, that rip higher. Right? And then it just rolls over at that gap on the second breakout day. What was the ticker? Shit. Sava. So I brought that up. And what do you have here? The breakout day, second day. Look, the rollover consolidate. Boom. Gap up. Could be coming. Don't know when, but these patterns look alike. NVAX had the same setup. DJT, same setup. Sava, same setup. You're seeing these setups all over the place. Alright, I'm going to go back to like UPS, NVIDIA. Oh no, it's not going to give it to me. So NVIDIA, once again, fails to hold above 120, you guys. That's another failed hold. Might be smart. And we're red. We're 1.2% in the red. You know, I think it wouldn't be nothing to get back down to 118, 117 short. All right. 115 might be a stretch here. Look, I think that's it, guys. Fuck. I might take this, and I might go out a little bit out of the money. Right here. Watch that trade line come in. Here it is, guys. Let's see if we can get an extension down to the downside. Let's go look at the Qs. It's 11 o'clock right now. We're kind of just hanging out. I want you guys to be aware of it. I think NVIDIA could pull back. You just may not get the extension you're looking for, like the follow through. But to me, it does look like NVIDIA... I think it gets back down to 117, 118. And I could be wrong. I could be wrong. This thing could recapture 120. But I will say you do have... NVIDIA is a bit oversold. So you do have that going for yourself. So if you do get upside and you move into 122, and if you're able to get through 122, take profits. Shit. What else do we got on the list here? All right, so we have FedEx, UPS. These things are going crazy right now. FedEx and UPS. I'm wanting to see if we can get a pullback again to 136, but I doubt it. I doubt we'll get that because we already did. It's already pulled back to it. I'm actually going to turn this off. see here. So what can we do here? Let's go to full. Let's see what's going on in the markets. Everything, it's kind of a mixed bag today. You guys get the same feeling? There's not like one sector outperforming. I mean, we do have semiconductors underperforming, but it's not like there's another sector outperforming. Let's look at Palo Alto, PAN-W. PAN-W. Was there any news on Palo Alto? Does anybody know? Let's see here. Hold on. Let me pull up KWeb, Baidu. Baidu's breaking down, and that's okay. Let it pull back. I'm with that. What was the name? Palo Alto. That's what I was looking for. That's something we took off our radar that was looking good. Alright, this was looking good, and we kind of, if you notice, like CrowdStrike and some of those names, didn't they just fall out of bed? Like Palo Alto, CrowdStrike, like they were some good trading vehicles. And then for whatever reason, it's because we started to break out. We took this long on the pullback there, then it failed. That breakout off prior highs failed. But it's not falling out of bed. It's not like, oh, we're gonna sell off and figure out where the market, where buyers step in at. They're holding it up there. I should delete all these lines. Get rid of this. Wait, that's all-time high. Yeah, get rid of it. Get rid of it.
In 2022. Among those who say they're losing the most ground, take a look. Women 18 to 49, a reliable Democrat voting Latino subgroup in here. Florida, ages 18 to 34, and blue-collar workers as well. Among those who say they're falling behind, the biggest personal impact was seen in groceries, reported by 48%. Then that's followed by rent and mortgage and health care as well. The survey showing Harris leading by, Vice President Harris leading by 14 points over Trump among Latino voters. But take a look at the polls leading up to 2020 election, where President Biden held a 27-point lead. So that is narrowing, and it's part of a broader trend. Explaining these inroads, while Harris leads on several issues, including abortion, who we best serve the Latino community, Trump leads on the economy and the cost of living, all of which keeps Harris in front, but shifting support towards Republicans. Carl?
Historically, Steve, right, the Democrats need to win the Latino vote, right? I mean, a significant margin of that, which is why this could be a problem for them. There was a great note on a great article on NBC about how both campaigns are advertising and appealing to the group differently, that it was more targeted from the Harris campaign on issues, on traditional issues that the Latino community cares about, on more local advertising as well, versus Trump, which hasn't, that campaign hasn't spent as much targeting this group.
Well, it's interesting. You may not spend as much, but if you can target, what our data show, Sarah, is that both businesses and politicians treat Latinos monolithically at their peril. This is a very diverse group. It's a group that's growing, I think, more diverse, and as a result, looking a lot more like the broader population. At the same time, as we'll talk about in our coverage tomorrow, we have big differences among, for example, evangelical Latinos, Catholic Latinos, young Latinos, and older Latinos. So it's a really difficult group, I think, to target specifically.
How about as a turnout group, their level of civic
345. Nobody cares what Carl Cantanilla has to say, ask, whatever.
FLNG asset.
3.
Asset is achieved first full cargo and sail away.
I think.
Fully loaded onto
Hold on.
Princess and setting sail for Europe.
Listen.
November Foxtrot Echo.
November Foxtrot Echo. think this was the news? Okay, so here's this news, guys. Oh my gosh, come on. So they talked about this last week. Setting sail for Europe, so I guess it... Found it addressed. Hold on one second. Energy poverty.
Speaking today, and take a look here at the market right now. We started off in the red. We're coming up off the lows. The Dow's down 75 points right now. The S&P is down just 3 points at 57.34. The Nasdaq down 0.25%. The Russell, though, with some up arrows. And oil and gold are mixed. Gold is down over $12. Don't forget, gold was hitting some record highs last week. So did the S&P and Dow, for that matter. Oil 68.83, so that's creeping higher, and the VIX at 16.94, so a little bit higher than where it's been. And dollar 100, still in that 100 level, 0.25, and Bitcoin 64,115, down 3%. So we'll kick it off with Jenny Horn, markets correspondent here on Schwab Network. Carnival falling, did have its earnings report. Welcome back, Jenny. Would love to hear more about this name.
Yeah, so seeing some signs of waning demand, and I think that that's a huge reason we're seeing some selling today. I will say, not necessarily selling off by any means. So it's not like this was, a massive decline, but I mean, down 3.5% on the session, so still considerable. And again, I think now painting a picture from multiple cruise lines we've heard from now following their earnings that there is going to be a bit of a demand hiccup now as we close out this year and enter fiscal 2025. But as far as adjusted earnings went and their top and bottom line growth, I mean, we did see adjusted earnings come in around $1.17 a share. That was slightly better than expectations, but again, downbeat outlook and overall net yields and now their current quarter, I think, were more of a point of a concern. The company did stress it had this phenomenal third quarter with record-setting operating results led by higher margins and same ship yield growth, while demand for future bookings remained strong with nearly half of 2025's booked at record prices. What is more concerning right now is how this continues, basically, how the pace of growth is able to withstand what has been a pretty meteoric pace of growth we've seen post-pandemic, frankly. So they mentioned strong demand enabled them to increase their full-year yield guidance for the third time this year, and they improved their cost guidance, driving more revenue now to their bottom line. Well, overall, revenue did rise 15% and beat expectations. Passenger ticket revenue also increased about 15%, and onboard and other revenue also rose a healthy 15%. So just if you looked at their third quarter, you would say objectively, this was a strong report. But again, I think the fact that right now you see their earnings snapshot going forward, very difficult relative comps to face now for the rest of this year, and more concern about like how they're able to maintain this level of growth and level of execution seem to be in the crosshairs for analysts today that were a bit more downbeat on this report. So not selling off, but just seeing, I think, signs of overall tourism is going to not be able to continue at this pace of growth. And right now, Carnival's taking a hit as a result of that, Nicole.
Okay, Jenny Horn, good to see you. Thank you for that. Appreciate it. Let's get some insights in the news shaping the markets. For that, we welcome in Joe DeGrossa with us, CEO at Access Capital. Joe, thank you for being here in person. Nice to see you.
Nice to see you, Nicole. Thanks for having me.
You know, a lot of talk. We're sort of still powering through with Powell, what he may or may not do. I think he's speaking today at 1 o'clock. You have a market that was hitting some records. How are you feeling these days?
Well, I'm feeling pretty good generally. Over the short and medium term, I think we're in pretty good shape. We got the 50 basis point rate cut that we all wanted. There's no opportunities between now and the election for another rate cut. We just don't have another Federal Open Markets Committee meeting.
Right.
So we got the 50 basis point rate cut. I think that bodes well going into the election. But all bets are off once the election rolls around.
What do you think will happen in November, December? I mean, there are plenty of folks who think 25 and then more next year. Are you in that camp?
Yeah, I'm absolutely in that camp. I think we'll see more rate cuts. We'll see another 100 basis points in aggregate from where we are today, maybe 125. But net, it's going to be a boon for the economy over the next year or two.
And so with that, what's your advice to folks? I know you want to talk about a few things, real estate and private equity and things like that. But what's the big picture for investors? I mean, how do you tell them to go about making a financial plan here?
Well, I'll talk about how I think about it personally.
Yeah.
I'm really waiting on the sidelines to see the results of the election.
All right,
this is
guys,
one of
sorry.
those elections
I had to use
where,
the restroom. I had to use the restroom there.
Confident that arbitration process will affirm company's position.
All right, let's see if... Look, some of these Chinese names, I don't recommend getting short, but I'm wondering if this is going to be some profit taking in front of the holiday. Let's see here. Let's go look at Baidu. UPS isn't giving us a pullback. UPS is up 1.8%. BMT, what does this mean for this? I think this is a major level right here.
Executive says new to cruise segment up 17% during the quarter.
Watch Walmart for a pullback. Keep your eyes on Walmart here. This is a major level. Look, and it's already starting. And what this could or could not mean for the for this shutdown. Oh my God. Come on, man. I'm so not ready. I just saw that. I literally just saw that, you guys. Oh no. Come on. Go back up. 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 Go, 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 go. Come on. Fuck. So here's our daily chart. Just gotta go through the... You just gotta go through the levels. Your 20-day... 20-day moving average. Other properties. Okay, 4 hour. The resistance is up there at 81. So you have trade line. There's VWAP. Can I get your guys' thoughts? You think we pull back to 80? What do you guys think? There's only one thing that I don't like. There's only one thing I don't like about this. I think our pullback only takes us to VWAP at like It only takes us like 20 cents. And that's okay. Right? And there's your short-term time frame. Right? Showing us everything we thought.
We are sober safe to proceed with a 1-for-110 reverse stock split, Sandy Oscar Bravo Romeo.
I just don't know if you'll get 79.97. It's on. Fuck. That was it, you guys. That was it right there. That was it. Fuck. GSIW. I know I hear that going off too. If you guys could, please hit the like button. Subscribe if you haven't already done so. If you guys want to give back to the stream, if you feel like, if you've learned something, if you want to help continue to make this stream free. I'm not sure how much longer it's going to be free. I know I've been saying it for a few weeks, but, it's going to be coming. It's going to be coming. I want to be able to really help people become agnostic to up-down movements and continue to make money no matter what happens. There goes the SPY, you guys. I'm just going to take a shot on this. Alright, so I just took that pull. Oh my gosh, and it held. I'm an idiot. I'm an idiot. Yeah, it's gonna hold. All right, so I'm gonna take this back off because I'll give it just a minute here, but. That's a shame. Yeah, there's no volume here, so I'm not going to get the extension I'm looking for. We'll see what happens here. So this setup to me looks like it is setting up to break back through $72. Stock screen, holding. So yes, I am short. I do have a small position here on Walmart. It's a small position. I'm trying to get like So, there's two things you can do. You can take some of the profit off, you know, depending on if you limit ordered on it in it or not. All right. You get down to VWAP. Let's say if you get a test of VWAP here, which was Friday's high. You know, this is a nice area here. I'm going to put out an order. I've already got it for 30 cents. Oh my gosh. So, there's that. Holy shit. They're really jumping up. Oh my gosh. Look at that. 41. I kind of like this, man. I think we might have entered this correctly. Because I'm really looking for like an 80-20. I'm looking for like an 80-20. And of course it's going to bounce back.
So we are silver safe. Share is moving back near the lows now, about 6 cents after that one.
That's because everybody stepped in and tried to sell there. Instead of being, you know, cool, calm. Oh, look at the SPY.
ACB, Aurora Cannabis, at the highs now. Alpha Charlie Bravo.
Aurora Cannabis, ACB.
Up about 6.3%.
Okay. All right.
We need to legalize marijuana for the first time. Saying for the first time.
Holy shit. I don't know what to do here.
That was earlier. That's Alpha Charlie Bravo.
All right, guys. Aurora, AUB, or ACB. So funny. We need to legalize weed. We need to.
President Biden said reports of 100 dead and 600 unaccounted for after.
Oh my God. That's a shame. $626. So this level right here on Aurora, I don't know why everybody's going to, I don't know why this is the one they're talking about, but if you can get through it, you have a gap fill which takes you to 60.48, which would be 60.50. It's pulling back now. I don't know. I don't know if Aurora, I think Aurora is Canadian, if I'm not mistaken. Yeah, this isn't going to work out. Come on, Walmart. Just pull it back, baby. Pull it back. Just pull it back just a little bit. Even though you're not going to. See, Walmart's getting ready to pop, you guys. So I'm going to get out of this. I don't have faith that this thing's going to give us the pullback we're looking for. You know, technically it's not above 80.50. But, look, it's above the trade line now on the 1 minute. So if we get back above this little pivot high here, I think you got it. That's a double top. That's a clear double top. Let's see. Do we get above that? Let's go. Come on, baby. Come on, SPY. Come on, man. Rip it up. Look, they're not going to. That's wild. That's wild. Are you kidding me? Look, they're all raising their orders. This looks better now. This looks a lot better, but we don't have the volume. That's the one thing we don't have. We don't have the volume. I really want this thing to pull back to VWAP. That's it. All we're trying to do here is get a pullback to VWAP. That's it. Just give us a pullback to VWAP. Look, right there. Fuck. Come on. Come on. Right there. Let's go. Look, they're not trying to raise the bids. That's wild. It's disgusting. They should be ashamed. They should be ashamed. Is that a wedge breakdown, you guys? Look at that right there. Boom. And you just retested it? Look. Oh my God. Look at this. We've pulled all the way back here and we're still at 28. I'm sitting at 30, 31 cents. Look at look at all the 28s. Are you fucking kidding me? Bro. Come on now. Look, still 28 cents. Are you serious? Come on. What are we doing here? Come on. Oh my God. This is ridiculous. They do not want to get up off of it. I just lowered my order. Come on, baby. Come on, let's go. Let's go. Dude, they're such assholes. That's ridiculous. Fucking 28. Look, still at 28. What is going on? Why is Walmart acting like that? Oh God, that was ignorant. That was ignorant. That was ignorant. And there is the trade line. That's where she was going. Fuck. Didn't make any money on that one. That was bullshit, man. That was a bullshit trade, bro. Bro, I should have definitely had 25, 20% on that. 15%. That's ridiculous. You can't give me a nickel on 30 cents? Come on, bro. That's ridiculous. What the fuck? Sorry for the cussing. That's just, it's just frustrating when you see a breakdown like that and it doesn't like you can look at it and tell that it moves X amount and then it's just like it doesn't, they don't even raise the bids or, you know, in the ask. Straight assholes, bro. That was crazy. Alright, I gotta figure out how I'm gonna get out of this now. Now it's gonna probably start, more than likely start climbing higher and looking for that 81 level. Fuck. It's just bullshit, man. Uh-oh, watch out, because oh shit. Guys, I might get filled. Dude, what is going on here? Come on. Oh my God. Let's go, man. Come on, bro. Like, can you guys see level 2? I don't even have the chat up. I'm sorry. Can you guys see level 2 for options and stuff? Let me make sure it's live. Again, please hit the like button, subscribe, you guys. Let's get to 1,000 subscribers. Get us to 500. Let's get to 500 before we get to 1,000. I know we can do it. Just do us a big favor. Just hit the sub button. Sub it up, sub it up, sub it up. Let's go. Let's go. Raise it. Raise it. Don't have time. Hopefully, let's see. I did. I raised it. I raised it. I raised it. I'm at 30. I was at 29. I jumped it to 30. Let's go. Oh my God.
Defense Minister said the next phase of the war will begin soon.
The next phase of the war will begin soon. Just came out from Israel's whatchamacallit. So there's a second headwind right there, guys. Holy shit, that's a lot of 29.
Hezbollah claims attack on Israel using
Listen.
ballistic missile for the first time.
Let's go. Look at it. Look, Walmart falling out of bed here, pulling back to VWAP, and they're not raising the bids. That's bullshit. That's bullshit, bro. That's bullshit. That's crazy. That's so cringe. That it's crazy. It's fucking ridiculous. They're scamming, bro. They're scamming so hard on these. Should have never raised it. Oh my God. Where'd the 29s go? Now we're just going to start showing 28 30s. Where'd the 29s go? Where are they? Because I have a 29, but you're not showing it. I have a limit order out right now for 29. And yet you don't want to show it. You don't want to show it. You gotta be kidding me. Wait. Carl Quintanilla just said, Chinese stocks are having their best day since the financial crisis. Baba's down bad, bro. Baba's red on the day. A lot more than it is green from Friday's close. That's CNBC for you guys, remember. And these are the guys that are promoting some of the shit they promote. Alright, that's a buy right there. I gotta get out of this. They're gonna lower it on me, aren't they? Hold on. What just happened? What just happened? Come on, let's go. Break it. Let's go. Let's go. Let's go. Did I get filled? You gotta be kidding me, bro. What scammers, dude? Bro, what fucking scammers, bro? That's wild. That's alright, I'm filled, guys. I'm filled. I'm out of that Walmart short. Listen, that was the trade. A pullback to VWAP. That's it. And then look. Now they want to start throwing out 31s. Now they want to start throwing out 31s. Yo, you have not left a 26, 27 cent bid since I entered this. It was like 25, 26, right, when we were looking at it. And then, like, you literally cannot get this thing to move. Of course, the stock hasn't really moved that much, but it kind of has. It kind of has. You should at least get 25, let's see, 25 on the dollar, right? That's a 25 cent delta. That's a 25 delta on a 25 option. So if you go from 80, 80.50 to 80.25, guys, technically, if you went 50 cents from 80.50 to 80 and the delta's a 25 and it's telling you you're going to get 25 cents, which you paid 25 cents for every dollar. So for every dollar you should get 100%. So for every 50 cents you should get what? You should at least get 15. We're going to say 10. We'll say 10. You should get 10 cents. You should get paid 10 cents, right? So if you pay 20, you're going to get 30. Okay? For every 50 cents. If the delta's 25 cents, for every dollar, Up and down, it changes 25 cents for every dollar. And you go 50 cents. It should change half, right? You should have 10 cents at least. Hell, 8. It only gave us a nickel. It gave us 5 cents for a 50-cent move. So that's kind of some bullshit. That was some bullshit. That's why I took my money and left. We were coming into the zone. That was the trade idea. So what are we doing again? Like last week, this week, we're starting off green. Small green trade, putting it in our pocket. We're paid. All good. All right? We're paid. All good. I don't care how little. I don't care how much. It's all the same to me. Let's go back to NVIDIA. Let's take a look and see what semis are doing. They're down on the day. NVIDIA not doing too bad. It's just hanging out near highs. It is red, though. SMCI got above that level. All right, making progress. Let's look at AMD. Not sure what it's doing. Oh.
The FBI agreed to pay more than $22 million to settle allegations of sexual discrimination at the agency's training academy. 34 female recruits filed a class action lawsuit claiming they were singled out for dismissal in training and routinely harassed by instructors. A federal judge still needs to approve the payout. The FBI hasn't commented yet. And Oasis announced North American
ARM hasn't been doing so well. No. What is this? Oh, nobody.
Resale registration is currently open and general admission tickets go on sale this Friday. Sarah, I'll send it back to you. Yeah, nostalgic about Oasis. Thank you. Thank you so much.
All right, guys. So there was a nice level here. This is kind of the idea we had with NVIDIA. And that was the 145 area. It's 11:30, so
Reports outbreak of highly pathogenic H5N1 bird flu on farms
listen.
in part of the country.
Oh my God, dude! There's nothing but bad news coming out right now, bro. Germany talking about releasing some H1 bird flu stuff.
That's from the World Organization for Animal Health, reported by Reuters.
Best month since 2015. Shanghai CSI went from a 52-week low to a 52-week high in just 2 weeks. And of the 6,000 stocks listed there, 2,700 names were up more than 10%. Yesterday, China's central bank said it would tell banks to lower mortgages for existing loans. It's part of the broad set of
So they told the banks to lower mortgage. I can't play it for you. So I said they lowered capital requirements, and what that means is they want to spur lending. I think I just scratched my face. I think I just scratched myself. Anyway. Alright, what do we got here? So we have Neo. Let's see here. What do we have? Social power. Nice. Thank you guys. Thank you guys for subscribing. Right here. Okay. If Chinese stocks are a trade, not an investment, how sustainable is the latest frenzy? So 100,000 shares, 30.50. So at 130, it's 300 grand. $32 a brick wall, man. So he believes in this company, but I gotta say, guys, be careful. Sure, I think this thing could squeeze, and he will definitely be taking his money. But I'm cautious. I'm cautiously optimistic on Saba. Oh shit. I might go ahead and go run a couple errands and start getting ready. I feel like things are about to get crazy. I just feel it. I think today you guys should be prepared. Oh my God. Are you kidding me? Hold on. Look at that ball. Oh my God. Oh my God. He threw it way over him. Fuck. I didn't see what happened before that. You have to watch the run itself. Yeah, I figured if the runner messed it up or stopped. No, he didn't stop. Oh my God, that was a clean look. Anyway, I know that's neither here nor there. Wait. They want his image back in the NFL. That's cool. I mean, I don't know why people, like, why are you taking a disliking to it? It's not like people are just like, it's not disrespectful. It's showing, hey, a bunch of warriors, you know? That's one of the biggest warriors known from previous history. I don't know. I think some people just worry about other people too much. It's just my opinion. China Central Bank tells commercial lenders to start cutting rates on existing mortgages. What is that? I don't know what that is. Okay, so here we go. So NEO, we talked about NEO. Is that Nike? No. I wonder what this means for Nike, you guys, and like Apple, and like what this China move actually could mean for the rest of the world. I'm not even sure if you could quantify it, honestly. It's kind of a story that has to just play out. I think China could really help themselves out here. They just cannot ruin it. They can really mess it up themselves. If you did not take profits on Walmart, manage your risk now. Or I don't know when you're going to do it. Then you're going to be upset that you're down money and did not take your money because you didn't. It wasn't enough. It was enough. All right, 5 cents on 20 cents is enough. 5 cents on 25 cents is enough. It's 12.5%. This is a small green trade. Just take your money. Do it again. Take your money. Do it again. Take your money. You give a little bit back. Take your money. Do it again. Take your money. Do it again. You give a little bit back. Take your money. Do it again.
Pentagon refers reporters to Israel on questions about whether an Israeli ground incursion into Lebanon is imminent.
So, damn, shit's about to get real, guys. and girls. All right, let's go look at Baidu.
I think people just want to see us continue to outperform, and that's our goal, and that's what we're going to try to do. It's certainly not on cost. We actually took our cost guidance.
CAPR Capricorn up another 40% today. Charlie Alpha Papa Romeo at the highs. CAPR.
We started the year, Sarah, in December. I came on and we said, we hope our yields for 2024 are going to be up about 8.5%, and we want our costs to be up about 4.5%, which would give us about a 9% ROIC. Well, we just came out with guidance, today for the same year, and we said, what, our yields are going to be up almost 10.5%. Our costs will only be up 3.5%, and we anticipate a 10.5% ROIC. So we're making good progress.
Josh, is that reset on costs have anything to do with what some are saying fuel may do for the next couple of years?
That's actually ex-fuel, which we put into a different bucket when we talk, and certainly the reduced price in fuel is an additional support for us. But what we've seen on cost, it's hundreds of little things, just trying to be more efficient and be smarter in everything we do, sourcing savings, efficiency gains, and they add up when you have a scale the size of Carnival Corporation. And obviously, inflation is decelerating, which is very, very welcome.
When we think about route structure, is the consumer telling you they want to travel to certain parts of the world more frequently than they do right now?
It's interesting. It's been really broad-based, that surge in demand that we've been experiencing. This past quarter, both Alaska and Europe, for example, were off the charts. So it's not a matter of people retrenching, trying to stay close to home. I mean, we have that. Obviously, we sail from more home ports around the United States, for example, than anybody else. But it is incredibly broad-based. I sound like a broken record. We are an incredible value, and we are incredible experience. Our net promoter scores, what we do for our guests.
All right, let's see if this holds. Let's see if this holds. Let's see if we get some buyers to step in here. All right, let's see. Still green, 0.75%. It's a break and retest above Friday's high on Baidu. If not, okay.
We've paid down about $8 billion of debt from our peak already, which was in January of 2023.
Okay, so there's the gap. I don't know if this means anything, but bang, we're right there on it. Bang, hit him. Hit him. Hit that target.
It's the smallest we've ever had on record, which just gives us more headroom to take the free cash flow that we're going to generate and pay down debt.
That is a huge level right there, guys. This level is 101.
We've been on the sidelines for China since we restarted. It's wonderful news that they.
All right, so I don't need to go much further back than that, I don't think, on Baidu.
We've taken our assets and we've moved them to brands operating elsewhere in the world.
We can't predict every step that's going to happen here, but, we'll watch it. If we cannot get any buyers here off of this level, then I think it's pretty clear where we're going. Right? Then I think it's pretty clear because, holy shit, what the hell's going on here? This is the weirdest chart, Baidu. Dude, what has Baidu been doing?
It's going to be phenomenal. It's the first time we're building a destination that is purpose-built for the Carnival Cruise Line brand, and its brand ethos of fun. It's going to have 5 different portals where you'll have family adventure, you'll have adult areas, you'll have a private beach club. It's really something for everyone, and the beauty of it is it's going to help us in so many ways. I mean, first of all,
okay, so all right, we are trying. We're trying right now to get a little bit of a reversal. That's a mean downside move right there. Fudge. Oh my god, they want so much, bro, for like the smallest move. It's ridiculous. Like, even like a 115. Like, do you guys think they're going to 115? Like, are you serious? That is ridiculous. I'll find something else. I'll find something else to trade. I mean, I get. It's like those Walmarts are coming back. If you did not manage risk, it's another rejection up there.
Pushing the boundaries of old age, even though my kids tell me that would be true, but I would argue against that. So we have done very well. We'll continue to push into new to cruise, but new to cruise doesn't have to just be a young generation. You know, our new to cruise profile in Q3 versus last year was up 17% year over year. And it's not just younger folks, it's folks at all ages that want to experience something phenomenal which cruising has to offer. As a matter of fact, I mentioned Alaska. Alaska is a gateway for new to cruise folks because the only way you can truly appreciate seeing Alaska is with a cruise, and we do a great job using that as a feeder program to get people hooked on cruising.
Okay, Josh, appreciate you joining us as always. Stock's down with 2.5% or so. Josh Weinstein, Carnival CEO, not talking about any let up in demand. Okay, the stock had a great year last year. It's kind of flat this year.
Along with some other travel names too. When we come back, speaking of fuel, RBC's a global head of commodity strategy. Halima Croft will talk about oil on track to fall for a third straight month now.
All right, guys. I may call it here, and I'll be back in a little bit. Go run some errands. Where are we at? Where are we at here? 33 views. What? Come on, gang. We can do better than this. We can do better than this. We can do better than this.
Small business owner. You don't have time to waste. That's why you go to Biz2 Credit for funding. Our simple application makes it easy to get fast financing.
We can do better than this.
It's time for Biz2 Credit.
Is your shower trying to tell you something? Is getting in and out of the bathtub becoming a safety concern? Are you worried about the cost of a bathroom remodel that could go on for weeks and weeks? Well, now you can have a gorgeous new bathroom shower.
So like I said, I will be back in just a few minutes. I'm gonna go get ready. I'm gonna keep the charts up. If you guys have any tickers you guys would like me to keep up here, let me know. I can actually put up the news as well for everyone.
Jacuzzi has been making water feel great for more than 65 years. So you know it's a brand you can trust, and their products come with a lifetime warranty for a style you'll love for years to come. Plus, there has never been a better time to buy. We're waiving all installation costs and postponing all payments for up to 1 year. There are so many designs to choose from, including my Christina Preferred collection. Plus, we offer free personalized in-home design services to build the bath.
Let's go pull up Baba. Damn, these things are getting smoked.
Shower doors and adjustable shower heads to features like grab bars and custom seats that combine safety and style.
These things are getting smoked.
Independent for years to come. Plus, cleanup's a breeze with no grimy grout and no scrubbing. It just rinses clean. It's never been easier. Get your free design consultation, schedule your one-day installation, and start loving your new bathroom shower right away.
Call or go online right now for a limited time offer. Only weeks left to get waived.
Let's go here.
And no interest and no payments for up to 1 year. Go to jacuzzibathremodel.com or call 800-990-6845. That's 800-990-6845. Call now.
So actually, hold on.
Cancer-related deaths. Now Bioaffinity, a NASDAQ company, is commercializing CyPath Lung, a groundbreaking non-invasive early detection lung cancer test, addressing a market projected to reach $4.7 billion by 2030. Bioaffinity's innovative lung cancer test, CyPath Lung, has the potential to improve the survival rate by finding early-stage cancer. Bioaffinity, stock symbol BIAF on the NASDAQ.
Every day, I'm reading extensively, I'm checking the markets throughout the trading session, working the
doing my own reporting to share insights, information, and all of the details that you need to be able to make money.
October 1st, join CNBC's Evolve in New York City as industry leaders break down AI and how new technology is giving them a competitive edge in business. Register now at cnbcevents.com/evolveai.
So what you have here is a gap fill. Just want to make sure where are we at? Let me pull this up right. Here we go. Right there. You guys can see this little.
Thank you for having me.
How stable is supply?
I mean, look, we have two wars going on at the moment. We've had a massive ratcheting up in tensions in the Middle East, and yet oil to date has not been affected by either conflict in a material way. I don't think we should take our eye off the ball.
Right there.
We still have the prospect of a potential ground invasion of Lebanon by Israeli forces. The Iranians are still sitting on firepower. The question is, will they enter this conflict? But for now, market participants are like, call me when there's a disruption. I'm going to focus on China. I'm going to focus on potential more OPEC barrels.
China meaning suppressed demand.
Chinese demand. I mean, that has been the underwhelming demand story that really hit the market. And on top of that, there's a prospect of potentially more OPEC barrels coming on the market with that FT article last week causing a little panic that we could get back to a 2014 situation. So what do we think Iran is going to do?
Damn, she's extending.
No appetite. They talk a very
Yep, give us that pullback.
We'll stand by our allies in the region, and yet they have not shown any appetite really to get involved in this conflict. Yes, they did fire those rockets in April, but that was not seen as their desire to really get involved. Allies in the region, and yet they have not shown any appetite really to get involved in this conflict. Yes, they did fire those rockets in April, but that was not seen as their desire to really get involved in a full regional war. They want to reestablish deterrence, but they also have a president that was elected on improving economic ties with the West, essentially seeking sanctions relief. And for now, the Iranian supreme leader is essentially saying, Hezbollah, you're kind of on your own on this situation.
So is that why oil is not reacting? Because Iran is not?
Right, because we're not even seeing, Sarah, what we saw in 2019. Do you remember when we zeroed out exemptions from reporters of Iranian oil? And the Iranians basically said, if we can't sell our oil, no one will be able to. And we had attacks on tankers, key pipelines, and then we had the attack on Abqaiq, the world's largest oil processing facility in Saudi Arabia. That was a moment where Iran looked like they had a lot of firepower to disrupt oil supplies. Now they really haven't gone after that infrastructure. What I think is a key question, though, is what are Israel's intentions? Do they stop at Lebanon, or is there a more direct path to Iran? Is this the moment where the Israelis say, we have a window where we can basically set back this nuclear program? We potentially want to go after the Iranian economic assets. I think that's the bigger wild card. Is Iran really in the line of sight for Bibi Netanyahu?
Meanwhile, how should the viewer best think about what's going on with nat gas? As we're looking back to June highs, even further back?
I mean, nat gas has really become an interesting weather play. I mean, what's an amazing story, again, we talk about the sort of war scenario, is remember, we're going into now multi-year anniversary of the Russian invasion of Ukraine. Remember we talked about a potential winter of discontent in terms of energy markets. We have not seen, even on the nat gas side, that some of all fears materialize. So it's so interesting that we have two wars going on involving potentially both oil and natural gas, and it's really not impacting prices.
Although, I mean, you see here, I mean, we're getting close to, what, some 4-month high, something like that?
We are getting close to 4-month highs.
But you think it's about the season we're going into?
Yes, and also, you know, if you talk to our nat gas analyst, does he think we've potentially, like, topped out for now? That's one of the...
That's so weird. Look, you can get out at a higher price than I got out and get a better price. That is wild. Walmart's playing around, bro. See, we got this move down to VWAP here. So technically, it should have paid more. Technically, and I'll say why. At the time, there was more time.
At Capital Group, we believe in the potential energy of fixed income.
It's not the low a day, but I don't know. Unless they just had to fill all the orders to get everybody out. Like, that's crazy. 33 cents now? Like, what? That's crazy. We were getting out of this here at VWAP, and then it pops back, pulls back, and now you, like, it just doesn't make any sense.
Our advanced matching helps find talented candidates so you can connect with them fast. Visit Indeed.com/hire. Okay, ready to watch this? 1 second, I gotta finish my laundry. Yes, it's Asma. 1 second, I use rinse.
Alright, like I said, guys, I'm gonna go, I'm gonna go run a couple errands. I'll be back in a little bit. I gotta get ready, then I'm gonna go. So good luck to you for the rest of the day. I should be back here around 2:30. Alright, I'll be back in about 2:30. I'll let you guys know before I go what I'm seeing, what I like. You know, this is a nice, the only position I took today was a Walmart short. Not short, I should say. Walmart puts, okay? Another rejection up there at 80.50.
The governor.
Alright, that 80.50 rejection, we were looking for a move back down the VWAP trade line, and now you're getting the extension, which is actually wild. That is actually wild. So, I did not think you had the volume to get this move. Please take your money. Please. If you took this with us, please take your money. This is a nice trade. It's a nice, easy trade. Let's see. If you bought 20 contracts, all right? So do the math. 20 times 25 cents. Let's do the math. All clear. 20 times 0.25. Okay. How much did you spend?
So he's now bringing on prominent AI researchers, including Stanford University professor Fei-Fei Li, to develop workable guardrails. And he listed a number of AI-related bills that he has signed
year, including watermarks for AI content and giving creators more control over digital replicas. The vetoed bill, though, guys, it had much bigger
What is that,
ambitions,
500?
third-party testing, whistleblower protections, and requiring
So
companies
25.
to have a code switch for their models. Those against the bill said that those standards were too ill-defined and they could stifle innovation. Many also argued that
All right.
state-level legislation could create confusion and complexity for developers.
So that was 500, and you got 25 to 30.
California Senator Scott Wiener, co-author of the bill, called the veto a setback for AI accountability and noted Congress's, quote, continuing paralysis around regulating the tech industry in any meaningful way. The one thing I will say,
Report Pfizer PFE intends to sell about 540 million ordinary shares in Halion, HLN.
the big question is whether the industry can police itself. And you look at other innovation, other ways of technology.
Shares in Halion dipping slightly on that report. I'll tell him in November.
It should be done at the federal level, something that even Senator Wiener has said, but the reality is what he calls paralysis at that level. It is so hard to get things through. So what California could have done with this bill, and may still do, by the way, is a blueprint for the rest of the nation. It will affect companies that operate here, not just based here. So in that sense, it would cast a wide net.
Meantime, the industry continues to charge ahead. There's the OpenAI for-profit model news. There's the Copilot event, the Meta event. It just keeps moving.
It's moving at such a remarkable pace, which is why even if you sort of try to legislate this, it's moving so quickly. The big model versus little model, that's something that's constantly changing as well. There's questions for open source, which is developing at a rapid pace. So this is certainly going to stay in the headlines, guys. We'll see if the lawmakers can move fast enough to keep up.
We appreciate that. Dirty Voice with Tech Check today. Meantime, S&P trying to hold its losses to about a point or so. Of course, we got Powell coming up in a couple hours.
Powell 155 is going to be speaking, a National Association of Business Economists. The big event, though, is the jobs report on Friday. We just heard from Powell. I mean, he has some new data that shows the economy is not falling apart by any stretch. And the odds of a 50 basis point, another double cut in November, have moved above 50%, but just a little bit. So kind of still a coin flip.
Wheat ETF WEAT getting a pop here. The USDA data out now.
Carl, thanks so much. Welcome to the halftime report. I'm Scott Wapner, front and center this hour. The quarter ahead. As stocks get through September without too much trouble, so we'll ask the committee how to position now. Joining me for the hour, Steve Weiss, Sarat Sethi, and Shannon Sakosha. We will check the markets. We are in the red on the S&P and the Dow today, but it's a bit of a mixed picture. Shannon, I'm going to give you the first crack at this. So it's the
CAVA, Kava Group shares moving to the lows, 120.61. Charlie Alpha, Victor Alpha.
We expected September to be a little bit rough, Scott, and so I think a lot of that is being pulled into October. We've got about 4 weeks ahead of an election that's going to be pretty contentious. We've got a very important jobs report on Friday. But similar to last year, and we started having this conversation sort of at the end of October last year, obviously not the end of September, but you start to look out and there's, the number of events that could potentially upset or be a negative catalyst to this market, start sort of ticking through those and counting those down. I think what we've seen is that we've seen the Fed be a little bit more aggressive perhaps than some of us thought, but yet it doesn't seem like any of this secondary or tertiary data that they're being given to digest really shows that they did that as a result of a greater deterioration in the economy than maybe they were anticipating. And so we've got the jobs report coming up. We have another month of what's likely to be pretty contentious campaigning from both of our presidential candidates. And we have some questions outstanding in terms of what's happening outside of the U.S. Could that impact
Yemen's Houthis say they will escalate military operations in response to Israeli attacks.
And if this market continue to have some strength, I think that what you're going to see is really positioning for 2025 rather than trying to make a lot of big moves into the end of 2024.
Joe, let's just keep it simple, okay? That's what Tony Pasquarello says we should do. Quote, an attempt to not make the game any harder than it is, I'll reduce everything to this. The Fed is...
Joe, let's just keep it simple, okay?
Sorry, I was just eating. Let's see, 500, 250, 50%. I don't know. 10%. Wasn't much. That was on the low range. But
than what I've been advocating for on the network, which is stay high up in quality, stay with the large caps. At that point, I probably have to react and be more open to owning some of the lower quality areas of the market and small caps themselves.
All right.
But overall, you want to own stocks.
Weiss, so the best of the best, right? We know some of them.
Yeah.
They're always able to take sort of everything in front of them and distill it down to the most important couple of things to keep your eye on. Pasquarello seems to be doing that here. Yeah, he doesn't even mention the election. I mean, it's not like he's not thinking about it. He's not letting it cloud his view of where we should be. It's just a bottom line business. Fed's easy. Economy's good. Let's play ball.
Yeah, so I agree in general with what he says. I mean, I do think it's an upward trending market, but it's never, ever that simple.
Oh, he doesn't believe me. I've simplified it.
Right. No, I know.
What he said.
I get Tony's stuff.
He's not.
I read his note.
He's not doing that. But you could look at everything, all 30 things that were on the list of thoughts and ideas and this and that, and you can distill it, as he tries to do, to those two factors.
Well,
easy policy, good economy.
I reviewed all the economic data for the last couple of months, every single report, and I would tell you it's more mixed than that. It's not, you cannot conclude without any fear of correction your thought that the economy is in much better shape and is trending higher. You just can't do that. One of the reasons is you saw the inflation reports. They were somewhat disappointing, and the knee-jerk reaction was they're disappointing. But the big thing and the big unknown is the consumer. And right now, it's not all that unknown to the big banks that see the credit card results. There's a difference of opinion with Visa and MasterCard, but they're definitely in different businesses, right? Credit quality is not really an issue for them. It is for the banks. And what they've said is that consumer is weakening. And what they've said is that consumer household debt is at the highest it's ever been. So those are issues. We've heard from the auto companies, and Sarat will talk about this in a little bit, that things are weakening. Consumer still drives 2/3 of the economy. So again, for Joe, I've got some questions. I was unsure as to what you were saying. If we get a strong jobs report, then you're going to be forced to you're going to look at going to the lower quality.
No, if you get a strong jobs report, you have to be open to the premise that the market will begin to allocate in lower quality areas of.
Okay, but let me ask you this: that if you get a strong jobs report, then it's unlikely the Fed goes 50. They'll go 25 because you don't start with 50 and then do nothing.
Look, I'm not excited about going to low quality areas of the market or small caps themselves, but I don't need the Fed to go 50. I look at Friday's report this way. If it's a weak jobs report, then you're talking about the Fed coming in with 50. If it's a strong jobs report, the Fed comes in with 25. I don't know that either one of those scenarios are bad.
But here's my point. The simplest way in this market, the simplest way to make money on an enduring basis is buying quality. Buy the quality names, stay with the quality names, and sure, they may underperform in September like we saw, but overall, you'll do much better off, unless you're a trader.
Sarat, Piper Sandler says today, we believe October will be more of a treat than a trick for investors. We believe pullbacks within the context of the long-term uptrend should be viewed as buying opportunities. Canaccord, don't fight the Fed. It's an opportunity, they say, to position for a fourth quarter rally, which they say is possible. I think most would agree with that. What's your view?
Look, I think September, when we talked about this in August, everybody was, hey, look at September, it's going to be really bad. Well, September wasn't that bad. So now the question is, how do we go into this for year end? I do think there's opportunity in the market. The economy is slowing, to Steve's point. We have to look at employment. We have to look at housing to see where they're going to be. And I think there are going to be pockets in the market. You have a tailwind with global central banks now cutting rates. So I do think you're going to have opportunities there. And I am more bullish than I am bearish.
Okay, so let's talk about positioning. As Canaccord, as I said, says now's not the time to fight the tape, but they present this as an opportunity to position for the potential of a fourth quarter rally. So on that note, Shan, I want to know where we should position. Pasquarello also points out that in this quarter, which is ending today, the character of the market changed, but the direction of the market did not. You look at the equal weight S&P, it's up 8%. Cap weighted S&P is up 5%. That's because mega cap tech didn't perform as well in this quarter as it did in prior ones. Sector winners, okay, utilities best in the quarter, up 18%.
Oh my God.
That's the best quarter since 03. It's a new high today. Real estate's up 15. Industrials 11%. That's a record high. Materials and financials round out the best 5 sectors of this quarter. Technology's picking up the rear. It's only up 1.
Bro, that's not good. Oh my God. And I have not had kava. I haven't even had kava yet, so they're going to ruin it before I can even have it. That's so fudged. Keep kava on your list here, everyone. Okay, keep kava on your list here. This is not a good look. This is not a good report. Alright, so you're seeing here something being posted on Twitter. I would say I would like to put that level right there. There's this level here. I don't know what level I have up. I mean, that is a 125 is a level, but reject. Holy shit. This is not good. This is not good, guys. Okay, there we go. That looks a lot better. Okay, so if you break 120, I think you got to look for this thing to pull back further. Keep your eyes on kava here with this news that just came out. It could be fake. I'm sure it might be fake to an extent. I don't know. I don't know. Okay. But I will say it will definitely turn people off. Just the thought that something might happen. Okay. Crazy gap fill here too. You just rejected the 20-day moving average. I might do it. Let's go read some. Let me read some more into this really quickly. And I may be taking this trade. I may take this. If they haven't already ruined it. Alright, this is a support level. Alright, you're below it. You're rejecting it now. You're See, this is how I'm looking at this. We're bouncing into the 20-day. Let me actually make this darker. Alright, so despite these issues, Kava's growth has been explosive and legitimately impressive. The company opened 72 new restaurants in 2023, growing to 340 locations nationwide. Last quarter, net sales grew by 35%, 233 million. This growth has sent the stock soaring over 400%. Okay, that's the point. This thing needs a pullback. We need this thing to get a pullback for others to buy this. This could be a catalyst to go long. But I'm going to tell you right now, we're not going to be worried about this picture or talking about this. Like, sure, you might bring it up or talk about it, but who's to say if it's true or not? I don't know who Hunter Brook is. I don't know anything about him. I'm not saying that they're false. Accountability, visibility, no ads, no paywalls. Send us. Okay, so an FDA 483 inspectional authorization was not issued to firm management during the previous inspection, but the inspection was classified VAI because 7 environmental samples taken during the inspection were positive for Listeria, some monocygenus, I don't know, monocygenus. 6 items were discussed with. Okay, I feel like there's a frog here. They're showing this fly, but why are you showing us a frog? Are you showing us a frog because it was in an area and a random frog just jumped into like the food and they had to throw it out and make new? Or I don't get it. Hold on. Sanitary inspection upgrade. Sanitary inspection upgrade or grade C. All right. C for Kava. Okay. Oh, so here we go. The investigation found far more frequent sanitation issues in Kava's New York restaurants. Oh, it's, yeah. Then competitors like Sweet Green, Chipotle, or even McDonald's or Burger King. Oh, that's no bueno. FDA documents reveal questionable food safety practices backed up by anonymous reviews from former employees. Over 1.6 billion in insider stock sales this year. An olive oil blend branded as having been picked out by an olive oil sommelier from Greece that is actually mostly seed oil. Kava secret menu hack, filthy flies, but let's see. The Kava wash. Okay, so they're, oh my god. See, that's what I thought. There was a frog that got into it. You know what's crazy is somehow a little ass frog, because there's been a lot of rain and stuff, found its way in the house. Literally. Never seen it before. But I'm like, yo, what are you doing, bro? So he must have got in somewhat, maybe the dryer vent. But still, the point is like, well, like, unless we have an official, like, okay, I don't know. Like, could this tarnish it for a little bit? Sure. But this isn't being, I feel like this isn't a reliable source. I'm not saying that they're not reliable in the information they're giving. Like here's my point. You're showing a video with a frog from a location that a frog got into something. Okay, cool. It's in there. You get rid of it. It got in there. Get it out. Okay. Especially around times where, wait, why did it bend? Is that AI? Hold on. Is that AI, guys? Hold up. Look at this. This might even be false. Hold up. Look right there. Hey, no. You see how this thing bends? Right there. Look. See how it just bent itself out of shape? Yeah, this is fake. Yeah, look at the leg. Like, it's twice as long as its bot. That's so weird. Watch. Like, it doesn't even move correctly. It's not going to play. I don't know. You got to take it upon yourself. Just watch the 20-day. Yeah, like, look. The whole thing right here from... I'm not saying that it's not real or that it's, you know what I mean? I'm not saying that this isn't real or that this is fake. I'm not just saying it. It's just weird to me, the movement there.
No, I think the outperformance is going to be in some of the other areas. I don't think these stocks are going to get killed because people are hiding in them, but I don't think you're going to get
Like, I don't see how this back leg right here.
I don't think they're going to outperform the market. I think they're going to do fine.
It's not going to. Right there. Look, you see how it brings its leg in? Maybe it, I don't know. That was just, it was just weird. Okay, why are we, I don't know. Oh my goodness. Sure, New York, some places are dirty, especially if you get a couple teenagers working there that are lazy. I think you need to take this for what it is and just watch the chart. This isn't, I still haven't been to a kava. I have 40 minutes away. Should I put on an audiobook and take a drive, or not worth it? If I do, what should I get? It's just, dude, I'm literally... I don't know. I'm not even commenting, but you guys get it, right? Ouch. Would be like driving 40 minutes to try to talk about. That sucks. I mean, we could only hope that it gives us the pullback we're looking for. So that's my thought. I think you have a location where there might be a couple of lazy workers. Unless there's something more here. I don't know. I don't think so. Walmart's at 33 cents. Nice. There's no way I could hold on to that. There was no way. Again, I'm just finishing some crackers real quick. And I'm going to go run out. Bro, come on. So that's 2%. Obviously. Obviously. I will say, Kava's been in a downtrend. I mean, I'd argue it's in an uptrend, but the past few days from last week, it's been in a downtrend.
Sentiment and positioning, we're in the perfect place for this to have a little
little bit more durability than just what I've heard a lot of people say, which is this is a trade. No, and I think it's a long-term trade. And I think the way you're getting it, look, the way you're getting exposure. I mean, I know I'm looking at it. I'm saying to myself, what do we have in the ETF that gives us the exposure to this monetary?
I've heard a lot of people.
No, I think it's a long-term trade.
And I think the way you're getting the way you're getting exposure. I mean, I know we're looking at. I'm looking at it. I'm saying to myself, what do we have in the ETF that gives us the exposure to this monetary and fiscal stimulus? Right now, it's really just one steel name. But I think you're going to get exposure with companies here, domiciled in the U.S., that are going to benefit from doing business in China.
They're the ones that's why Weiss started the conversation. Now he's looking at CAT. CAT's up a lot since the news. Freeport is up a lot since the news. Wynn, Las Vegas Sands got pops immediately on the news. Irrespective of what these stocks are doing today, you can look at the chart from the announcement.
I mean, you will get global companies getting it, but I think the commodities, we've talked about commodities before, where we're buying tech resources in Freeport based not on what China's going to do, but based on supply demand. This is a huge tailwind to that. So you can add the steel stocks in there, the copper, the aluminum, and the margin for them. I mean, just turning the switch gets their earnings up so much higher than kind of moving a big ship.
Let me ask you this before we take our break. How long have you owned General Motors before last week?
Too long.
How long?
Over 5 years.
Over 5 years?
It's been a horrible investment.
So, what made you finally sell it?
When it was 48,
you sold it last week.
I did sell it last week. $48. When you look at what's happening, I mean, I didn't know what was going to happen today, given Stellantis and all the others, but the consumer's slowing. You've got a huge amount of supply of autos. It's not just GM. It's Ford. It's everybody else is coming there. I just think you've got peak earnings there, and they're reinvesting so much money into products we don't know if they have a return on investment. So I made money this year. I lost overall to the market, but I'm kind of taking the money off the table and saying, hey, I really don't want to see the stock round trip in the 20s and 30s again.
Did what was it, a week ago or so that Jonas at Morgan Stanley, he downgraded a bunch of these names, I think General Motors included, correct?
General Motors, Ford, yeah.
Was that the nudge?
No, we were looking at this before that as well, and that just confirmed where we're going, and now you're seeing even more information coming.
That is insane.
Autos are a really tough place, especially as the economy.
Am I the only one who thinks like she looks too old? Okay, like that looks normal.
GM General Motors,
Bro.
on CNBC says he's selling GM Golf Michael.
Wait. FabFitFun. Bro, I was going to say, that's 2020. Wait, what are we doing here? So Dave follows her, but she just doesn't... James, what? Best times, should we see what she's up to? Now I go from Kava to Kristen Cavallari. And okay, so let's see if they've said anything. Oh my gosh, they have the hippos on here. That's so funny. Oh my gosh. Me but with garlic dressing. Oh my god. That's so funny. My rice was very undercooked and hurt my teeth yesterday when I was trying to eat. Okay. So they haven't responded yet. To plus size guest. What are you trying to say, Eunice? What are you trying to say?
Autonomous quality regulation.
Starting a little white family, huh? What, you think you moving in? Oh, you white now. Don't make this a Kendrick Lamar versus you. Or me being like Kendrick to you. No, I'm just playing, guys. I'm just joking. I know I'm a nut, but... not like us. I forget the word that they call it. But... alright, obviously just a joke. Anyway. Eunice is white now. I mean, she might be white already, but like, I don't think she is. I don't know why she. There's a lot of Spanish, like, I don't know. Let me not say nothing. I can't do it. Alright, so a new investigation found that almost 20% of Cava locations in NYC had a C Health rating, almost 8 times the city average. Compare that with nearly 0 for Chipotle or Shake Shack, who have many more locations. The gnarly citations below mention 7 species of flies. Okay.
Israeli troop positioning suggests that a ground incursion into Lebanon could be imminent. That's from a U.S. official speaking to Reuters.
So you have more headlines about war in the Middle East. I mean, it's just what you get. Higher taxes to pay for war in the Middle East. Let's see here. I mean, again, this is just a couple of locations in New York, but okay, so she had to stop throwing everything in a bowl and actually just eat like a normal person to like her food. I've been short Kava since the top. I think it's going to be a very profitable way down. To be fair, I like the company, but if this holds true, I won't be buying the stock until it's $10. Holy shit. Well, boo this man. Alright, so what's this say? And other diuretic fallout from casual chains rapid growth. Okay, so they're saying the flies took a bunch of dookies in the food. That's what they do. Oh my god. I cannot think about this. Is the food that good? Mom and CPA. Well, this is weird that this is the avatar. Not one chart. Look. Not one chart. I don't understand. She's stuck in that. So weird.
That hasn't worked. So the ETF has stayed kind of high up in both the quality and momentum spectrum. We own Eli Lilly, we own Intuitive Surgical, we own Stryker, and they've all worked well. I'm concerned about Lilly because now. Lilly, we own Intuitive Surgical, we own Stryker, and they've all worked well.
See, I'm concerned about Lilly because now you are seeing real pricing wars in weight loss drugs. And so what happens if Lilly's got to come out as the leader in the group, I mean, the overwhelming leader, and say, hey, you know what? We got to cut estimates because our margins aren't going to be what they were, what we forecast. So I think that's a real risk to the group.
All right, Contessa Brewer has the headlines for us today. Hi, Contessa.
With a port strike imminent from Texas, the International Longshoremen's Association alleged today that the United States Maritime Alliance is continuing to refuse the union's demands for a fair contract. In a statement today, the union said its wage demands are still not being met. It says its 85,000 members will hit the picket lines at midnight. The medical records of vice presidential nominees J.D. Vance and Tim Walz at the VA were improperly accessed this summer. Department of Veterans Affairs investigators found at least a dozen agency employees got into those records. That breach is under criminal investigation. It's not clear whether Walz or Vance's health records were shared more widely. And Basketball Hall of Famer Dikembe Mutombo has died. The NBA Global Ambassador was one of the NBA's greatest shot blockers. He rejected more than 3,000 shots during his 18 seasons. He died surrounded by his family after a battle with brain cancer, according to a statement from the league.
Oh no, that's sad because he just did a commercial.
Yeah, sad one. Contessa, thank you.
Sucks.
Contessa Brewer. Up next, hunting for yield. Investors driving one area of the market to an 18-month high as they look for ways to play future Fed rate cuts. Our Pippa Steve.
You guys cannot hear me. I'm sorry. I'm running to. I'm going to go run a couple errands really quickly. Give me about 45 minutes. Give me about a half hour, 45 minutes. I'm going to brush my teeth. I'm going to go make my run, and I'm going to be right back. I love you guys. Hit the like button, subscribe. We'll see you guys in about 45 minutes.
Welcome to Reinvented with Accenture. I'm speaking with Carlos Torres-Villa, Chairman of BBVA.
Embedding change as a value in itself to fight the status quo.
This idea of continuous reinvention, I think, is really important. It doesn't end.
It does not end. Having a vision, conviction, the courage to make bold decisions until you see meaningful results.
Stocks at Night.
We are back. Pippa Stevens has today's ETF Edge. Hey, Pippa.
Hey, Scott. Active management and income generation have been two hot topics in the ETF universe lately. But adding one more element could boost returns even further. Joining us now is Jay Hatfield, founder and CIO at InfraCap. So, Jay, you run the Virtus InfraCap U.S. preferred stock ETF. It's up almost 20% for the year, outperforming its competitors. How does it work, and what's driving that performance?
Thanks, Pippa. It's great to be on. Well, the thing about preferred stock, first, just generally, they're great asset class. They're public companies issuing securities senior to common with low 30-year default rates. So we start with a pretty good universe. And then it's important, though, to have active management because you have to manage call risk, interest rate risk, and credit risk. And so we're curating this portfolio. And when it changes and becomes, for instance, goes above par, when preferreds go above par, we sell them. Then we look for other more attractive preferreds.
All right, so sticking with that, let's look a little bit closer at your top holdings. That would be Sallie Mae, Regions Financial, and Energy Transfer. So what are you looking for specifically in a preferred stock? What really stands out?
Well, where we've really added a lot of value is the rating agencies actually don't like asset-intensive businesses that pay substantial dividends because they do long-term forecasts and they don't delever. But those companies, we think, are actually great credits. So utilities, pipelines, so Energy Transfer is a pipeline. And recently, we've added to financials. Regions Financial was a new issue. Because with new issues, we have a big advantage over the index funds. We can participate. We buy them. They're usually slightly underpriced to induce investors to come in. And then they get added to the index, and then we sell them. So we actually had a bigger position in Regions Financial. Now it's trading 6% above where we bought it. We're selling it to the index funds. So we like asset intensive. We will do financials, but if you look at the index, they're about 60% financials. They can be good credits, but they're either good or bad. I mean, obviously, First Republic was A-rated 2 weeks before they went bankrupt. So we look very carefully and are very selective about what financials we participate in.
And zooming out, you have a 6,000 forecast on the S&P and say that the risk to that target is mostly to the upside. How much of that hinges on the Fed's rate cut path?
Well, that's part of our case is a Fed rate cuts, but not just the Fed, really global central banks. What U.S. investors tend to do is ignore the rest of the world, which is fine when it comes to equities, but not a good idea when it comes to bonds. So the fact that not just the U.S. is cutting, but you saw China cut, likely to continue to cut. Europe has to cut. They're way weaker than the U.S. So it's not solely based on the Fed, but it's nice that the Fed did move. It gives leeway to the rest of the world to cut. And that's going to likely to drive both world bond prices higher and stock prices. And that's why we're bullish.
All right, lots to watch there. Thank you, Jay. And we do have much more on preferred stock funds and other income generators coming up on ETF Edge at 1:15 p.m. Eastern. Jay will be joined by Todd Rosenbluth, Director of Research at TMX Vetify. That's all at etfedge.cnbc.com. Scott?
All right, Pippa, thank you. Pippa Stevens. Still ahead, we got the quarterly report. We're going to go through what's working, what's not with the committee, get to that Joe trade as well when we come back.
You got this.
All right, let's do this move from Joe. You bought EQT, and you did it this morning. Why?
Back in EQT once again, all I've needed to get back into this name is an incremental positive performance for natural gas prices itself. It begins there. This trade is not about natural gas pricing itself. This company's up 267% in the last 5 years, while natural gas is only up 27%. This is about power demand. This is about the need for data centers to utilize electricity, and natural gas is going to be critical in that. We've seen significant replacement, coal to natural gas. I think that's not going back anytime soon. EQT is perfectly positioned to the Virginia data centers, and that's going to allow them to really profit over the next several years. This time, I think I'm going to hold this position.
Okay. Okay. Let's talk about some winners and losers for the quarter. We said last day of September, last day of Q3. Sarat, PayPal, it's woken up. It's up 35%.
This thing took a while, though, but you've got new management team there. They're focused on really increasing their earnings, increasing on usage. The stock's got a run. There's got momentum behind it. I like it.
Illumina is up 25. Blackstone's up 24.
Yeah,
in the quarter.
Illumina finally resolved the Grail issue, so they do have good products. New management team. I think that's going to be good. Look, Blackstone, KKR, Apollo, these are all great ways to play asset allocation that's happening in all the big wirehouses. I think the tailwind behind these companies is huge. Not only do they have private equity and real estate, but they've got all the distribution too.
Of the losers on the list, Qualcomm's down 15%.
Yeah,
you sticking with this?
I am sticking with it. I mean, they had a great run before that. I still like where they are. Apache is one that's on my watch list that I think might be probably coming off, and LabWest has earnings tomorrow, so let's just see what they have to say. They got a little bit ahead of themselves, and the stock got crushed.
Weiss, you've been adding to Vertiv, and it's up 14% in the quarter. Leidos is a new record intraday high. Today, it's up 11% this quarter.
Yeah, Leidos still has a long way to go, as does Vertiv. Vertiv, of course, the cooling racks for data centers. Joe just mentioned them. Growth there is just exponential. Leidos is, you had new management come in about a year or so ago, and they've just done a phenomenal job, and I think it's a cheap stock.
Now I'm gonna give you the business. What's up with QXO, man? You keep singing this company's praises.
You
the
love
management.
Brad Jacobs.
Okay, so let's go through the facts.
No. Let me give the numbers first. Sure. Let me give the numbers first. Yeah. It's down 78% in the quarter. It's the third straight quarter of double-digit declines. So what's happening here?
Yeah, I don't know who the fools were buying the stock at 100, 150, 200. I got in at 914 on the pipe that they did, and so I'm up nicely. I added to it at 11, and I added to it at 13.
Okay.
So when it's trading, it's, look, they've still got to announce their first acquisition, still trading roughly 2 times cash, but I don't know what people were thinking about when they were buying it at those levels. It was asinine. They should do some mental.
But you're as bullish today on QXO and Jacobs as you were when you bought it at sub 10?
I am. It's going to take a little while to play out, as I said then, but he's consolidating the building products industry, adding technology, same game plan he's run with those other industries like United Rentals, waste management, trucking, third-party logistics. So yes.
Okay. All right. Santoli, he's next after this quick break.
I today am very proud that I have that seat at the table as such an iconic brand like Starbucks, and the importance of what it is for us as a community as we look to be the second largest community and culture in the United States. For me as an individual and those that have that seat at the table today within our heritage and within our Hispanic community, we have to continue to set that example and be that guide and that mentorship of what's to come. I'm very proud of that.
Insurance.
Our senior markets commentator, Mike Santoli, is here at Post 9 for his midday word. You lay out today, as we make the turn here for the final stretch, the burden of proof is on the bears, decidedly.
Yeah, you would just look at the prevailing tailwinds. Obviously, the Fed cutting rates into an economy that maybe was not as fragile as we thought it was a few weeks ago based on the data we got since then. Obviously, China coming in, but also Fed cutting rates into a corporate earnings upswing, not the common pattern. You know, you can go down the list of more of the technical stuff of when you've made a new record high in September, it was almost never, or maybe literally never, the ultimate high for the stock market. So all that works together, I guess. And the pushback would be, haven't we just priced in the soft landing already? Aren't we already almost 22 times earnings? How much can you really expect to get incrementally from there? And also, can the market continue to perform as it has the entire third quarter without the distinct leadership of mega cap tech as a group? I mean, it's been managing to do that, especially over the last few weeks. And the question is, does it just get a little bit too erratic and unreliable as you have these markets trying to make it work with cyclicals and financials and not just the NVIDIAs of the world?
But, I mean, this is what you would want, right? I mean,
it's what most people have wanted,
equal weight
for sure.
up 8%,
Yeah.
cap weight up 5 in the quarter. This is, hello, like,
No,
that's what we've been waiting for.
That's absolutely right. The question is whether you have as much open-ended upside to valuations when it's not secular growth stocks that are leading. But that's absolutely true. It's answered a lot of the complaints of the first half of this year. Credit continues to flash the green light. So, yeah, it's hard to find too much fault outside of valuation and standard October pre-election seasonality stuff.
All right, good stuff. I'll see you on closing bell. Finals are next.
Your name again?
done your homework.
Well, with Dan Greenhouse today, Roger Altman, Brian Belsky as well. He has the highest target on the street, remember, so we'll kick that around. Ryan Dietrich joining us too. Shen, what's your final trade today?
Financials. We anticipate that there's going to be an increase in capital market activity in 25.
All right, good stuff. Thank you for that. Surratt, what you got?
American Express got a great tailwind with the consumers, high-end consumer spending. I like the stock.
All right, Weiss?
I'm going with Vertiv. I'm going to stay there. It's got a lot of upside.
All right, stock you've been buying, as we said. Good performance. And Jyoti?
I love the e-commerce thesis. You go with Amazon, you go with Mercado Libre at today's final trade, which is Coupang.
All right, we will see what this market does. Maybe we can finish positive to end the quarter and this month. I'll see you on the bell.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead. Tensions in the Middle East are reaching a fever pitch. Israeli Prime Minister Netanyahu warning today that nowhere in the region is out of Israel's reach after expanding strikes in Lebanon over the weekend. Iran is vowing to retaliate. President Biden insists an all-out war, quote, has to be avoided. One overseas market is flashing some signs of hope. Is a ceasefire now more likely? We'll discuss. Meanwhile, Hurricane Helene wreaking havoc here at home with more than 2 million people without power in the southeast, and hundreds of road closures are making the delivery of supplies virtually impossible. We'll have the latest and how each presidential candidate is responding to the disaster. Plus, we're just hours away from that potential East Coast port strike, what it could mean for inflation, for the supply chain, of course, and even for your wallet ahead of the crucial holiday shopping season. Before all that, though, let's start with the market action. We'll hear from Jay Powell later this hour, by the way. In the meantime, Atlanta Fed's President Raphael Bostic moments ago said he's open to a half-point cut if the labor market remains weak. Dom Chu, how are markets taking that?
All right, so the markets are taking it relatively in stride. We're off the best levels of the session, but we're off the worst ones as well. In fact, we're pretty much flat for the major S&P 500 broader kind of measure. Again, down 1 point amid those comments and other comments by some Fed speakers. The NASDAQ composite is marginally positive, just about flat again, only up 11 points to 18,130. The S&P 500 is at 5736, again, pretty much flat, just down 2 points. We were only up 5 points at the highs of the session, down 14 points at the low. That's your trading range. The Dow Industrial is the real underperformer, down about 0.25% to 42,187. It's good for 125 points to the downside. Another place to keep a close eye on that's not been doing anything modest at all these days has been the Chinese market. The Shanghai Composite Index, that broader index, is up 8%. Its best one-day gain in roughly 16 years at this point. The Shenzhen Composite, that tech-heavier NASDAQ equivalent, some call it, in China, it was up about 11%. That's its best one-day gain in roughly 26 years at this point. The Hang Seng in Hong Kong up 2.5%. The China Large Cap ETF here in the U.S., though, now down 0.25%. It was much higher earlier. And the Crane Shares Internet ETF, KWEB, is up about 1.33%, also off its best levels of the session. So, yes, that trade overseas was big, but the ETFs that track them here have surged and then given some of those back. So keep an eye on that trade. And then on the international side, automakers all across the world are in focus, specifically ones in the European market. Stellantis, Aston Martin, Volkswagen, all among the European car makers that have either cut their forecast or guided things lower, given the macroeconomic environment for cars slowing down, slowness in China, that sort of thing. But it's carrying over to General Motors down 3.5% and Ford down 2.5% as well. So the autos trades, China, and everything else very big in the news today. Kel, I'll send things back over to you.
Those are huge declines for Aston Martin. Wow, down 25%, and Stellantis down 13%, already under pressure. Dom, thanks for now. We appreciate it. Dom Chu. Israel is expanding its attacks on Iran-backed militant groups in the Middle East over the weekend, killing Hezbollah leader Hassan Nasrallah and ramping up concerns of a ground invasion ahead of the one-year anniversary of the October 7th Hamas attack. One of my next guests says this is a tipping point, and how Iran responds will determine the future of the region. The other notes the assassination could actually be prompting some investor optimism in the region. Joining me now, Fred Kemp is president and CEO of the Atlantic Council, and Michelle Caruso Cabrera is here on set with me. Both are CNBC contributors. It's great to have you. And Michelle, before we talk a little bit about the market reaction, Fred, tell us why you think we're at such an important juncture here.
Yeah, and it is a tipping point. The question is the tipping point. So it's an important junction because Israel has changed the narrative. After October 7th, there were questions about Israel's intelligence. There were questions about its deterrence capability. All those were blown away in the killing of Nasrallah. Maybe as many as 80 bombs getting to him in a 60-foot bunker. And one can't forget that Nasrallah was in power for 30 years, and he was really the second most important leader in this whole conglomerate of Iran and its proxies after the leader of Iran. So that's a real turning point. But what it is it's a collision of two visions for the Middle East. One of them is Iran's vision with its proxies, which is to destroy Israel and to bring about a revolutionary extreme form of Islam. The second vision is you have a stable, free market, democratic Israel, but embedded in a more moderate, modernizing Middle East built off the Abraham Accords, where you've countered and you've contained Iran and you've degraded and disrupted its proxies. So that's what's at stake here. And can this tip the situation, and it would be a long time off, but tip the situation more into the more positive outcome.
Right, and one of the architects of the Abraham Accords, Jared Kushner, noted over the weekend he thought that it does move in the direction of isolating Iran. But Michelle, I don't know what your take is on that and what you're hearing in terms of the market reaction and lack thereof. Things like oil aren't even moving, but again, Saudi had already said they were going to be pumping. But where's the attention to be directed?
So there's an interesting corner of the market that's actually making a bet on the choice that Fred Kemp has so succinctly outlined, which is if you look at the way Lebanese bonds are trading today, they're very actively traded and they're trading higher. Lebanon defaulted on more than $30 billion worth of bonds back in 2020. So they trade very distressed. Last week they were trading at like 5 3/4 cents. Wow. This morning they're at 7 or 8 cents. Wow. In defaulted debt trading, those are huge moves. Think of it like a deeply out of the money option. But the reason that trade is happening is because of the death of Nasrallah. There is a whisker of hope that perhaps Lebanon can get its act together politically and actually get out of the economic mess that it's been created by Hezbollah's effective control.
And we saw celebrations, I guess you could say, in Lebanon in the immediate aftermath of this attack, suggesting that people felt as though a problem, a boot on its neck, was going to be taken care of. But how much more has to happen before there's more clarity on whether that is going to be the ultimate outcome?
Oh, they need to do a massive debt restructuring. Remember how long Greece took. Remember, look how long Argentina took, right? These things can take a very long time. Greece this morning now trades better than France.
Wow.
Okay, but that took 15 years.
Yeah. and French has been doing quite poor. That's a whole other story, especially poorly lately.
The thing is, when you buy something at 7 cents and you get past due interest later on, depends on how long you have to wait, you could still make a lot of money, even if it only goes up to 30 cents on the dollar.
Absolutely. Fred, a lot of international officials are cautioning Israel about this response now, but most are really just watching to see what exactly its intentions are. And what do you, how much broader do you expect this to go?
You have to watch Iran here. Iran is really behind a lot of the mayhem in the region. Iran, most of all, wants to survive. Its regime wants to survive. The state wants to survive. The revolution wants to survive. Losing Nasrallah is about the biggest loss they could possibly have, but they're not going to risk their own skins over this. If their calculation is that by escalating this war, they're going to endanger themselves, perhaps put themselves in direct battle with Israel, or even worse, the United States. So far, they're steering away from that, and they're getting criticized by Hezbollah. They're getting criticized by Hamas and others for not doing enough for them. But there are feuding factions in Iran right now. The Republican Guards and more extreme factions would want tougher action against Israel. More moderate factions, this is the worried about the Iranian economy, want to rebuild some sort of relationships with the West. So I think we really need to watch Iran right now. Hezbollah has not so much capability on their own. They may hit civilian centers. That will escalate things. But I think Tehran is the place to watch.
In the same time we talk about Iran's financial position, Michelle, Moody's downgraded Israel again over the weekend and has warned that it could be cut to junk status. And talking a lot about no matter what the outcome is at this point, the war is putting a lot of strain on their budget as well.
Yeah, sovereign finances in the entire region are end up spending so much more on your defense as opposed to what you would be spending on it otherwise, etc. So, and to underline to what Fred was saying, when we see what's happening with
Lebanese trade today, it suggests that Iran is not going to be, or at least those traders think Iran is not going to be as active as Hezbollah. And Fred,
yeah, I want to
go ahead.
I don't mind commenting on that because the Lebanese market, but that's so fascinating because what it says is we should step in. It's hard within this war, but to strengthen Lebanon have state institutions, but they've been undermined and weakened by Hezbollah. This is not just for Israel, not just for others, but a chance to a very beautiful country, wonderful country with a lot of hope and a great future. This may be a time to help it. Look around the rest of the Middle East. You look at Saudi Arabia, look at the United Arab Emirates, even Morocco, other parts of fine to great. It'd be great to pull Lebanon back into that path again.
That's a great point, and potential opening as well. We'll leave it there. Appreciate you both for joining us this hour. Fred Kemp, Michelle Caruso Cabrera. Let's turn to the market impact now of these tensions, because my next guest does see some increasing inflation and volatility, but says they're just one of the risks that could have prices climbing again. Dan Suzuki is here now. He's Deputy CIO at Richard Bernstein Advisors. Dan, just quick response before I just kind of get your broader thoughts on the markets here.
Yeah, I think, listen, we're not geopolitically focused firm, but I mean, anytime you have geopolitics flare up, I mean, there's two immediate of them is inflationary, both, potential risks to supply chains and commodity supplies. And then also, obviously, what we're seeing of it. So I think the way to protect yourself from that is to own the beneficiaries of that inflation or that volatility. I think one way is to own commodities or commodity producers here, which give you protection against the geopolitical as well as potentially the longer term secular theme of deglobalization, Kelly.
Well, now you have kind of the easier trade as well of China. How much do you buy into Chinese beneficiaries on the back of all these policy measures they continue to announce?
Yeah, obviously, as far as has been working out well, and the trade is reflecting sort of this moment where starting to panic. And as some of my old colleagues have mentioned in the past, markets stop panicking when policymakers start. It remains to be seen whether this is going to have follow through or it's going to be one in a string of moments where the market thought this is the beginning of a bazooka here. So I think that we have to wait, and it's about whether that stimulus is ultimately turn into profits. Now, I think the difficult thing for China is that we think that China, which is their profits have been accelerating for now 8 quarters, is probably closer to the end of its profit cycle unless you get a stimulus than it is to the beginning of its profit cycle.
That's an interesting cautionary point, and I love that line as well about panicking. More broadly, we're going to hear from Powell a little bit from Bostic, indicating some openness to a half-point cut if labor weakens, and we're going to get the big jobs report on Friday. How are you guys thinking through this?
Yeah, I don't, ultimately, I don't think it's really going to be a matter of, how much the Fed cuts at the next meeting or the meeting after that. I mean, when you step back from the bigger picture over the next 6 months, the market has, call it 150 basis points of further easing. I think that's a tall order, given that I'm not as bearish on both the inflation or the growth outlook here. I think ultimately you'll see probably inflation come in higher than what's priced into the market, and growth come in a little bit better. I don't think it's collapsing. I don't think we're in the midst of a huge growth spurt, but I just don't think it's slowing as fast as the market seems to be pricing in here.
Real quickly, Dan, then I'll mention this headline from Austin Goolsbee in just the past few minutes, where he says rates have to come down a lot over the next year. What you're saying and what a lot of people see happening with the economy and what the bond market is pricing in seem to be at odds with the bond market is on Goolsbee's side saying rates are coming way down. A lot of others are looking around and going, I don't see how.
Yeah, I think it's tough. I mean, I think if you look in a world where Fed is the only source of liquidity, then you're looking at a world that's very tight, and you could argue that the Fed does have a lot of easing to do. But when you step back from it, you look at financial conditions, you actually quite rampant. I don't think you need the level of easing that Goolsbee is talking about. You start a massive easing policy here with inflation at 2.5–3%, that's economy, that puts a lot more upside pressure to inflation at a time when we have geopolitical concerns and potentially tariffs and potentially China starting to stimulate. These are things that you have to consider that might put that sort of easing outlook at risk.
Oh, and you're sticking with the small caps, the deep cyclicals, other emerging markets as well, looking for commodities and inflation trades to benefit in this panorama. Dan, for now, thanks. We appreciate your time today.
Thanks, Kelly.
Dan Suzuki. Coming up, we're less than 11 hours away from a port strike on the East Coast that would stretch from Texas to Maine. Truckers and rails are racing to move billions in cargo before midnight. We'll tell you what's at stake and how long it could last. But first, recovery efforts are underway after Hurricane Helene swept across the southeastern U.S. More than 100 are dead, millions remain without power, and tens of billions of dollars in damages could just be the beginning. We will look at the widespread fallout next on The Exchange.
This is The Exchange on CNBC.
Welcome back. Recovery efforts are underway in the wake of Hurricane Helene's devastating path across the southeastern U.S. Contessa Brewer is here now to track the impact. Contessa, what can you tell us?
Yeah, I mean, this I have to just put into context because we know that there are people still missing. The death toll has been rising, but AccuWeather also just significantly raised its already eye-popping estimate of damage and economic losses from Hurricane Helene, $145 billion to $160 billion in damage. The estimates that we expect from Moody's and Verisk likely will take several more days. But look, we're seeing video that's painting a very grim picture. Record-breaking storm surges along Florida's west coast, including densely populated areas around Tampa, flooding throughout South Carolina and Georgia, rainfall shattering records in Tennessee and North Carolina, and then producing mudslides and landslides. North Carolina's transportation department has restricted travel throughout the western part of the state. You see that part in red? You can't travel around there because of all of the road closures and outages. And in all of those states, risk and reinsurance specialist Guy Carpenter points out that extreme infrastructure damage has happened. Dams on the brink of failure. hundreds of miles of damaged or destroyed roads, including Interstate 26 and I-40. Nearly 3.5 million people without power at the peak, and that's the most we have seen since Hurricane Irma in 2017. More than 4,500 cellular sites offline. That's the most from any hurricane since records started to be kept in 2017. And largely, we're looking at a flooding event here, Kelly. That could be the crushing difference between what gets paid and what doesn't for property owners, because of course property insurance does not cover flooding. And what we know is that in the hardest hit places, fewer than 1% have flood insurance. All the beige parts that you're seeing there is where the reuptake for flood insurance is less than 2%. Again, that map compiled by Guy Carpenter based on the National Flood Insurance Program. Also interesting, Guy Carpenter says there are multiple reports of fires because of battery exposure to salt water. Florida has the second highest number of electric vehicles registered in the country after California, and that's just one more risk of what we've been seeing unfolding since the hurricane made landfall.
And that's one that people didn't previously. Contessa, what did you say right off the top? What's the number now in terms of the damage, the dollar amount?
Up as much as $160 billion, not just in damage, but also in lost economic output. So AccuWeather is combining that all. What you're going to see is that the insurers and the insurance industry is going to come out with what were the insured losses. And that will have an impact on, say, Allstate, where if your car gets flooded and you have a comprehensive policy, well, then, of course, your car insurance policy kicks in, and Allstate could see a rush of claims for that point. USAA told me they're getting claims from as far away as Ohio and already has surpassed Hurricane Ian in just the first 4 days. Remember, a lot of people can't make claims yet because they have no cell service, no power, no way even to contact the outside world.
Great point. And then 60 Minutes did that big piece on insurance companies. Of scrutiny, I think, in terms of what their payouts are this time around in particular. Contessa, for now, thanks. Contessa Brewer at the NYSE. The aftermath of Helene and the looming East Coast port strike are both likely to disrupt the supply chain for major retailers. My next guest says the storm could actually benefit one category in the short term, the home improvement stores like Lowe's and Home Depot, of course. Let's bring in Laura Champagne. She's director of research at Loop Capital. Laura, first of all, what do you know from sort of just the data that you collect as to how effective it currently is?
Yeah, thanks for having me, Kelly. Obviously, the storm is places in the Carolinas, for example, that just aren't used to kind of damage or this kind of an impact from a storm. So, and it does seem like the damages might be even more. In terms of actual stores and serving customers, we are not here damage kind of beyond. Companies we cover are getting their stores back up, and which is based in North Carolina has the most exposure because they have pretty good at meeting the near term, sort of the immediate term demands of their customers in these markets.
And Lowe's, if I'm not mistaken, was trading at, I don't know if it's a 52-week high or probably close to an all-time high at this point. What accounts for that? And we spoke the other day with Anthony Chukumba at Loop, and no, that would be your firm. Anyway, one of the analysts who we were checking in with said, once you start to get a consumer cycle kind of restarting, which is what it feels a little bit like right now, some of the early beneficiaries are home improvement stores, and then it kind of moves on to general retailers and so forth. So I don't know why you're seeing such a positive moment for these companies in terms of their share price.
Right. So luckily, Anthony is a colleague here at Loop, and we both cover retail together. And he's obviously, I think he's right that you see a quick reaction in these consumer discretionary stocks. And the bigger picture benefit, especially for companies like Home Depot and Lowe's, is a loosening rate cycle, which should benefit next year. Not this year. It's kind of a little late for this year. But next year, we do see a recovery. And that's why you've seen Lowe's and Home Depot bounce. They'd been really underperforming the markets. Now they're just about in line for the year, with Lowe's doing a little bit better, and that bounce has come directly from the interest rate cuts.
With the port strike looming, look, it's the East Coast ports, not the West Coast ones. Right. According to our reporting, Walmart, Home Depot, IKEA, Samsung, LG, automakers, auto suppliers, I think through Baltimore, are the companies that could have products most affected. Is that what you're tracking as well?
It is, and I think some consumables, which might touch what we cover in Costco, for example, you probably will see some pressure on costs overall. Also, I don't put it past the container companies to raise prices no matter where the disruptions are. So we had containers coming from China inflating earlier this year on the Red Sea crisis, which doesn't make intuitive sense, but wherever there is backup, it does tend to impact the global supply chain, particularly on the cost side. So it's something to be aware of. It's our take at Loop that this crisis will be resolved pretty quickly, given that Biden's got some power to clean it up, as these are essential parts of our economy, and that's likely to happen in front of an election, in our view.
Yeah, LG Electronics, Samsung, they do a lot up through the Newark ports. I mean, should shoppers expect to see any price hikes or shortages as a result of this, or does it depend on how long it goes on?
You know, the good news for us is we've got a buy rating on Whirlpool, which is our homegrown domestic appliance company, which is larger than LG and Samsung in major appliances and produces a lot of components here on this continent. So you just might see a market share shift. What happens in terms of pricing? So demand, as I mentioned, still very weak back half of this year for big ticket. I think that most of the manufacturers have learned that if they promote more, they're not selling more. So I would expect pricing to stay fairly high going through the end of this year. We need remodelings to get a boost, which happens probably back half of next year, to drive the whole industry.
In a weird way, that could make a strike now good timing. It almost might give those on strike more leverage if there's not just going to be a major reaction from consumers or retailers, really. But we'll see. Laura, thanks for your time this afternoon. Really appreciate it.
Thanks, Kelly.
Laura Champagne with Loop. Coming up, California Governor Gavin Newsom vetoing a controversial AI safety bill, saying he's working on more comprehensive legislation. We'll tell you what that could look like and who he's working with to develop it. The Exchange is back after this.
credit.
Good afternoon, everybody, and welcome back to The Exchange. I'm Tyler Matheson with your news update. The U.S. is sending an additional few thousand troops to the Middle East to boost security and to be prepared to defend Israel if necessary. The Pentagon said the additional forces will come from several fighter jet squadrons, and it comes as a U.S. official tells Reuters Israeli troop positioning suggests a ground operation in Lebanon could be imminent. Man accused of plotting to kill former President Donald Trump at his Florida golf course earlier this month pleaded not guilty today to attempting to assassinate a major presidential candidate. Ryan Wesley Routh faces 5 charges and a maximum sentence of life in prison. And the Rust movie armorer Hannah Gutierrez Reed will remain behind bars pending her appeal. In a decision obtained by NBC News, the judge overseeing Reed's case upheld her conviction for involuntary manslaughter, even though the judge previously determined the prosecution suppressed evidence in the case against the movie star's producer, Alec Baldwin. Reed's testimony told NBC News they will appeal. Kelly, back to you.
Tyler, I will see you soon. Thank you so much, Tyler Matheson. Coming up, thousands of East and Gulf Coast port workers are set to strike at the stroke of midnight if a deal can't be reached with the U.S. Maritime Alliance. It would be the first East Coast dock strike in nearly 50 years. After the break, we'll tell you what's at stake and how long it could last. Welcome back. We could be less than 11 hours away from the first International Longshoremen's Association strike on the East Coast in nearly 50 years. Around 50,000 port workers are expected to strike across the East and Gulf Coast, shutting down 36 ports and halting billions of dollars in shipments. One of my next guests says the era of permanent volatility is upon us. For more on that and what the strike could mean for the U.S. economy, let's talk to Lisa DeKnight. She's Newmark's Managing Director of National Industrial Research. And Steve Odland is CEO of the Conference Board and a CNBC contributor. Great to have you both here. Lisa, what are the implications and how long is this expected to last?
Well, thanks for having me on today. And I will say the top line takeaway here is duration amplifies impact. If this strike goes on for a couple days, the implications are rather short-lived, I'd say. If this drags on, it has cascading impacts throughout the global economy, not just the U.S. economy. So the unpredictability of this issue here is really in play, and it has the magnitude to really throw a giant wrench in global supply chains.
What is the duration? I haven't actually looked to see what people are saying about how long they expect it to last. And what to you would be the difference between a minor disruption and something more substantial?
A minor disruption of even a couple of days has really significant implications for certain industries, pharmaceuticals, auto manufacturing, but a couple days in net would not have terrible impacts or long-term impacts. If we look past a week or 2 weeks, that will require months of recovery.
Wow.
So really, there's a substantial difference every day that a potential strike goes on.
LG, Home Depot, Hyundai, Continental Tire, Steve, those are just some of the companies potentially who do the most business through these ports and could be most affected. How should we expect them to respond and deal with this?
Well, you know, you've got people who have built inventories in anticipation of this, but there's only so much. And Lisa's right. I mean, any disruption, they're saying, you know, every day is a week's recovery. But what happens then is the prices go up. And so you'd see big impact in inflation. And that would happen right away, you know, irregardless of what happens to supply. And so that would be a ripple effect through the economy. Now, we're sitting here on the next Fed decision. If the Fed sees this and you've got layoffs going on, if you have plant shutdowns and so forth because you can't get parts. Remember, if you can't complete an item if you're missing one part out of thousands of parts. So it's, you know, you're just throwing the whole supply chain into imbalance here. You see that, you see borrowing costs start to go back up. You see the Fed saying, hey, wait a minute, you got inflation going back up. I better pause on this. Then you see the net effect of the stock market reacting to all of that. So this could be, you know, a really calamitous situation. But the problem is we're sitting here 1 month away from an election. The president has said that he's not going to invoke Taft-Hartley, which would give an 80-day period to resolve this thing. The two parties are way, way apart. You know, the shippers are offering half of what the union is asking. So this is not close. You know, this is not an 11th hour thing. We're far, far away. So this could be, you know, up to a month. I mean, if you have a situation where the administration is not willing to get involved. Now, if I was the administration, I'd get right involved, try to help negotiate it. I understand the Taft-Hartley thing, but if they could negotiate a settlement, they can come out a hero. If they don't, you throw the nation into some level of economic chaos, going right into an important election.
And right as many people are saying, hey, the economy's actually in pretty good shape. So, Steve, your firm has some great numbers to put to this. You think every week it could cost the economy about $4 billion. These ports do about a quarter of U.S. international trade on the East Coast, including 87% of commodities, including oil and wheat, which I think is interesting. So, Lisa, if this does blow up in the next couple of weeks and become quite a nuisance, will the ramifications then last into the Christmas shopping season?
For sure, yes. Now, I will say that a lot of shippers saw this coming and have brought in goods ahead of time. There's been a lot of diversion to West Coast ports already. We've seen very strong import growth year to date. In fact, the third largest volumes of import growth year to date of any period in time. So I do see nice cushions in business inventories. That being said, there's only so much you can bring in ahead of time. And then when you talk about specific things like perishables, you really can't front load perishables. Bananas, for example, I was eating my morning banana thinking, wow, lots of bananas come in via East and Gulf Coast ports. You can't really front load bananas. You can't really pivot to air freight for bananas. So there are specific implications that come down even on an individual commodity level. Luckily, a lot of goods have been brought in ahead of time, especially if the duration is relatively short. We shouldn't see much of an impact to the holiday season.
Sure. Here I thought bananas would have been a West Coast import, so I need to go do some checks on the global supply chain and get up to speed there. Thank you both. Appreciate it. We'll, of course, see what happens tonight and then in the days and weeks to come if this does go forward, with the two sides being as far apart, Steve, as you mentioned that they are. Lisa and Steve, thank you. We appreciate your time. Let's turn now to how that potential strike could impact the race for the White House. About 5 weeks till the election. Megan Casella is in Washington. Megan, what can you tell us?
Hey, Kelly, the clock is definitely ticking, and the difficulty of the politics here really can't be overstated for the Democrats. Now, a strike will cost the U.S. economy about $3 to $5 billion per day, as you guys were just talking about. And once supply chains start getting backed up, consumers will begin to feel this in every industry. So, of course, that would drag down consumer sentiment and could push up prices, which then would pose trouble for Kamala Harris. She has really centered her campaign on making life more affordable. Now it would be moving in the other direction. Now, President Biden could invoke emergency powers to force striking workers back to work. But so far, he has vowed not to do that. Intervening would be seen as crossing the picket line at a time when Democrats are trying to win the union vote. But then not doing so would mean a hit to the economy, which of course would impact a much broader share of voters. The White House says now that senior officials spent the weekend urging both the Maritime Alliance and the ILA union to come to an agreement, quote, fairly and quickly. Now, neither Trump nor Harris has commented on the strike, but ILA President Harold Daggett in July said that he met with President Trump late last year and that at the time they spoke about the threat of automation. That's one of the top issues in these negotiations. Daggett said Trump, quote, promised to support the ILA in its opposition to automated terminals. And Kelly, I should note that with the union vote up for grabs, the ILA did endorse President Biden in his 2020 campaign, but they have not endorsed either candidate this time around, sort of underscoring just how dicey things could get here.
Oh,
Kelly?
sure. And I think, as you said, this issue of automated terminals is at the heart of these concerns. The workers claim they haven't gotten a proportionate raise in a long, long time. Steve Odland just told us the two sides seem to be quite far apart. If they're not going to invoke Taft-Hartley, I guess we just have to hope that negotiations bring them closer together.
We just have to hope, and that's what the White House is trying to do now, take sort of this outside perspective or outside stance and say, we're trying to get the two sides closer together, but we're not intervening. I have spoken with analysts who think that as soon as this starts going on, you heard Lisa talk about how there's this compounding effect or compounding impact, even day by day as it goes on. So I've talked to some analysts who think that the White House, that President Biden will change his stance fairly quickly, because if you think about not just the U.S. or the global economy, if we're looking at this narrowly, think about the swing state economies. Georgia has the Port of Savannah that could be impacted here. Sure. Michigan has a huge automotive industry that could be impacted here. That's where the Biden administration and the Harris campaign really don't want to see things start to escalate, but that's where they could the most.
That's a great point, that actually they think he's just going to invoke that and kind of give them a cooling off period, maybe punt this till after the election. That would make a lot of sense.
Right,
Megan,
absolutely.
for now, thanks. Appreciate your reporting, Megan Casella. Coming up, California Governor Gavin Newsom vetoing what would have been the most sweeping AI regulation to date. It doesn't mean Silicon Valley will be given a longer leash, though. What's next in the fight to safeguard artificial intelligence? We will explore that next. controversial AI safety bill vetoed by California Governor Gavin Newsom this weekend. It would have been one of the first moves towards oversight of the new tech, but is it too late for regulation to catch up? Deirdre Bosa has more in today's Tech Check. And the criticisms I heard, Deirdre, were that it was overbroad and, they had to, consider the effects on humanity or something? Explain.
You always got to consider the effects on humanity, but you're right, Kelly. In this case, it was too broad. And let me explain. But first, let me tell you, too, here that Governor Newsom is trying to strike a very tricky balance. Opponents of the bill, including OpenAI, Meta, Google, they will applaud this veto. They called its standards ill-defined, and they argued that it could ultimately stifle innovation. Now, Newsom, he also seems to be trying to appease the research community, which largely supported the bill, by bringing in high-profile researchers like Fei-Fei Li to work on a new and more comprehensive set of guardrails. In his letter, he calls Li the godmother of AI. I just spoke by phone, though, to the godfather of AI, Jeffrey Hinton. He is a prominent AI researcher as well who supported the bill. He told me that the veto was another example of profits trumping safety. He says he hasn't heard from Newsom or been asked to work on the committee setting out these new guardrails, but if he was asked, he would do it. Now, Newsom rejected the bill in its current form, saying it applied only to the largest and most expensive AI models. He argues that other smaller AI systems, they can be deployed in high-risk environments or involve critical decision-making or the use of sensitive data, and they wouldn't be covered by this bill. Frontier models, they can be deployed for customer service chatbots, while smaller AI systems, they might be used for AI forecasting to manage electricity grids where the stakes are much higher. This is a point that also underscores how quickly the industry is developing. The worry when it comes to regulating, of course, is that the tech moves faster than the lawmakers can, and guardrails get pushed out further, or it doesn't sufficiently address the most pressing concerns. Now, in his letter vetoing the bill, Newsom acknowledges this, saying, quote, "Let me be clear, we cannot afford to wait for a major catastrophe to occur before taking action to protect the public." And Kelly, a kill switch was one of the major proponents of the bill that just got vetoed. This idea that companies developing the models, they need to incorporate a switch to turn off the AI as it gets more and more advanced, to your point about humanity.
Well, I was going to ask, what are the other, I find it very hard to look around the corner and foresee what the biggest problem with new technology is going to be. In the era of social media, the fact that it would be sort of teen mental health became something that was apparent 5-10 years down the road, maybe longer. So what is the specific harm they're most concerned about with AI that they right now are confident that they could avoid?
I mean, I don't think anyone's very confident that they can avoid it, but there's this balance of letting the companies, specifically here in California, which has the majority of generative AI companies, develop and innovate, not stifling that innovation. But what the bill that was just vetoed wanted to do was hold them accountable for some of those impacts that we don't yet know what will be. So basically giving the government the ability to sue companies if they don't comply, if they don't have third parties to go in and check, if they don't build that kill switch, if they don't have certain protections around whistleblowers. And that's sort of the problem. That's why a lot of these companies said that the standards were ill-defined, Kelly, because we don't know what the effects are. And that is always the problem with regulating. You don't know until the technology really develops what some of those unintended consequences are going to be. So you leave it up to the industries themselves to self-police. Social media was not good at that. AI, open question. Maybe they will be. There are robust safety teams at a lot of the companies developing these models, but also some problems, too. You look at OpenAI that has lost a lot of their prominent safety people.
Yeah, no, I'm just trying to think of kind of the, and if the governor is right and he supports this in a slightly tweaked form, then, time will tell whether that's the case or not. Do you do something with the board, for instance? I don't know. Again, I think these questions.
And are these companies ever going to be held accountable, or are they just going to keep saying they can do it themselves?
Oh, for sure. No, they love to self-police. Deirdre, for now, thanks. Appreciate it. Deirdre Bosa. Don't miss, by the way, CNBC's AI Opportunity event in New York City tomorrow, where we'll talk about issues like this, and you'll hear from industries about how AI is transforming their businesses. To register, scan that QR code on the screen or go to cnbcevents.com. That's it for us, ending a little early today so that Power Lunch can pick up live coverage of Jay Powell's speech at the annual meeting of the National Association of Business Economists. I'll join Tyler for that on the other side of this quick break.
XNGX.
All right, a busy day to start the week. Welcome to Power Lunch. Alongside Kelly Evans, I'm Tyler Mathisen. Glad you could join us. New at 2 this hour, Fed Chairman Jerome Powell to speak in just a couple of minutes to the National Association for Business Economics. It's in Nashville. Expected to hit topics around the economy, inflation, and much, much more.
And we've heard from some other Fed officials already today. In fact, on the dovish side, Goolsbee just in the last few minutes talking about how rates need to come down significantly. Before that, Bostic saying he'd be in favor of a half-point cut if the labor market continues to weaken. And we do get the big jobs report this Friday. The markets, for their part, are trading lower, but we're closing out a month that has bucked recent convention and been much stronger than expected this September. For the moment, though, the Dow's down 135, the S&P fractionally lower, same with the NASDAQ. Let's bring in our senior markets commentator, Michael Santoli, for more on this, Mike. And we look at what the markets are saying. They're saying shaking off September, kind of shaking off the hard landing concerns. And what do you make of it?
Well, exactly, Kelly. And we front-loaded those hard landing concerns into the, initial 8 trading days of September. And then since then, including when we got the Fed rate cut, you had mostly reassuring data. I wouldn't say universally across the board, but definitely the Fed's move was billed as being kind of proactive. And we're doing this because we don't want to be too restrictive, not because we think the economy's falling apart. And things like GDP revisions and jobless claims, even retail sales suggest that was plausible. I think that's why the markets have not seen fit to rethink the initial positive response to what the Fed did. In fact, the S&P, though, trading exactly where it was at the highs the day after the Fed decision. That was on a week ago Thursday.
So, really, what you're saying there is that the data from the start of the month has been relatively benign, and the market, which typically can have some hiccups during the month of September, really hasn't.
Right. We went down, 4.5% right at the start of September and then bounced from it. So you can argue that there has been the traditional seasonal chop and volatility. The other thing, I guess, to keep in mind is both in August and September, it was that first week of the month where the market started to get cold feet, started to worry about ISMs, started to worry about the monthly jobs report. That's the week we're in right now. Maybe it's too cute to expect it to be exactly the same path 3 months in a row, though.
And we'll get, obviously, a jobs number on Friday, I guess. So we'll have one more data point, and I think the Fed is obviously looking at 2 main areas. One is employment concerns and whether the employment market is slowing. And on the other hand is inflation slowing. Mike, thanks very much. We're going to go, I guess Chairman Powell is starting his remarks, or are we going to go to Steve Leisman here? Let's go to Steve Leisman, who has an early look at the draft of the remarks. Steve.
Hey, Tyler, Fed Chair Jerome Powell will tell the NABE conference that if the economy evolves as expected, policy will move to a more neutral stance. He says we're not on a preset course. We're going to go meeting by meeting here. Risks are two-sided. The economy, he says, is in solid shape, and we intend to use our tools to keep it there. He also says the economy is strong overall, and we've made significant progress toward achieving the dual mandate. He goes on to say that the labor market is solid but cooling, and inflation has eased. Further comments he makes, we do not need to see further cooling in the labor market to achieve the inflation target. Disinflation, he says, has been broad-based. Core service inflation is close to the pre-pandemic level, and he sees housing inflation coming down and continue to decline, however, sluggishly. Finally, he says risks to achieving the employment and inflation mandates are roughly in balance. A short speech he makes, Tyler. I guess they're interviewing him right about now, so we could go to the Fed chairman for the actual remarks he makes.
I do have some brief comments on the economy and monetary policy, and then I look forward to our discussion. Our economy is strong overall and has made significant progress over the past 2 years toward achieving our dual mandate goals of maximum employment and stable prices. Labor market conditions are solid, having cooled from their previously overheated state. Inflation has eased, and my FOMC colleagues and I have greater confidence that it is on a sustainable path back to 2%. At our meeting earlier this month, we reduced the level of policy restraint by lowering the target range for the federal funds rate by a half percentage point. That decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in an environment of moderate economic growth and inflation moving sustainably down to our objective. Turning to the labor market briefly, many indicators show that the labor market is solid. To mention just a few, the unemployment rate is well within the range of estimates of its natural rate. Layoffs are low. The labor force participation rate of prime age workers is near its historic high, and the prime age women's participation rate has continued to reach new all-time highs. Real wages are increasing at a solid pace, broadly in line with gains in productivity. The ratio of job openings to unemployed workers has moved down steadily but remains just above 1, so that there are still more open positions than there are people seeking work. Prior to 2019, that was rarely the case. Still, labor markets have clearly cooled over the past year. Workers now view jobs as somewhat less available than they were in 2019. The moderation in job growth and the increase in labor supply have led the unemployment rate to increase to 4.2%, still low by historical standards. We do not believe that we need to see further cooling in labor market conditions to achieve 2% inflation. Turning then to inflation, over the most recent 12 months, headline and core inflation were 2.2% and 2.7% respectively. Disinflation has been broad-based, and recent data indicate further progress toward a sustained return to 2%. Core goods prices have fallen 0.5% over the past year, close to their pre-pandemic pace, as supply bottlenecks have eased. Outside of housing services, core services inflation is also close to its pre-pandemic pace. Housing services inflation continues to decline, but sluggishly. The growth rate in rents charged to new tenants remains low. As long as that remains the case, housing services inflation will continue to decline. Broader economic conditions also set the table for further disinflation. The labor market is now roughly in balance. Longer-run inflation expectations remain well anchored. Turning to monetary policy. Over the past year, we have continued to see solid growth and healthy gains in the labor force and in productivity. Our goal all along has been to restore price stability without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While that task is not complete, we have made a good deal of progress toward that outcome. For much of the past 3 years, inflation ran well above our goal, and the labor market was extremely tight. Appropriately, our focus was on bringing down inflation. By keeping monetary policy restrictive, we helped restore the balance between overall supply and demand in the economy. That patient approach has paid dividends. Inflation is now much closer to our 2% objective. Today, we see the risks to achieving our employment and inflation goals as roughly in balance. Our policy rate had been at a 2-decade high since the July 2023 meeting. At the time of that meeting, core inflation was 4.2%, well above our target, and unemployment was 3.5%, near a 50-year low. In the 14 months since the July 2023 meeting, inflation has moved down and unemployment has moved up, in both cases significantly. It was time for a recalibration of our policy stance to reflect progress toward our goals, as well as the changed balance of risks. As I mentioned, our decision to reduce our policy rate by 50 basis points reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate economic growth and inflation moving down sustainably to 2%. Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. As we consider additional policy adjustments, we will carefully assess incoming data, the evolving outlook, and the balance of risks. Overall, the economy is in solid shape. We intend to use our tools to keep it there. We remain resolute in our commitment to our maximum employment and price stability mandates, and everything we do is in service to our public mission. With that, thank you very much, and I look forward to our conversation. Thank you.
Thank you so much. Short and sweet. So here we are in Tennessee. We've had a major hurricane move through. It's top of mind. You know, when so I thought to bring it up right at the beginning. Does the Fed have a role to play when natural disaster strikes?
So let me just say, like everyone, we see the tragic loss of life and the terrible disruption of millions, literally millions of people, including here in Tennessee. We have a couple of things that we do in these situations. One is that we're encouraging bankers to work with their affected customers in affected areas. And the second thing is that sometimes in these situations when power is out, there's a need for cash. And so we find that as a very important thing in these disaster situations. And so we have the ability through the reserve banks to make sure that the banks have available cash so that if power is out for a significant amount of time, there's enough cash to do transactions. But you know, obviously we're mainly on the sidelines and you know, sympathizing with this very difficult situation people are in.
Great. You, in your prepared remarks, you walked us through the decision to begin cutting rates. What has happened, though, since the September meeting? What's new since the September meeting?
Since the September meeting, so most of the data that we'll see before our next meeting hasn't come yet, of course, and we can talk about that. But I would say, you know, one thing worth pointing to is the annual NIPA revisions, which I thought were quite interesting, and I'd point out a couple things. First, as this audience will know well, there are two ways of measuring output in the economy. There are many ways, but two principal ways are gross domestic income versus gross domestic product, so GDI versus GDP. There's lore and there's research that says that actually GDI, gross domestic income, gives a better real-time reading. And for the last year and a half or so, GDI has been quite low relative to GDP, raising, for those of us who forecast the economy, the risk that GDP will turn out to have been overstated and it'll get revised down to meet GDI. So that's been a downside risk that we've been monitoring. As this audience will well know, quite the opposite happened, and there were very large adjustments to revisions to GDI, and there's now no gap between the two. In theory, there should be no gap. It's no statistical error in measurement. So that kind of, I would say, removes a downside risk to the economy. Secondly, it has looked as though consumers were spending more than their income. We see disposable personal income now being estimated up. And so that's no longer the case. Again, removing what we've been thinking of as a possible downside risk that the level of consumer spending might be unsustainable. So we look at that, and again, these were very large, healthy upward revisions to income.
So we had income was revised upward, spending was revised upward, but income was revised upward so much more so than spending that the savings rate came up.
That's right.
Even with greater spending.
Yeah, the savings rate too. So we think savings there are more savings on people's balance sheet, and the savings rate is higher. So that speaks of more kind of background that suggests that spending can continue at a healthy level. I'll just mention quickly two other things that I thought were interesting. One was just another modest increase in estimated productivity. We can talk more about that, but of course we're watching the situation with productivity. Productivity is very important to potential output, and the question is, are we seeing rising productivity which will be sustained over a period of time? And of course, I think it's way too early to say that. Nonetheless, you do see some increase in productivity because we've increased income, but not hours worked. The last thing, and maybe the most significant though, is there's a bit of a tension between the labor market data, which speaks of a cooling labor market, and the spending data, the GDP data, and which has been quite solid. And I would say that tension has not been resolved, unlike a couple of the others. Nonetheless, I would say though that if you take away from this, as I do, that you can be somewhat more comfortable with the spending data, that may also help with the employment data.
So if the economy, so GDI, it was pretty significant upward revisions. GDP also was revised upward somewhat. And so when there's strength in the economy like that, does that give you some sort of sense or more of a sense of security when you're seeing a cooling labor market that maybe the worst outcomes won't happen if GDP is still that strong?
So the answer is ultimately yes, but I would add, though, that I think there's a lot of thinking that the labor market may give a better real-time picture in some cases than does GDP data. So if you look back over prior downturns, you'll often see that they weren't well predicted by GDP data, but they were by one or more aspects of the labor market. Now, we don't see that happening. There's really nothing that I can point to in the economy that suggests that a downturn is more likely than it is at any time. So we don't see that, but I would say seeing that there's more support for thinking that the GDP readings we get are solid. I think that does happen. It helps at the margin. That's not going to stop us from looking very carefully at the labor market data, though.
Okay. So I have a few questions here on unemployment. The first is related to the summary of economic projections, and then the second is related to state versus national rates of unemployment. So in the summary of economic projections, the median participant has the unemployment rate moving from 4.2% today to 4.4% by the end of the year. So continued drift upward. And yet the median expects that the pace of rate cuts will move down as the unemployment rate continues to move up. How do you square that picture? How do you explain that?
Well, remember that the summary of economic projections is really just a tabulation of the individual 19 participants. So it doesn't come from one sort of consistent thing. But I can tell you why I think people will have written up a couple more tenths of unemployment. It would just be that, as we've seen, the level of job creation is maybe not quite at the level it needs to be to hold unemployment constant, given assumptions about supply. That would make sense to me. I think everyone at this point is looking at their forecasts and understanding that there are great uncertainty bands around it. But the SEP asks you to write down your most likely case, whether you want to or not. And so that's what it is.
So sort of a love-hate relationship with the summary of economic projections?
That's not unfair.
Not for you personally, but yeah. Is there
I would say sometimes people can pay too much attention to it. I will say, though, one thing is we do it, as this audience well knows, we do it once a quarter. And over the course of a full quarter, the old SEP can get pretty rusty, But for a few weeks after the meeting, after we write down the SEP, it's actually a pretty good read on what the thinking of the committee is. And one thing I will point to is that if you look at the path that people wrote down, we had 10 people at 4 cuts or more, or 2 remaining cuts. We had 19 people at 3 or more. But the sense of the committee, this is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided by the incoming data. And if the economy slows more than we expect, then we can cut faster. If it slows less than we expect, we can cut slower, and that's really what's going to decide it. But I think from a base case standpoint, we're looking at it as a process that will play out over some time, not something that we need to go fast on. It's more, it'll depend on the data, the speed at which we actually go.
Yeah, so before I get to that second question on the unemployment rate, I'm going to ask you a point-blank question here. How are you thinking about the November meeting?
So a couple things. One, we have 2 employment reports and an inflation report coming in. So the main thing will be to look, when we get to that meeting, at the totality of the data, and we'll be looking at the activity data, the unemployment data, and the inflation data, and asking ourselves, is our policy stance in the place where it needs to be for us to best foster achievement of our goals? And I think we'll take everything into account, and we don't have that data yet. So that's the main thing. But the other thing is just I wanted to point out, and I kind of just did, that you know, it's a committee that we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, you know, it was a situation where people were thinking, you know, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
Okay. Question from the audience now. The regional bank presidents know their districts very well, and they come into the FOMC meeting, and well, even before that, the Beige Book, right, provides that snapshot of what's going on around the country. And so we focus on the national unemployment rate, but there are state unemployment rates as well. Are there certain states that are primarily responsible for driving up the unemployment rate nationally? Is it something that's more broad-based? And how would you weigh sort of national versus state level?
I mean, at the end of the day, we're looking at the national aggregate levels, but the real value, one of the great values of the Reserve Bank system is we get, you know, detailed reports of what's happening in the districts, which really start with the directors of the branches and the main banks, who come in and talk to they talk to the staff and also to the president of the Reserve Bank. And I think the banks just do a great job of gathering data and anecdotal information too about what's going on in the district. This is enormously useful to us who are sitting in the center and don't have that range of context or so I think it's quite useful. But at the end of the day, we have to go on national data. Although, of course, there are different things. It's a big country, a big economy. There are parts of the country that are, you know, doing better than others.
In your prepared remarks, you mentioned about job finding prospects. We have Dana Peterson here, chief economist from the Conference Board. The Conference Board had data recently showing that folks feel like it's getting harder to find a job. Does that, one, concern you, and two, how do you weigh sort of survey data versus hard data like a job openings and labor turnover survey, for instance?
You know, we look at everything, of course, but in particular, the job finding rate has come down very significantly. And so if you're out of work now, it's going to be harder to find a job than it was 2 years ago when the labor market was extremely tight, where you would have had multiple employers waiting for you outside the building to give you offers. You know, now it's much more at a normal level, or even perhaps a little bit soft. So the job finding rate is much lower. So by so many measures, the labor market is still solid, but it really has cooled. I mentioned vacancies relative to actual unemployed people who are looking for jobs, so they're counted as unemployed. That is right around 1.1 ratio. That was a tight labor market before the pandemic. But it's less tight now. That number was at 2.0, and it's worked its way down. Like so many measures, quits, all of those wages, they point to the same thing, which is a labor market that's still strong, where conditions have cooled considerably. And as I mentioned, we don't think that labor market conditions need to cool further from where they are. Just to take the unemployment rate, I mean, it's substantially higher. 4.2% is substantially higher than where unemployment was in 2019. And inflation was below 2% in 2019. Take a broad set of conditions, look at 2019. That was not a high inflation environment. So this is not a problem with excessively tight labor markets causing inflation.
I'm so glad that someone submitted a question on housing inflation. I'm sure you're so glad as well. And so I'm going to ask it because we haven't really talked about inflation yet. You made a great point in your prepared remarks that it's running right around, 3-month annualized pace is running right around 2%. So housing inflation has been a large contributor to the overall inflation and continues to be an issue throughout the country, eroding wage gains. And although housing costs are not a dual mandate, how is the housing market factored into decision-making by the Fed?
So, you know, we think of core inflation as 3 buckets. goods inflation, non-housing services, which is by far the biggest bucket, and then housing services, and that's rents and also owner's equivalent rent. The first two have looked like they've, broadly speaking, moved back to their pre-pandemic level. Housing services inflation has not yet. And what's happened is that what should happen is when market rents drop, as leases turn over, when the increase in market rents drops to a low level, as it has, as leases turn over year upon year, you should see housing services inflation flatten out. And you are seeing that, but you're seeing it just at a sluggish pace, as sluggish as it usually. So I think I went from thinking at the beginning that this would happen fairly quickly to now thinking that that process will play out over a period of some years, 2, 3, 4 years. Nonetheless, as long as market rents, actual new leases as long as inflation in those rents, those leases, is relatively low, it's going to show up in housing services inflation as well. It's just going to take, my guess is it's just going to take longer than we've been expecting and longer than we've wanted. But I think, the direction of travel is clear as long as market rate inflation remains relatively low, which it still does.
So the goods side of that equation, goods prices are less, less under the control of the Fed, but we have been sort of moving back to our previous regime of deflation in goods prices. Some of that is probably sluggish growth from China, but how much do you rely on goods prices being in deflation in order to help that overall aggregate inflation?
Well, so if you go back before the pandemic, you had, as you pointed out, you had mild deflation in goods for globalization reasons and other reasons, and so if you take those three buckets I talked about together, they produced inflation between 1.7 and 2%. So we're trying to get back to a world where inflation is 2%. And the combination of those three buckets is less important than the fact that you get the aggregate back. So I just pointed out that goods inflation is kind of back to where it was, and so is non-housing services, and that's most of the inflation bucket. But the third one is not there. Any combination of those things will do, but I think it really looks like the third over time is going back down to where we would like it to be, which is at a level which won't be 2%. It'll be a little higher than 2%, but that will make the aggregate 2%, right in the range of 2%.
So you're going to be embarking on a review of the framework. And inflation, the behavior of inflation since the framework change in 2020, do you think that will inform, or how well will that inform the discussions when you do start the process of going through that 5-year review again?
So we're starting our second 5-year review late this year. So we haven't started yet. We're just now in the process of kind of laying out all the questions we're going to ask and assigning the memos and doing that kind of thing. We're not really ready to roll that out yet. But of course, we're going to be asking how should we change our framework, which is embodied in the Statement on Longer Run Goals and Monetary Policy. How should we adapt that to what we now understand to be the way the economy works? What have we learned from the last 5 years? And that's what we'll be doing. So we'll be asking all of those questions and giving our answer.
5 years has flown by. I can't believe we're already up on another review of the framework.
Can't believe it.
It feels like yesterday.
I know.
So let me ask you, because you talked a few times about the data that you're going to receive before the November meeting, and one of those data points, most notable being an employment report that comes out during blackout. Now, some time ago, the blackout period around Fed meetings was extended, and I can tell you that as a longtime Fed watcher, I loved it when the blackout period was extended because it was almost like a sleep while the baby sleeps, so I could relax longer leading up to the meeting, because we could all sort of take a break. And I also used to have a saying that and this was my personal saying, the Fed does not react well to late breaking news. And it was my way of saying, once you went into blackout, that was it. The data in hand determined that meeting. But it feels like more so over the last year or two, data, and maybe it's the volatility around the data. Data is being considered during the blackout period. Maybe it always was, it just wasn't that volatile. Even policymakers have talked about, and yourself, data that was released during blackout leading up to the meeting. So what does that mean for an employment report that's released during blackout just ahead of the November meeting?
I mean, it depends on the broader situation, but if it's a really important employment report, you should assume we haven't made a decision until we see it. And we're absolutely going to take into account data, important data that comes in during the blackout period. It gets harder when it's like this, the morning of the second day of the meeting. It's harder to do that. Yeah. But, because, everything, it's a big machine. But if it comes out during the blackout period, you should just, going into that, you should just assume that what happens there could really matter for the decision. If that makes sense, there might be a situation where that wouldn't make sense. But I think in the world we're in right now, then, we're going to be looking carefully at the data, even though it's in blackout. Absolutely.
And if this is right, then even during the deliberations, during the FOMC meeting, policymakers do have the ability to change their thinking or their forecasts or their views during that meeting.
Yes, I mean, we do a lot of work, during blackout. We spend a lot of time. I talk to every participant on the Thursday and Friday before the meeting in detail about the economy and what they're hearing. And so there's a lot of discussion that goes on. And ideally, what we discuss in the meeting is kind of a synthesis of all of the views and information that we're all sharing with each other. So, but you should just assume, though, that decisions don't get made until the meeting. They're not going to be made. I mean, sometimes there isn't really a decision to make, right? It's pretty obvious what we're going to do. Other times, when there is a serious decision to make, you should just assume that it gets made with as much information as possible. If you make the decision before you get all the information, you're throwing away, some information there. You wouldn't do that.
Yeah. So when you began hiking the federal funds rate in 2022, the focus has been on the policy lags, sort of long and variable, but who knows how long or how variable. And so, it seemed like the lags were longer than we thought they would be on the way up. Does that mean that the lags may be longer on the way down? And how do you gauge whether those lags are changing?
This is a very hard part of it. You can't really know. Even now, we can't really know why what's happening is happening. People will be debating in 25 years whether what's happening now with the cooling labor market is due to policy lags or due to something else. So we can't know. What we can know is that what we believe is that policy works with long and variable lags, and we have to take that into account in our thinking, and we do. It's challenging. On the other hand, just take the current situation. What you see is solid growth in the economy. And what you see is a solid labor market. So in a way, the measures we're taking now are really due to the fact that our stance is due to be recalibrated, but at a time when the economy is in solid condition. That's what we're doing. We're recalibrating policy to maintain the strength in the economy, not because of weakness in the economy.
The transcripts are released every 5 years. And so I believe it's January of 2025 that we'll first get a look at the 2019 transcripts. And 5 years ago, you may recall that you were cutting rates. So give us a peek, if you will, into what the transcripts might show around the deliberations you were having at that time as to what were you seeing in the national and the international economy that would drive you to make that rate adjustment, and what did you see that made you feel like you had done enough?
It's a very different situation than the current one, I guess I'd start by saying. But so if you remember, we had raised rates very slowly, I think a total of 9 times, to maybe 2.25% and 2.5%. And what my colleagues and I were feeling in 2019 was significant global economic weakness and also some weakness in the United States economy, and also just a lot of, this was a time of a lot of trade issues, and it was markets were really uncomfortable, and business sentiment was very concerned. So we cut 3 times, and I felt like at the end of the year, I really felt like it had worked well to settle things down, and so we were still, you know, at 175 basis points or something like that. That was that situation. Current situation is one where we raised really quickly to the highest level in 20 years, policy being at about 5.3%, 5.25 to 5.5, to help with inflation in a world where we had the highest inflation in a long time. And then I think if you take a snapshot of our policy stance, which we put in place in July of 23, and look at, I did this in my remarks, unemployment was 3.5%, you know, really tight, and inflation was 4.2 or 3%. So now look where we are. We're at 4.2% unemployment and 2.5%-ish in inflation. So the stance that we put in place 14 months ago is not the stance that we need now. It's time to recalibrate, and I think we held on for a long time, and I think we did the right thing. I mean, history will tell, but I think we wanted to get confident about inflation, so we wouldn't be in a situation where inflation could just come right back. And so we held on long enough that I think we're more confident so this is quite a different situation than 19, but that's how I remember 19.
Do you think that the 50 basis points that you delivered in September, that cut you described as a strong start, did that cut give you more confidence in the soft landing?
I would put it this way. It's a reflection of our confidence that inflation is moving sustainably down, our growing confidence that it's moving sustainably down to 2%. You know, as I mentioned, our design overall is to achieve disinflation down to 2% without the kind of painful increase in unemployment that has often come with disinflation processes. So that's been our goal all along. We've made progress toward it. We haven't completed that task. I think you'll see us using our tool, you know, in a way that shows our commitment to achieving that. In terms of, I don't want to make a judgment about its likelihood. I just want to know that want you to know that we're committed to using our tools to do everything we can to achieve that outcome.
Well, you know, economists every day were asked to put a probability on the soft landing. I try very artfully to avoid it, and I'll just put it as I have high hopes. So the unemployment rate, though, has risen, and so should folks be focused more on the delta, the change in the unemployment rate from that very low 3.4, 3.5 to now 4.2, or the fact that 4.2 is only 0.2 above where the committee believes full employment to be, if we can have any confidence of where we think full employment is. And how would parsing demand versus supply in that rise in the unemployment rate factor in?
I mean, the change that we've experienced in the unemployment rate is information, and we shouldn't reject that for what it's worth. It's information. We should know it and consider it. And is it telling us something about future movements in that direction? We can't know that, but that's the question. So, you know, we're not going to ignore that. I think also the level of, and the reason why unemployment has moved up too is also important. But the level is still a level that is, I mean, I remember when I joined the Fed in 2012, I remember unemployment going down below 6 and then down below 5, and people were really thinking, wow, we're in the 4s. This is really low. You know, 4.9% was considered to be perhaps below the natural rate. Now we're talking about 4.2. So I think you need to keep that in context. In terms of supply and demand, you know, it's really down to the level of payroll job creation has come down pretty significantly from where it was earlier this year and certainly in prior years. It's 116,000 a month for the last 3 months, and that's without the QCEW adjustment, which would tend to suggest that that'll be revised down significantly in time if the QCEW adjustment is is sending an accurate signal about what's happening now.
Those are the preliminary annual benchmark revisions.
Yes, through March.
Right.
That's right. So, I think you look at all of it, you've got a solid labor market, and, we are recalibrating our policy stance, and we'll continue to do so going forward in order to maintain that position.
And when you talk about following the totality of the data, obviously in the U.S. we enjoy really a good deal amount more of government sources than I think other countries. We have a lot of private sources for data. And so this is a shameless plug for NABE, really, because I wouldn't be president without it. But Svenja Gudel, who is the chief economist of Indeed, is a member, a valuable member. And Indeed, LinkedIn, ADP, they all put great monthly reports out on the dynamics of the labor market from millions of data points, really, that they track. How do you take into account, sort of say, JOLTS, which is an official government source for the flows in and out of the labor market, versus what some of the private sources show? How closely do your economists follow that?
Oh, really closely. Yeah. Of course, we look at JOLTS, we look at Indeed. You can pick out any of these and critique it, but I think the bigger picture is that the business of collecting data about the U.S. economy and analyzing it is really one of the great achievements of our country, frankly. We're committed to doing everything science allows us to do to understand what's going on in the economy. Understanding it perfectly is impossible, but we do everything. We do some of this at the Fed. Mostly this is not done at the Fed, but the collection of data and the information that we get are as good as it can possibly be. And basically, it's a great success story about our country and about our economy, I think, overall.
Yeah. Maybe another shameless plug is just that NABE is a very strong supporter of funding data agencies at the government level to ensure healthy, reliable, and sound data sets. Just saying. So given that you're talking to a room full of economists, I'd love to get a sense of how you all at the Fed use your economists. You have just a few at the Fed. I think of 150 or so, I'm not sure, but it's a lot. And maybe, when you're in the committee meeting itself, how do you use the economists to give you updates, to give you the data that you need to help you make decisions?
We have a lot more than 150 economists.
I knew it was a big number.
It's a big number, but
are you hiring?
It's
for the NABE scholars.
We're always hiring, always. We're an interesting organization, and we have very large number of PhD economists, but we also have policy-making responsibilities in monetary policy, in payments, and financial regulation. And so we're kind of, on the line between academics and policymaking, very important policymaking. The economists that we have, I would say this about the other professionals that we have, they're incredibly important to the work that we do. The way I experience it is I meet regularly with different groups of economists, but if I have a question about something, often about the labor market or inflation or anything, I'll get an answer, but usually I get a group of people, and these will turn out to be people who have spent 30 years or 20 years thinking about that very question, and there might be 2 or 3 different opinions or way to approach that problem in the room. So people, they feel free to disagree with each other, and they also feel free to disagree with us, with the policymakers, and we feel free to disagree with them. I mean, it's a very healthy dynamic, but these are, so many of these people. They're wonderful people. They're incredibly committed public servants. I'm deeply honored to get to work with these people, and I think I think the Fed is a great place to work for an economist. One of them said to me, one of the most senior ones said, if all we could do around here was just sit around and analyze and talk about the economy, we'd have the best jobs in the world. All the policy making is hard, but ultimately it's really fun and enjoyable to analyze and discuss the economy. We could all spend our whole lives doing that, but we have other responsibilities too.
Just a few.
You can probably relate to that.
Yeah. Well, I think even you and I have a conversation where you said, I like nerding out with the economists, and we appreciate that. Yeah. I'm glad that you do.
I speak economies.
You speak economist, yeah. It's a whole different language. In our last minutes here, you know, sandwiched between you and Alon Collette at the lunch table, lots of talk around. I hear guitars, I hear blues music, I hear comparing every band that's your favorite and albums, and I feel like that's been the conversation of this whole conference. As Alon said, we were at the Johnny Cash Museum last night. It's just, Nashville is just a phenomenal place. And so if you were to be able to stay over, what would you do this evening in Nashville?
I would certainly visit the Patsy Cline Museum and the Johnny Cash Museum. Big Patsy Cline fan. So many. I like this kind of music. I like music way too much. The other thing is there's a band that it turns out Alon's going to see tonight called the Time Jumpers, and it's basically the best studio musicians in Nashville and hence in the world, really, in the kind of music they play. And they play at a place called Third and something or other. Third and Lindsley, but it's an excellent band. Vince Gill sits in as the lead singer, but he's not always there. Anyway, that's what I would do. And I've got to come back because I've been a fan of that band for 10 or 15 years, and I've never seen them live. So,
well, in about 15 minutes, it's going to be sold out. So,
I've got some tickets.
Yeah. Well, yeah.
Sold
already
out.
Is sold out. Oh, gosh. Okay. Should have known. All right. Well, next time then. And for now, thank you so much for giving us your time today, Chair Powell. We really appreciate it.
Thank you. Thanks, Ellen.
And that was Federal Reserve Chairman Jay Powell being interviewed by Morgan Stanley's Ellen Zentner at the speaking at the NABE conference. That's National Association for Business Economics. They're making plenty of jokes and references to that, along with their taste in music. But we're sitting here next to Steve Leisman, who's got the key headlines, Steve, as we heard from him both in those prepared remarks and then as they moved throughout
clearly, Powell has never heard your band.
Right.
I mean, this was a major oversight.
Well, you know, he does have good taste in music, and I don't know the Time Jumpers, but I am going to look them up. I do know that Nashville is the home of the greatest songwriters in the country right now, where some of the great stuff is being produced. There's a lot of musical GDP coming out of Nashville. I will say that I think Powell's most important comment here is Fed projections, the SEP, the Summary of Economic Projections, show that if the economy performs as expected, that would mean two more 25 basis point cuts for a total of 50. So he's giving us his base case, and his base case is relying upon the SEP. There's a little problem there, which is the market sees 75 coming, so they have to come to terms a little bit. I'm not too concerned about 25 being off, or the data I think will show that. He says, look, we're going to watch the data. We've got a couple more employment reports coming out. A couple quick headlines, Tyler. He says,
I don't think I've ever heard a Fed chief speak as clearly as you just quoted him, and he said, we're looking for two more cuts, total of 50 basis points.
And that's why the market's down. I mean, the headline is so far is Dow falls 200 points as Powell signals he won't be as aggressive cutting rates.
I think that's right. And I do see, by the way, the probabilities of the 25. It's interesting. The probability of a 25 is 65% right now, more or less where it's been all day. But the market still has this basically 100% probability just about by the January meeting that there'll be 125 lower, about 100% probability there'll be 100 lower by the end of by the December meeting. So there's some differential out there with what the market expects.
Absolutely.
I think the other thing the market might be digesting right now is this notion that maybe, just maybe, not clear though, I would say, that Powell is laying out a 25 basis point increment in terms of how fast he's going to go. There was one other comment I liked where he said, we're looking at this process that will play out over some time, not something we need to go fast on. Not go fast is 25. It'll be data dependent. And of course, there was one other thing worth talking about. This is maybe more for the innards, the wonking of Kelly's show. We're watching the situation with productivity. It's an important potential output. It's possible with all the revisions that there's an upward shift in productivity that would be over time important for Fed policy.
And again, we don't have a major reaction to the downside. This is a market that, yes, it's tilted lower, but there's some Middle East headlines as well. And it is not a massive reaction to the idea that the economy can withstand that nature of cuts.
Right. So I look at, Kelly, for what it's worth. I'm not saying this is the right way to look at it. If there are big differences between the market and the Fed.
Which there are
right,
when we look out.
When we look out, but right now I'm looking at the near term. We can talk about looking out, which is important. But right now, 75 and 100, we can come to terms with that in a single jobs report.
It's the 2-year
we can do that.
time frame.
Okay, so let's talk about that.
And just so
you give me the 2-year quote, and I'll give you the
380. I think it was.
Okay,
and
so
we're at 512.
Over time, the market is saying one way to think about it that the overnight rate for the 2-year will average out to 380 over 2 years. So 1 year from now, the market already has the Fed funds rate at 3%.
Wow.
So there's a difference.
A year from now, they have us cutting by 2.
Let me double check that. I want to make sure I'm absolutely right. The Fed funds contract for September 2025 is currently trading at 3.025. Wow. So that means that there's some coming to terms that's going to happen over time. So what would you say if the 1 year, I don't know what the differential there is, 380 over a 2-year average? It's not crazy, but there's still some, like for example, look at the 1 year is 390 right now.
But that's why it's so interesting that it's not the long term. The shortest term, the 2 year, not shortest, but 2 year is higher now than it was before they cut by 50. That's
Right.
an extraordinary. That difference has to be.
I think it's important, but I also think, look, you can put up a chart, and I'm saying this with a wink and a nod because I think I'll do this in the back as I say this. Put up a chart of since the Fed meeting, and that shows a drift higher in yields. But put up a chart in the month or two before the Fed meeting, and we have come a long way down. There is a lot of additional stimulus. And of course, look at the yields on the Treasury, very important. But then look also at the rates that businesses are paying. Sure. Look at what deals are being done, because the market has an ability, for example, if yields come down, they could take it back and spread. That hasn't happened. So business lending or business borrowing, and we'll see if that goes over to the consumer as well. It gets down to the consumer. So there's a 10-year. You can see that over, what is that, since September? That's the drift higher. Now go back, guys, a little bit further.
That's since the Fed meeting, yeah.
Right, that's since the Fed meeting. And now show me, I don't know, 3 or 4 months of what's happened here. And you'll see.
And the 2-year yield, for what it's worth, was at 5% in late April.
Late April, there you go. So there's, okay, so that's the 2 different ways to look at it. Some guys make their living on the far right of the chart, and a lot of people make their investment nest eggs over the long term of the chart.
Fair enough. On that note, let's bring in a couple more voices to talk this over. Bob Dahl is CEO and CIO of Crossmark Global Investments, and Andrew Hollenhorst is Chief U.S. Economist at Citi. Great to have you both here. Bob, before I mention, I just want to mention some of these headlines on the newswires. Lebanese troops have pulled back north of the border. We are all aware that the situation in the Mideast may get more intense and may also be putting pressure on the market. So with that in mind, how significant are these remarks from Powell, and which way do you think this sort of gap in the bond markets and Fed funds is going to go?
Yeah, I think you're right to bring up those headlines. They're going to come and go, and it's going to create some volatility in both directions in the market. But in terms of Powell's comments, hard to disagree with anything he said. I guess one of my concerns is we're going to get to 2% inflation, quote unquote. I don't see how we get to 2. We're 2.7 trailing 12 for PCE, their favorite. 2.7 down to 2 is Herculean. And I don't see how we get there without a recession. The other point I would make is I'm really glad he brought up the revisions. Revisions, that's the past, so normally we don't care about those things, but those revisions were so significant, it's hard to ignore them. And I think anybody that's been on the cautious side of the economy has to be pushing their numbers up as a result of the extra income, the extra cash, et cetera, et cetera.
So, Andrew, why don't you jump in and react to what Bob said there? I mean, in other words, he's skeptical that the Fed is going to get to 2%.
Yeah, I think what we heard from Powell is that there's a lot of belief now amongst Fed officials that we have core PCE running at 2% on a 3-month annualized basis. Now, I agree with Bob. There are some real long-term issues here. We have a structural shortage of housing. Housing can reemerge as an upside risk to inflation. But I guess agreeing with Bob that if the labor market is weakening, then you're not going to have that resurgent demand for housing, even as interest rates come down. If the labor market is weakening, you're not going to have as much upward pressure on wages. So cyclically, I at least see this story where they do get back to a lower rate of inflation. I think they're feeling enthusiastic about that. But to Bob's point, I mean, I'm not sure that that's happening in a world where we have no concerns about downside risk. The point that I would disagree with Chair Powell is that we don't see anything that makes us concerned about recession. We've triggered the SOM rule. We have a movement up in the unemployment rate that we typically only see during a recession. So I think we should at least be concerned about it. That not everyone has that as their base case, but it's at least a concern here.
Andrew, is this, Steve, just real quickly before we move on. Andrew, is that, though, a reflection of more labor supply because of immigration or anything? I mean, are there dynamics that, again, as Sam herself has said, not, rules are made to be broken? Is that an important dynamic, or are there reasons to dismiss it? Yeah.
I think Powell was kind of trying to correct the record on this, or kind of mark to market where things are now. That was an argument 6 months ago, maybe 3 months ago. What we've seen over the last 3 months, and Chair Powell said this, is the pace of payroll job growth has slowed. It's slowed to something that we usually only see at the beginning of a recession. So this really is weak labor demand that's driving the unemployment rate higher now.
Andrew, I don't know what you want from the Fed chair. He cut rates by 50 basis points, projected further rate cuts. So whatever he's saying about the possibility of recession, he's certainly situating himself to get more in a better place to respond to a recession. Bob, I want to ask you, Kelly, to her credit, said there's a lot of headlines out there. But let's say the market was simply reacting to Powell, who I personally read as saying, guys, get used to a 25. How much of a disappointment would that be for the market that you can see when you look at the probabilities has at least another 50 built in? Is the stock market reliant upon more aggressive rate cuts, or can it live with a more modest 25 basis point approach from the Fed?
It will learn to live with a 25, but I think there's some adjustment, as you're insinuating with your question, if in fact that's what the pace is going to be. Look, you went through, where the market's expecting rates a year from now, and 25s are just not going to get us there.
Right.
I agree with your skepticism. I don't see more than 25 a meeting. Therefore, I don't think we get as low as the market thinks, unless the economy is a lot worse. As we just talked about, the economy could be weaker. The sort of the economy's balanced and everything's, quote, okay, insinuated. That's, I think, reaching a bit. The employment situation is clearly weakening, and we just don't know how fast. We'll find out over the next couple months.
All right, gentlemen, thank you very much. Steve Leisman, good to see you as always. Bob Dahl, Andrew Hollenhorst, thank you as well. Another key story we're following this hour, a divisive bill aiming to regulate AI in California, getting vetoed by the state's Governor Gavin Newsom. Kate Rooney has more on the failed law, which could have served as a blueprint for national regulation. Kate.
Hey, Tyler. So this was a big deal in Silicon Valley. It was the AI bill to watch, and while it was going on at the state level, it would have been a de facto national law because the bulk of tech companies, AI companies, are based here in the state. It would have also applied to any AI companies even operating here. On top of that, SB 1047, that's the name of the bill. It was really a potential blueprint for Congress to draft any sort of legislation. It was designed to hold companies liable for any harm caused by AI models. It would also require what some describe as a kill switch if these models suddenly went rogue and we had some sort of doomsday scenario. Newsom said on Sunday in that veto, this law would have only applied to the largest models, so anything that would have cost over $100 million to build. He described it as a, quote, false sense of security, pointing out that smaller models could actually be just as influential and designed for sort of more niche targeted use cases, like in government, for example. The bill has caused a schism here in the Valley. You got OpenAI, Meta, Google, all opposing that law, arguing that it was legally vague and that it would have potentially hindered innovation. The research community, meanwhile, was overwhelmingly for it. You had folks like Jeffrey Hinton, the man who is often credited with building modern generative AI. He was a vocal backer, and then OpenAI's rival, Anthropic, after some amendments did eventually come around to it. Even Elon Musk backed the bill on X, said on balance it was the right vote. Newsom saying that he's not abandoning regulation. He's now convening a board of experts to help draft some other options. But for now, the industry
will continue to self-police, guys. Back to you.
That was sort of going to be my next question. So what's next? Does this drive a stake through this vampire, or will there be other efforts to create a new regulatory regime, or could the governor's veto be overridden?
Well, so in the veto, it was a long sort of next step layout by Newsom, saying essentially we've got this board, we're going to keep working on it, and he's saying this industry really does need to be regulated. But I would point out the speed at which these companies are growing, adding to some of the urgency to start regulating these companies. If you look at the growth, even the numbers that OpenAI is putting out there, they're in the midst of closing this funding round. Their models are moving quickly, the companies are moving quickly, they're raising boatloads of money at this point. So the urgency from the industry is also that by the time you figure out one of these new laws, you could have an entirely new model, you could have an entirely new set of LLMs. So I would say the speed at which this industry is moving really adds to some of the urgency. But I would say California is taking this quite seriously. And as I said, we talk about national and federal regulation. California is really ground zero of some of this innovation and really is seen as an important area of jurisdiction at this point. So Newsom's a key player here on top of needing some action to come out of Congress.
All right.
Kate, thank you.
Appreciate it very much. Still to come, some of today's key movers in 3 Stock Lunch. Oh yes, we'll be right back.
At Invesco.com.
Welcome back. Let's not leave you without a 3 Stock Lunch. Today we're trading some of the big headlines, and Hightower's chief market strategist and CNBC contributor Michael Farr is here with us on how to position. Michael, welcome. We're going to start with some semis, which are taking a hit after China has reportedly urged local companies to stay away from NVIDIA's chips. NVIDIA shares are now down about 1%. They were down 3% pre-market. Not a big reaction, Michael, but what would you do with those NVIDIA shares here?
Yeah, we don't care about the really what China's doing right now, and I think that the report by Kate was probably as important as anything on the regulation of the AI. NVIDIA is a great company, and for now they're growing earnings at 40% per year, and they're 40 times earnings. You get a chance to buy NVIDIA on pullbacks because the market is doing the same stupid thing with NVIDIA that the market does with the Fed. They want it to be bigger than it is. They want these great earnings reports to even be better than they are. And when they come in only great and not greater and greater, the market, that stock trades off. So every time there's been an earnings on NVIDIA, you've had an opportunity to buy it at about down 15%. I would wait, but I think it's one you probably want to own for a while. I've got it as a buy. Same thing with the Fed. When they actually do what they say they're going to do, markets get disappointed. I wish markets would listen better.
All right, let's move on to Carnival, Michael, down nearly 3% despite a beat. Shares are under pressure thanks to weak Q4 guidance. What are you doing with Carnival, if anything?
You know, their numbers were okay here in the earnings, but this is a really volatile stock. And here's the thing that really bothers me about this. This is a $23 billion in market cap stock with $28 billion in debt at Carnival, okay? They've got good EBITDA. They're trading at, single digits in terms of multiples, but it's very, very volatile. It's a ton of debt. They have very small room for error. I think if you're going to own something, I like Disney better. They're going to add 4 more cruise ships this year. It's much safer, much better balance sheet. Not that kind of debt. I'm out. I'd sell it on this strength.
And that's been a tough sort of weight to get out from under in Carnival's case. I hear your point. Speaking of which, what about CVS? I mean, they're saying that major shareholder Glenview is planning with the company an activist push, and it's got the shares up 2.5%. They're down 20% this year. What would you do here?
Uncle. Say uncle and sell it. Say uncle and sell it. CVS hadn't been able to get out of its own way, and I owned it for years and years and years, and so many things about CVS are attractive. There's 70% of the country of Americans live within 3 miles of a CVS. I mean, there's a whole lot as medicine changes, as healthcare changes, to recommend it. But right now, they just can't seem to execute. They've got problems with Aetna and the PBMs. When you look at these activist shareholder things over history.
We back. Oh, shit. All right, so we had Powell. And what did we do? We broke down. We're running back and testing. Give me 2 minutes, gang. It's time to get down. Let me get myself organized here. I just got back. We got a Red Bull. Let's get it. Notice 2 things right off the gate. Right out the gate. What do you guys see here? Look at Baby Bye. Baby Baidu. Baby Baidu is holding on strong, bro. Holding on strong. Alright, Baby Bye is holding on strong. Let me get this going. Again, give me 1 minute. Sorry that the charts weren't fully good. Look at that. Look. Didn't we put that there this morning? Bang. Come on, y'all. Stop playing with me, bro. Stop playing with me. Alright? We're still just hanging out. We haven't really picked a direction. We're kind of just chilling. And I think we do just chill. I don't know exactly what Powell said. I was listening and then I wasn't because I was driving. But let's see here. We still have Stellantis. Okay, so listen, it's exactly 3 o'clock. It's Power Hour. Let's get it. All right. Sub up, like it up. All right, guys, girls, ladies, gents. If you have questions, throw them in the chat. Follow me at Ivy League Trades. Baby Baidu is holding, but it looks like it might start to fail here. Still paying attention to those names. GameStop, we talked about this morning. If you get above 2250, look for a push to 23, and if you can get over 23, watch for this little break and hold here. I don't like the retracement there, but again, it's green while the markets are somewhat red, so I can live with that. Let's see. All right, let me get my stuff situated real quick. Let me get into some something I can move around in. Let me get comfortable. Let me just empty my pockets. You know what I mean? You know, when you come in the door, you want to take your watch off, just unload, right? You know, you can keep the hat on, but you want to, you know what I mean? Maybe throw some sweatpants on or something. So, yeah, just give me 1 minute, you guys. But I'm back. We back. Let's get it. So that's a nice wick pullback. That's another test, mind you. That's another test of that Fed high. All right. So what do we do now? Now we're running back up on the S&Ps. Are we going to test Friday's close again and hold? Have we, like, you know, we hit it this morning. We pulled all the way back, but we could not break 568. So what do we do now? What are we doing now? I want you guys to let me know in the chat. Like, do you understand what the words that are coming out of my mouth? Like, do you know what I'm saying? Like, this is movement. This is price. You know, we're searching for, the price is searching for something. It's trying to find a home, right? It gets bought up down here, but it got sold off up there. This has been tested, you know, a few different times here. So, it's just like, where are we going next? We went back. We hit here. This morning, we already tested Friday's close. You even went up and tested damn near Thursday's close. You went up to Thursday's close. So now we have Brian Belsky on. I'm going to play him, and I'm just going to get back on here and do what it does and figure out what we're going to do going into tomorrow. What's NVIDIA doing? That was the trade of the day, man. Good job if you guys caught that. Anybody that's still in. Now, look, 120. If the market starts to try to, you know, pull itself up higher, let's go ahead and look for, I mean, you know, this is actually, $123. We're still holding this level, and it has not broken yet. All right, we're still holding here. Technically, it's still support. We broke it with a bunch of volume here. Come on, come on, let's go, let's go, let's go. So we have not tested 122. We have not tested 122. You guys see that? Like, we have not, we broke 122 up here. We kind of hit it Friday's close. Never mind. Like, that Friday wick, we hit it. But let's see here if this is going to try to hold. You broke below it. You went back up. Small rejection. Held the trade line. Broke through VWAP. Now you have VWAP in the trade line here. Look at the volume. Okay. See that decrease in volume? Uh-oh. Decrease in volume on the way up. What might happen here? You know what I'm saying? What might happen here? If you get something like this, where this starts to pick up and down, it's not a good look. But I don't know if you're going to get that. I don't know if you're going to get that. You could. You could. You know, you do got some pretty serious selling pressure in there. So I think that does break. Look, VWAP did not hold. Trade line doesn't look like it's trying to hold. I mean, we'll find out, though. We're going to find out here. Hold on. We're going to find out. I'll be right back. Give me 1 second. All right, just like that. Let me turn this off. Let me try to reconnect my AirPods.
Plus, we came out with 6,100 because that's what our dividend discount model said in terms of where risk-free rates are, Scott. But I think the momentum trade is starting to unwind, quite frankly, and we're going to start to see more strength from other areas, and we're actually seeing that. What an awesome month of September in this quarter with respect to a broadening out from the sector perspective. Dan talked about REITs and utilities. If you remember early in the year on the halftime show, my pick to click in terms of a contrarian idea for all of 2024 was REITs. Didn't really work out for a while, but now it is.
16% in the quarter for real estate. Utilities up 18. Industrials almost 11. Financials almost 10.
But before anybody starts at home goes, well, of course, utilities and REITs are doing well. Interest rates are coming down. Before we do that, take a look at the chart of McDonald's and Home Depot, let's say. Two stocks, two companies that not that long ago, everyone was citing as a reason why the economy was rolling over. Both are, McDonald's is definitely back at a new high. Home Depot's pretty close. Look at the hotel stocks. Hilton, Marriott, Hyatt, all basically at highs. There's any number of stocks that you can look at that are doing extremely well that have nothing to do with whether the Fed cuts by 25 or 50 basis points.
But don't they have something to do with whether interest rates fall faster or slower? Because, I mean, if the market needs to adjust its own expectations as to where yields are going to be, doesn't that matter?
Yeah, it matters in the short term, but I don't think.
Well, we're talking about the short term. Like, what's the short term between now and the end of the year?
Well, you're pricing in 50% chance of another 50 basis point hike at the next meeting. If for some reason the Fed goes 25, there might be a little short-term adjustment here as futures markets adjust.
What do you mean, if for some reason? I mean, let's assume that they're going to go 25 at the next meeting.
Yeah, the floor is 25.
Because the Fed chair, without telling you that they're going to do that, seems to be now the base case.
I think
it's not like, well, in case they go 50. It's like in case they go 25, it sounds like they're going to go 25.
We agree. The base case should be an expectation of 25 at each of the next two meetings. That's right. The risk, so to speak, is that they do 50 at the next meeting. If something on Friday, for instance, if the jobs number prints 110,000 or something, on that point, I would draw your attention just to private payrolls. Private payrolls have been sub 100,000 in 2 of the last 3 months.
Now you know what's going to happen. If they go 50 at the next meeting, everybody's going to be like, what's going on?
What do they know that we don't know? But I think what Dan
They don't know anything we don't know.
Rightfully so.
Yeah, I think so, too.
He just said the labor market's strong. The economy's in really solid shape. Yes, the labor market's cooled. 25 seems to be right. These are my words, obviously not his. But that's the case that he's made.
And by the way, oil prices are now down, which means gasoline prices are down, which is a boost to the consumer.
Right. So that's why, I mean, the more consistent he is in his language, by the way, which he has been, number one, in a path of 25, 25, 25 with your view in terms of another 100 over the next year. And then you're talking about specific stocks. So it's really interesting. Everyone was worried about the consumer. But each one of those names that you talked about has a very specific theme and why they worked on the consumer. The consumer in the United States is really smart. And they've been very smart with their money. And by the way, when interest rates go down, they have less pressure on their debt. So they're going to have more money to spend.
Yeah, but I mean, are you making the case that the consumer is stronger than people think?
Yes, I am, because we've done sectors through years and years and years. When GDP actually slows, the consumer discretionary sector, Scott, outperforms the S&P 500. When GDP decelerates, whether or not it's decelerating or stabilizing, it was higher a few years ago. So guess what? We have seen decelerating GDP, and that's why I think the sector in general, aside from Amazon, I think is a great tracking error sector because you can actually pick great stocks and themes in consumer discretionary.
And it's not an opinion. We just revised the GDP data that showed gross domestic income, another sort of measure of economic output. We revised it up by about $800 billion or so, which took the consumer savings rate from the low 3s to the low 5s, meaning the consumer, which I was not particularly concerned with to start with, is in even better shape. The savings rate's 200 basis points higher than it otherwise would have been. That is, all else equal, another incredibly encouraging data point for the economy and the consumer.
So then if all things are equal, then, Brian, you would urge people to buy other areas of the market today for this stretch run of the year. We didn't even talk about the election.
Yeah.
For the stretch run of the year rather than mega caps.
We would not. Okay, first of all, we would not be buying ETFs. We would maintain our positions in big cap tech. We call those the consumer staples tech. Well, not they're Microsoft, Apple, NVIDIA is consumer staples now, by the way, Netflix, Google. But then we would trade down into the Oracles, AMDs, Broadcoms, Qualcomms. We think that's the next level. And oh, by the way, you know I love financials. I think financials are under-owned by institutions. And I think that there's two predominant themes. The really big banks and the really small banks, they play an important business theme on both sides of the spectrum. And then from a scale side of things, asset managers, which includes private equity asset managers and brokers because of the scale.
You named two tech names.
Did you guys hear that? What do you guys think about what he just said right there? Financials are under-owned, this, that, and the third.
The better performance.
Do you think they climb higher is what I'm asking you.
Not so much. So what you lump those together is if they're all the same thing.
No, but I think that's why you want to trade down into the next level of tech. I think, Oracle has been our one of our main tech positions for all of 23 and all of 24. We've been adding just because of the cash there. I think Qualcomm could be that barbell to NVIDIA with respect to not only valuation but performance. So I think Qualcomm would be one that you should be adding to in terms of diversifying your portfolio. But I think you can add these names and own these names.
See, we just showed the charts of the quarter to date, and they tell two very different stories. One has Oracle, been able to capitalize on the whole AI craze, and the other one, Qualcomm's been going in the opposite direction.
Totally different. Like Oracle, we know is a big software name, but we know that Qualcomm, with the semiconductor side of things, it had some of the noise with respect to this potential Intel thing, which I think was more sideways of anything. If you take a look at a semiconductor stock with steady earnings, pays a yield, and has cash flow, that's your Qualcomm. That's why you want to buy stocks when they're down, by the way, not when they're just only going up. And we think that Qualcomm can be that barbell to NVIDIA's continued strength.
You like the financials as much as Brian does?
I mean, I do. It's important to remember when we say financials now as a sector.
I'm talking about banks. I think we're talking about banks. The JP Morgans, Goldman's, Morgan Stanley, Bank of America. Talking about those?
Yeah.
An expanding economy, lowering interest rates.
What else
the
would you be
banks are
talking
attractive,
about?
but a lot of that move has already happened. The point I was going to make is in the financial sector now, in the S&P 500, you now also include the card companies, particularly Visa and MasterCard. And the point I wanted to make, just getting back to the consumer, because again, that's where I spend a bunch of my time. If there was something really wrong with the consumer, American Express would not be doing what it's doing. Capital One would not be doing what it's doing, neither would Visa and MasterCard. But getting back to the financials, listen, this is something we talked about all year with respect to the broadening trade. If you were going to have a broadening out, financials were going to have to participate. That's happened. I think everybody immediately gets into the big bank versus small bank discussion, and to some degree, rightfully so. But when you look at those big banks, obviously there's variation. Some are more trading oriented, some are more consumer oriented. But
sorry to interrupt you guys, but guys, hit the like button, subscribe. Take a look, guys. The Qs are breaking down. Qs are breaking down. Walmart's trending higher. Again, remember, if this really starts to start, everything will go down. So we have 81, 82.
Can't compete with JP Morgan.
Why are the big banks then down over the past month?
Well, I think because first
falling rates is not good for net interest.
No, I think it's because you have Jamie Dimon coming out there kind of talking everybody down in terms of things slowing down a little bit. I know, but he does it all the time.
They've had a very good run for a long time.
They've had a really good run, and you might be seeing some rotation. But I still think those banks are in very good position, and they're going to head into the quarter, and guess what? They're going to beat the quarter, they'll raise their dividend, and oh, by the way, their reserves are not going to be as bad as everybody thinks. The stock's going to go up.
And Brian mentioned something that gets almost no attention on the network, which is the asset managers, the KKR, the Ares. There's a whole group of stocks, most of which are not in the S&P 500, so they don't get as much attention, that fundamentally have been doing super well.
Yeah.
And the charts look screamingly attractive.
What about healthcare? Cover of Barron's this weekend. It's up 5% in the quarter. They laid out a very bullish case for that space. Do we like it? Do we not?
You know,
why are you apprehensive?
You know, what's really interesting when when the market was weak in those periods in July and then parts of August, parts of September, we saw massive rotation into healthcare, and then they came right back out again. Lilly is the largest stock in the S&P 500 healthcare. I own it, obviously. I'm a little nervous about it that everybody owns it. From a value perspective, the names like Pfizer and Merck kind of look interesting to us. But I think from the discernibility of growth going forward, Scott, I think given the fact that it's the second largest sector in the S&P 500, you absolutely positively have to be aware of what's going neutral here. It's not growth, it's not value, it's very GARPy. You have to maintain position.
You worry that GLP-1 prices are only going one direction from here, and that's lower, and thus that's going to weigh on those businesses at all, or the stock prices, if nothing else?
I think so, Scott, and I think you're going to have more consolidation there too. And I think you want to buy those areas that, with big balance sheets and great pipelines, like a Gilead or something, and or Amgen's now is becoming a big dividend growth stocks, and Lilly's going to do what Lilly does. But I think you have to kind of be careful with respect to owning too much healthcare in here, especially given the fact of other areas.
But isn't it a looming positive that eventually these drugs are going to get a government reimbursement approved, in which case now you have 8, 9, 10% of the population on them? That number is going to go to 25, 30, especially when every day we hear that it solves a new malady.
Yeah, we'll see, but I think there are going to be a few winners in that, not across the entire sector. So that's why I think we're betting on the entire sector to be like that.
What about U.S. versus other areas? Now we're talking more about China than we have for like 2 years, at least in a positive way. Right? You see these stocks having the best day since.
All right, listen to what he says here, guys. This is important.
Names, for example, are doing quite well. Is now the moment, even though those stocks are up a lot since the stimulus announcement?
Well, you know, we've never been believers in the China market. It's massively underperformed for 10 years. Whether or not this is the bottom, we've had this big V-shaped recovery from the lows. I mean, obviously with the stimulus, but remember too, from a secular basis, we have to teach that population how to spend money. The majority of their growth was all through the industrial side, through buildings and roads and highways and railroads, and airports are amazing. The infrastructure there is amazing, but from a consumption side of things, Scott, there's still, wages are high, aging demographic, shadow banking system. I think this is obviously a big bounce. It's going to be really difficult to try to discern where the top of this is. I believe it's more of a short-term move than a secular move.
So you're not like buying, you own Freeport, don't you own Freeport if I remember right?
Yeah, but Freeport's not a consumer name.
No,
Freeport's an
obviously
name.
not, but I mean, you have it's not?
It's not?
But obviously you've had, materials names like Freeport, you've had industrials like Caterpillar, you've had tech names like Baba, and I could go on and on and on.
Yeah.
Casinos like Wynn. All of those kinds of stocks were up a lot on that announcement.
Yeah, Freeport's
is it a game changer of sorts for the way you need to look at those names?
I think you have to now, Freeport obviously has been so volatile the last few years, Scott. You have to now believe in the momentum there and the fundamentals there. And it's not just the China name, it is an overall global growth name. And it's the preeminent leader in copper. So you have to continue to maintain the positions there. But, if you want, obviously you've had a big move, so you have to be kind of careful at these levels.
I would just add, to some degree, I think
I want to watch and pay attention to the I want to see the No, we're kind of just still sitting here, so I need to focus on what I think you guys might want to think about is where are you going to get your money from? Do you have something that has news to separate itself from the overall markets? All right, Kava. Kava is still just hanging out. We only have about 40 minutes left. But, so, what do we have here? CVS. Give me 1 second. What I was going to say really quickly, though, was that, just like Visa last week, we really liked Visa. And this was a really nice trade for us last week. You got the news. We were really trying to get this 280, right? This pop here, but sometimes you just got to go in a little. That's the thing that can be difficult at trading. Is like, okay, I'm looking for an entry here, but you have to understand. I try to get too perfect on my entries as well. So let's see. Visa looks like it might bounce, but anyway, like that separated itself. It had some nice news. Kava. Dude, why is it going to the left? Oh my god.
New projects means new project managers. You need to hire. Indeed you do. When you sponsor a job on Indeed, it's easier for talented candidates.
Didn't we just save the 15-minute chart and the daily chart?
Visit Indeed.com/hire.
Didn't we just save them? Okay. So as of right now, we are holding the 20-day moving average. This did have some news. Whether it, I don't know personally if it's going to have an effect. Could it? Sure. Could it bring unwanted attention? Sure. Is it going to stop people from eating there? I guarantee you 80% of the people may not even know that news existed or came out today. That actually is probably where that should be. And this should be here, I think. Yeah, extend left. So that's a breakout to a new high, a failed breakout to the new high. You just ran up and tested 126, and it looks as though that 126 is also failing. So, what do we do with this? All right, read it for what it is. Technically, we're holding the 20-day moving average. You are a bit oversold. You are a bit oversold. I mean bought. I mean bought. I mean bought. I mean do it. You know, again, I'm not coming into this week assuming. I'm not going into this week assuming. I want those Amazon trades. By the way, we did put out limit orders for that Walmart trade. I had no issues with my platform either. You know, kind of funny when you're right and like when you really got something going on, they want to mess with you. It's kind of ironic. Where is it? All right. Yeah, automakers are slipping. Let's see, 122.50. It's another tail. You know what? I think if we went and sold some like 140 calls. Let me see. What is this? We'd have to pop up here though. 130. Yeah, I would look for something like a December or like, what's today? 9/30. October. Let's do a November. The thing is you're not going to get paid. You might get paid decently for the upside. What do they want for the 140s? What do they want for the 140s? There's a lot of volume here. And open interest. I had a Red Bull. I had a Red Bull. How about you? All right, 140 calls. We could probably sell. Let's look at this. Sell the 140 December calls.
White House says we believe the way to get Israel-Lebanon ceasefire.
No, that's not December. I'm sorry. Hold on, that's the wrong one. Let me get up off of that. So that was in November. 136 is 125. 125. 125. So, trying to think here. Because there's like a borderline between the amount and the amount that the volatility is really going to kick that that contract's ass, right? Out of the money, right? Anything under 30 days, it's just like boom, 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 boom. If you go under 30 days, it really packs on the punch, especially for out of the money calls or puts. I mean, it's like a snowball effect. I mean, you're just like boom, boom, and then you're like boom, 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 boom. Then you're like, damn, you know, that 5%'s 15, 15, 45, and you're like, damn. And then it's like a couple weeks went by and you're already 60, 80% in, you know, profit. Especially if you get some movement back the opposite direction. But so we could look at some calendar. We could look at some spreads here. I'm thinking, personally, this obviously wants to hold, but I also think that that was a false breakout to a new high. You know, this thing could hold. This is really the level. There's your gap down from earnings. You pulled back to it. You found support down there, and it looks like it wants to try to attempt to go higher. So I would watch Kava over the course of a week or two and start noticing if this thing cannot get back above 127, 126.50 and hold and continue higher. I really wouldn't mind, you know, maybe here's what I would do, right? I would like sell like what, so today's the third, so we have like a month. And what is 140 from where we're at right now? All right, where we're at right now, 140 is 15% away. All right. All right. That Red Bull hitting. All right, November 1st. November 1st. But you get double. You're getting double for the November 15th. You know what I mean? That's why it's weird. So if you just go out another 7 days, right, from November 8th to November 15th, these are 480, 460 to 480 for the 140s. And then November 8th is... Bro, why? Oh, there is no 140s for those? That's weird. That's weird, bro. That is really weird. Alright. Alright, bet. So what I would do is I would do the 140. I'd have to do my work on this, but I would do the 140. I'd sell the 140 call. I would also probably, I don't want to sell the puts, but I'd be damned if like, see that's 25. I would just sell the calls for a later date. And then for the short term, October 18th, we're collecting, we'll just say 460 was the bid. We're collecting 460.
Small caps historically start to outperform when the Fed actually cuts, but mid caps have been our largest overweight all year. Mid caps quietly have done really well. So with the cutting in play, we think this broadening out theme that we've been talking about all year is alive and well. And we do think it's going to last more than just a quarter or two. This might have a couple of years to it, Scott. I mean, last comment here, small caps are open large, historically cheap since 1999. That kicked off a 12-year period of small caps outperforming large caps. Not saying that's going to happen again. We're just saying there are parts of this market that are cheap, but those areas.
I'd have to go out to like the second week of October or so, and I would honestly buy like maybe even like the 130s. These are 185, so you're gonna get a credit of like 460 to 480, whatever you fill it, whatever you limit order or market order at, or whatever your platform gives you. You'll take a buck for these for the 130 because we assume that we can at least get back to these previous highs, or at least we're gonna run a test. Which, you know, again, this trade would have been done down here at this flat top resistance. This is where it's holding. There's your double top, flat top resistance right here from the earnings. Right there, flat top resistance. You break above it, it holds it. It's all support right in there. What do you do again? You're back down in there. So let's see if this thing just makes one more attempt to get back to like 127.50. Let's just see if it can try to get back up there again. I feel like it's trying to hold VWAP right now. Even if it just consolidates, that's fine. Kill the premium. Kill the time, I should say. I feel like we're so far out of the money on those, and they paid a decent price for being like 30. Let's see,
Benzinga market update ahead of the close.
A little over 30 days, guys. Like a little over a month and like a week or two. And you're gonna give me just under $5. I like it, but I'll protect myself with like a 118 or a 1018 in October 18th or October 11th, which is 2 weeks out. We'll cut it in half and look for like the 130s. They're $1.70 to 185. They have a delta of 28 cents, which I don't like. There's not much volume there. Shit. You know what? Yeah, see, that's why I don't like those. Or we probably should like those just for that fact.
I think I'm going to need new glasses. No problem. You're covered. Choose benefits without the medical. That's working with Gusto.
Meet Sologenics, a NASDAQ company, stock symbol SNGX, now advancing a phase 3 pivotal clinical trial with high.
All right, so if I didn't answer that again, I would look to be selling those calls. And for the near term, maybe like 2 weeks out, buy some 130 calls. You know, if it gives you the, like, I wouldn't do it now. You'd obviously have to do it off of that tail down there, and this 20-day, and see where you open up tomorrow. If we're still above the 20-day moving average tomorrow, I want to look for Kava to make a run back up to these previous 128 to 130 level, guys and girls. That's what I'm looking for. Alright, that's one. Alright. For the spreads and stuff, I'd have to, again, that was just off the cuff, just like, what would I do? Because, again, I think you're seeing a failed attempt to make a new high, and I feel like it may once again push to that like area it tried to break out from, and we may find some trouble. By then we'll be getting closer to the election. There should be some more volatility. So that was my thought process on that. And even if we can get to like, you know, a few dollars and go a week to 2 weeks out, just for that bounce, we'll take that profit. Now we've got 460 to 500 in premium, okay, and we're booking a buck, $2, $3 on the call itself to the upside in the near term. All right, get with it. Like, stop playing with me, bro. I mean, sure, that shit could lose money. We could sell them both ways. We out here pimping spreads. Sorry, but I haven't had a Red Bull in like a few weeks. That shit got me lit. I'm just playing. I do have a lot of energy though that I feel like I haven't had in quite some time. All right, let's go look at Amazon really quickly. Did it ever get back and test that one level? Every day we lit. Every day we lit. I swear I never thought it'd be like this. Really on my wrist. Diamonds and something colder than a bit. I used to hate that song, bro. I'd be like, man, turn that goddamn trash off. Turn that trash off. I came up from nothing. I'm pretty sure just about everybody did, bro. Except Trump. He came up from like a little bit, turned a little into a lot. All right. I mean, it's crazy, man. This is the field where, you know, nobody tells you that, you know, if you become really good and successful at this, you too might be a David Tepper to go buy a baseball team. You too might be the Steve Cohens, right? And there's others. There's others that I just can't think of right now. You know? All right. I'm just looking at some. Just want to look at the scanners really cool. So who do we have in chat right now? What's everybody watching? Is there anybody here in chat? Let me know. Crickets. Yo, we got a couple crickets in the back. Couple crickets in the back. All right, let's see here. I want to do a. I really want to make a. I'm gonna tonight, guys. I am gonna make a watch list. I don't know. You know, we could do it live. We could do it live, but I really want to go through like a lot of the sectors, like the Palo Altos, which had a nice green day today. And it's just hanging out here. This is a pretty major daily chart here, and see if we can't find some nice charts. There's got to be something out there that is just screaming, "Take me, take me." We gotta turn it up for these. You know what, bro? Where I went, you know what's crazy? Where I just went, I was like thinking to myself, I'm like, damn, where did all these people come from? All right, let me be honest. If I get a comment in here, I'll be honest. If you don't want to hear about it, cool. I'll shut the fuck up. I shut the fudge up. But I was thinking to myself, I'm like, bro, where did all these baddies come from? Like, who dropped them all off? They were not here before. Who dropped them off? All right, so I know I'm just talking because I know you're probably not being able to pay attention with my monitor, but I'm trying to go across. I'm looking at the scanner, talking to you guys, just talking shit. Come on, man. Did anybody see Costco's earnings? I didn't even get to see their earnings report. What was it? How did they do? So, yeah, it was last Wednesday. They pulled back off of earnings. Let's go look. See if they still have it. Baidu's breaking down. I got that feeling after that like third, fourth test there. It's like, bro, like it's cool to hold something, but if you hold it too long, you hold the bag too long, it's gonna bite you in the ass. All right, so the QQQ looks like we might be, and I might try to put on a hedge here, guys, but I'll be damned if this ain't could be a nice rejection right here. Look at this. Look at this. Fuck. I kind of want to do it, you guys. We broke it. We're retesting it now. Dudes, I don't know what is going on with my mouse. Listen, I'm going to let you guys know if I go ahead and take a short here. I want to watch it right where it's at now. Like, I want to see what happens here because I think this may... I don't know. See, this is why it's good to trade with some traders because I don't really know what Powell said and didn't say. I have to go back and listen to it and see where the market started moving. off of what he said. But I will say, man, if we cannot get back above 486, I kind of like the short. I don't kind of like it. I do like it. I like it. Like, you're just consolidate, and now you're trying to put in a double bottom. It's like, bro, if you don't go higher from here, the market's going to pull back. It could sit here for like a week to 2 weeks, even though it has been a little bit of time, right? It's been a little bit of time. But look at the NASDAQ. NASDAQ's putting in attempting to possibly put in a lower high on this W pattern. I'll refer you to COVID if you haven't seen this map. Go back to 2020 and you'll see exactly this pattern right here and what happened. So guys, as long as we hold this, you can't be bearish. But when you break down and it looks like you want to retest this area at 486.20, I guess it would be. It's like, that's what I think's gonna come. I don't know. It's just what I think. This is it. I think you hit this here, 485.80, 486. If you can't above it, if you can't get above it, I think we see the Qs back down here at 480, 475. I'm calling it now.
Semiconductor ETF is on track for gains this month, but down in the third quarter. We're going to reveal one of the key laggards and tell you why after this break. Scott, I too am honored. Semiconductor ETF is on track for gains this month, but down in the third quarter. We're going to reveal one of the key laggards and tell you why after this break.
There's that pre-market high again. Yo, it's going to break it. There it is. It broke it. All right, bet. All right, there we go. That's it. Let's get it. It's on. It's on and popping. I had a seat sensor that went out on my car. It was like $14,000. I said, well, Judge, I don't have that much money to go get my seat collector. I've had 8 claims. I've got a big ick. A dig bick. What does this say? I've got a dig bick. You read that wrong too. You that read wrong. Wait. I've got a big. You that read wrong. Huh? Oh, you that read wrong? You that read wrong. You read that wrong. That's what I guess you're supposed to say when you read it. You that read wrong. You that read wrong. You that read wrong. Alright, guys. Hopefully we can have a really good week. And like I said, guys, this week I want you guys to pay close attention to everything I say. Alright? Like, if I come up with some setups, I'm going to bring them forth. I just want you to hear some of those ideas. Or like if I go about saying something, because I want you guys to be able to, have the responsibility and the understanding of, you take something because you see the same thing that I see. If the risk to reward makes sense, those type of things. But I feel like there's some good setups that are setting up here. Bitcoin still pulling back. Remember what we said. Keep an eye on that dollar. Dollar make you holler. I really think the dollar might start popping here. You know what? What is it? What's the dollar ETF? Because I actually, is it UVXY? Because I actually might go long the dollar right now. I may take that into the close. It's 347. Fuck, this is that stuff though. This is where I don't like to just assume something. But again, guys, I can't argue this. I cannot argue this chart. I cannot. This is a beaut of a chart here. Hold on. Let's see, daily chart. We will build an economy. People are so fucking stupid. Even Powell said, he said, man, if all I do was sit around and talk to economists all day, you think he said, we'd have the best damn economy in the world. None of that shit matters. It's up to you to get up off your butt and innovate. You guys have to start the businesses. You guys have to do things. You know, so when you go to a small business, support them. Okay? I just tipped one a little bit ago on takeout.
Or less than 50.
Those are the things that, you know. So anyway, all right, back to the point. The dollar. Dollar make you holler. I think I'm going to try to go long the dollar here. I don't like to just gamble like that. But I don't. You're not gambling on the direction because it's more than likely going there. And it's going to test this 50. This is a beautiful spot at 102. It's just the timing. You got to get the timing correct. Doesn't this look a lot like the banks or JP Morgan? See this tight consolidation that's pulling to the downside? And Boeing,
44 operators may be using Boeing 737 airplanes that have rudder control parts that may pose safety risks.
oh my God.
That's coming from Reuters citing a letter.
The rudder of all things. Oh my God. It's just Boeing cannot catch a break, can they? Boeing cannot catch a break. We were trading this for a little while. It's actually a really nice trade of ours too. This breakout of that wedge. Obviously is a false breakout because this thing ain't going higher. This thing's actually might be behind bars and not be a company no more. This thing is going to go be hanging out with Diddy. Unfortunately, I don't want it to be that way, but damn. The whole airline industry is screwed. They don't make any money. And now that credit went up and people are like, there's only so many people in the world and there's only so many that you can get to sign up for points on a credit card for flying. And once they've been doing it for years, I think they've kind of just maxed themselves out. And for me, if you asked me what could help cause the recession, I would say the airlines. The airlines is where our next recession could be from, and that's where when they say it comes in places you don't see coming, I feel like the airlines could be like on the verge of shattering. It's just my opinion. I do. I think there's bad news bears coming for airlines. The companies that make the planes, like Boeing, and some of the airline companies themselves. I'm not an expert in the field. I could be totally wrong. But again, this is just an instinctive feeling. I think there is some trouble there, but the government will bail them out or they'll figure a way out to be able to do something. But I feel like if something's going to happen, I would look to this asset class. I mean, this is one of the big companies in the United States that, you know, it's just kind of like looking at like, you know, this thing has just been beaten and battered. It's kind of sad to look at it. It needs help. All right, this thing needs help here, guys. Give it some water, give it some love, give it some care. Watch this level here at 150, 150. And I do apologize again for having the mouse right next to the mic.
So I did some research and called Coventry Direct. They explain life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your
your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies.
Okay, I gotta go back. That news got me. The dollar. Is it UVXY? Is it exchange traded funds? Let's see the dollar. Dollar, 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 make you holler.
Don't trust the unfiltered internet. Angie has 30 years of experience.
I want to say thank you guys for everybody that did join, everyone that hit the like button, everyone that is subscribed, everyone that came out here to hang out and, you know, come up with some ideas together. I wish we could get some more people in the chat, you know, that way we can bounce some ideas off of one another and work together as a group to tackle these markets. And maybe one day we'll get there. All right. I feel like, you know, I've been doing this long enough that I feel like, you know, if we get a couple other people that kind of know what to do, we could have some really good, we could have like some monster days in here, man. And let's see.
Neurofibromatosis type 1 is a genetic condition.
I'm looking for not commodities, broad market, corporate, U.S. government, Forex. Okay, here we go. Come on, bro. Utilities, real estate, leverage, inverse. Who the fuck fudge is the dollar? U.S. Lord. UUP, that's right. YCS. YCS. 2.4%. EUO. Let's see here. So that's ultra short the yen. I want the dollar, which is UUP. We got that, right? We already declared that as our winner. FXY, Japanese yen. And if this stuff starts to break down, that means the dollar should go up. Technically. Alright, UUP is what I'm going to go after. Let me see the volume.
Don't wait. Call, click, or visit an Xfinity store today.
What does that say? USDN.
Pro-level performance at work and at home. Right now, save $50 on the VGA 57 battery blower. Real steel. Find yours. The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. Think like a trader? Join the club, genius. Tasty Trade.
Alright, UUP. Video C.
Here to break down the crucial moments of this trading day. Plus, Apple shares leading the S&P 500 today. Kovac, Steve Kovac will tell us more about that. And Seema Modi is back for why Carnival's lowered despite topping expectations in the third quarter. Micah, turn to you. Now we're positive.
Yeah.
Maybe the market coming around to the idea stronger economy, better than bigger cuts.
Well, that's generally the case, I think, for sure. Although I think what we did is we clicked into whatever mechanical quarter end truing up trades needed to happen by the close. So that seemed to be, we were still within hailing distance of positive territory. I think that the point is well made, though, because all Powell did is reiterate what was in the summary of economic projections a week and a half ago, which is if the economy does what we think it's going to do, we have 50 basis points more cuts this year. It was not, I don't think, intended as, hey, let's pull the market back from its current estimate of things. So for now, good news remains good news, but we're on a short leash because soft landings are always contingent on the last data points.
Steve Kovac, we've heard a lot of negativity about iPhone demand heading into today. And that was until today, because we got some positivity from a couple of notes on the street, right? And that makes a difference in the stock.
Yeah, and what a difference a week makes here, Scott, because we're getting some positive signals now for that iPhone 16 demand. JP Morgan and Morgan Stanley out with notes this morning, and they've been tracking those shipping windows for all of the iPhone 16 models. Both of these firms say demand appears to have stabilized now, especially for those Pro models. Those are the most important ones. Morgan Stanley calling it, quote, a positive development worth watching, and also saying lead times are similar to the iPhone 12 and 13 super cycles. Meantime, JP is saying.
All right, I love you guys. When we get up out of here, I'm going to keep this on until the bell rings. If you guys have questions, throw them in the chat. Please hit the like button. Please subscribe. Let's get to 500. 500. We can do it. Let's go. Come on. Let's get there. I love you guys.
Apple Intelligence launch next month and over the next several months are going to affect sales. But for today, Scott, some positive data coming out.
Steve Kovac, thank you very much. To Seema Modi on Carnival, what's happening today?
Well, Scott, this was another strong quarter. The price is anticipated to go up next year. So it comes as other parts of the travel sector have seen weaker demand: hotels, airlines, car rentals. Here's why Carnival CEO Josh Weinstein says cruising has remained popular.
And if that's true, that the consumer is slowing down in other sectors, that really bodes well for us to be able to take them into our demand profile, because we will be of value. We give.
Ouch, that hurt. All right, love you guys. Hit the like button, subscribe, follow me on Twitter at @IvyLeagueTrades. I'm not sure if we have really any earnings this week. Let's take a quick look real quick. Let's take a quick look. All right, let's take a quick look here. Whoa, what the hell just happened? What the heck just happened? All right, most anticipated. You know what? We don't even need to go through all that. We already have Twitter up and open. Man, that Red Bull can get you hyper, moving fast, ready and going, but it can also knock your ass out. That shit ready to put me down for a nap. That's what I hate about them. All right, so let's go to most anticipated earnings. Dude, no, I don't want a new message. What are you talking about, bro?
Israeli military warns residents in Beirut suburbs to evacuate due to imminent strike.
Bro, most anticipated. There's only one most anticipated. Most anticipated earning. Dude, I swear to God. Why is MetaQuest on there? Earnings Whisperer. Dale Earnhardt Jr. Okay. Oh, wow. Okay, guys. All right, so we do have some earnings coming up. Well, we had Carnival today. We have Paychecks with the X. Nike tomorrow after the close. Levi, so you're going to see some retail names. All right, we've already gotten some. You're going to get more. Love you guys. Stay cool. Hit the like button. Subscribe. If you have any questions, throw them down in the chat below. I'll see y'all tomorrow. Or we might do a live session tonight on setups. Okay? We might do a live session on setups later on tonight. If you guys want to join us, we'll do a little research. We'll just strictly go over charts. We'll stay on topic. And take questions and just see where we can find some opportunity this week. I love you guys. I'll see y'all in the morning. Like, subscribe. Again, you can donate down below. You can donate to Tampa or Florida, wherever, there's just a serious storm. So again, give back to the community. Love you guys. Have a great rest of your night. I'll see y'all on the next one. Again, watch for a stream tonight. See ya.